Check one, two. Hello, 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 hello. Check one, two, two. Check, check one, two. Check, check one, two. Check one, two. Check one, two, two. Check, check one, two, two. Check,
India has a lot of opportunities, not only because of the sheer size of the market, but because of the way digitalization got democratized, creating a very strong foundation for creative and tech innovation. The India Stack has brought solutions closer to clients and enabled Indian talents to lead global innovations. For us at WPP, all this has led to unprecedented growth and has ensured that our people sitting in this market get the solution.
Hello. Hello. Morning, everybody. This is just a tech check, but thank you for your attention. Volume, दो. Bass. Morning, ladies and gentlemen. Bass एक और, एक notch. वहां से on.
We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information, so you can make bookings that match your personal travel style. Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, TAF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity, an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services, valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services, primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory, and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. TEV study and DPR report, evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services, assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs. We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information, so you can make bookings that match your personal travel style. Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, TAF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity, an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services, valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services, primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory, and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. PEV study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs. We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information, so you can make bookings that match your personal travel style. Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, TAF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity,
an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services. Valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services. Primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory, and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. HEV study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs.
We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information. So you can.
I think if you live an interesting life, you write very interesting stories, which is also the beautiful thing about creative life overall.
Learning can never stop. There is always something new, and I learn from my patients.
And each one of us will use that choice based on the use that you have to put the technology to. the first film that made me sort of see how a human story and the layers of politics beneath. पानीपत का युद्ध पढ़कर आने वाले दरोगा लोग इन्वेस्टिगेशन कर रहे हैं तो उसमें थोड़ा विज्ञान मिश्रित होना चाहिए ऐसा मेरी अपनी सोच है.
A person may have a very enviable lifestyle, externally appear very successful and happy, but no one really knows what's happening within.
It is not going to kill the supply chain, it is to empower the supply chain. And I'm happy to announce that we are still very much in the pilot stage and beta testing is going on. We are gradually building up our presence little by little as people get more and more confident.
Because of the state of our cities, we have no option but to build smart and resilient cities.
Digital India is more for the poor, but the privileged and deprived.
Morning, ladies and gentlemen. My name is Aditya Malik, and it's an honor and a pleasure to be a host for today. The purpose of BWCFO World, the BW Business World community for finance professionals, consultants, and related firms is to keep all of you informed of business news, as well as economic, financial, and industrial insights regarding the CFO community. Through roundtables, interviews, in-depth insights, expert opinions, and the most recent news updates, BWCFO World debates the ramifications of the most recent regulations, updates, and changes in the global business ecosystem, and all of it to follow emerging trends and also keep all of you informed. With that, may I please request our team to play the community area to give us a sneak peek into BWCFO World. Please. BW Business World, led by Dr. Anurag Batra, Chairman and Editor-in-Chief of BW Business World and founder of the Exchange for Media Group, is the fastest growing business media house in the country. With a network spanning across 24 niche business communities and 8 magazines, BW Business World is proud to be entrenched in various verticals in the domestic as well as global business ecosystem. And with changing times, BW now has a massive readership in the digital space as well. BW in its portfolio has 24 niche communities that organize conferences and also forums to facilitate interactions between sectoral business leaders and also create a conducive environment for collaboration. To keep yourself updated about the developments, please subscribe to BW Business World Group magazines. I promise you, it will add to your professional quest for knowledge and insight. There are also exciting offers for all our attendees today. The latest issue shines the spotlight on women entrepreneurs and entrepreneurs who are reshaping the business landscape and industries through their innovation and also leadership. The issue also dives deep into India's stride in the rollout of 5G services and an exclusive interview with the CMD Vivek Kumar Devangan on the ambitious solar rooftop scheme announced by the Prime Minister in the month of January. For more information on this, you can contact the registration desk outside, the same where you got your bands from. And because you're also talking about the latest issue, I please request our team to play the promotional AV of the latest magazine issue featuring creativity, tech, and also innovation. Please.
India has a lot of opportunities, not only because of the sheer size of the market, but because of the way digitalization has got democratized, creating a very strong foundation for creative and tech innovation. The India Stack has brought solutions closer to clients and enabled Indian talents to lead global innovations. For us at WBP, all this has led to unprecedented growth and has ensured that our people sitting in this market can build solutions for global clients at scale. Read about our story and how we build better futures for our people, planet, clients, and communities in this issue of BW Business World.
Today's digital broadcast is being streamed live across all BW Business World platforms, including their social media channels and also on www.bwcfoworld.com. Well, as the flag of today's event, I request everybody to please join in the conversations of the day and share your learnings by using the hashtag BWBestCFO. With that, to give you a sneak peek into all that is going to happen today, I please request our team to show us today's event, AV. Also, today's event wouldn't have been possible without the partnership of our partners. I will quickly take this moment to thank them as well. Our spend management partner, SAP Concur, our knowledge partner, Resurgent India, organized by BW Business World. Our event partners, Joy Travels Private Limited, Phantom, Beanie Coffee, The Thick Shake Factory, Reality Plus, Exchange for Media, IWM Buzz, Impact, and Pitch. With that, may I please request our team to now play the partners, AV?
Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, case study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity, an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services, valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services, primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory, and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. Case study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs.
We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information, so you can make bookings that match your personal travel style.
Thank you. And, usually we have Dr. Batra present here to do the opening address to formally welcome all of you. But sir's in some other city, of course, he had a meeting and he couldn't be here. But he's been kind enough to send across an introductory and a welcome video for all of you. So can I please request the team to play the AV which has been sent by sir?
Good morning. It's my honor and privilege to be at the BW CFO World Conclave. Today we'll celebrate winners from the CFO World. I call the CFO the Chief Future Officer. I call the CFO the Chief Futuristic Officer. The CFO's job is the most important job. He or she is custodian of the future of the organization. It is not just a finance job. Today, CFOs are minimizing risks. They're making sure compliances are there, and they're making sure there is the right cash flows, there is money for acquisitions, the right strategic approach is there. A CFO is about strategy. A CFO is about making sure the present is good, but thinking ahead in the future. We at BW CFO World have put this together. Mr. Tali Rizvi, Ms. Riti Gupta, Mr. Ashish Kumar have put this together to be able to bring these CFOs together and brainstorm on what's happening in business world in India Inc. Tonight, we also celebrate the winners of the BW CFO World Awards, which have come through a jury process. Mr. Ravi, Mr. S. Ravi, who's the chairman of TFCI, former chairman of BSE, and the managing partner of Ravi Rajan and Company, was the jury chair. When you see the winners today, you will see that the future of business world is in safe hands. Congratulations to all of you, and I look forward to interacting with you today at the BW CFO World Initiative. Thank you.
Thank you. And on the note of working and hoping towards a better future, let's begin with the first panel discussion of the day on leadership in finance innovation, charting the new frontier. And to share the views on the same, please join me in welcoming on stage Mr. Praveen Dokania, CFO, Goods and Services Tax Network. Joining him is Mr. Sameer Madan, Director, Finance, Agile and Technologies. Joining them is Ms. Suparna Banerjee Bhattacharya, CFO of Schneider Electric Infrastructure. And the first discussion will be chaired by Ms. Resham Sahel, Editorial Lead of BW Disrupt. We'll also let them first set the stage, and then don't worry, I know the drill. Riti, can you ask Malik also to? You got all sorts of, I think today is all about panel discussions. There are no keynote sessions. One of the last, of course. And then we shall move ahead with the award ceremony. Also, right after the awards in the evening around 7ish, 7:30, we also have the celebratory dinner. If you wish to be a part of that, you can again contact the same registration desk and they shall help you with the pass of the same. Okay, now that the stage is set, let us once again sort of reintroduce our panelists, and then we shall move ahead with this one. To share the views on leadership in financial innovation, charting the new frontier, please join me now on welcoming on stage Mr. Praveen Dokania, CFO, Goods and Services Tax Network. Joining him is Mr. Sameer Madan, Director, Finance, Agile and Technologies. Joining them is Ms. Suparna Banerjee Bhattacharya, CFO of Schneider Electric Infrastructure. And this one will be chaired by Ms. Resham Sohail, Editorial Lead of BW Disrupt. Let's please welcome them to the stage collectively, ladies and gentlemen. आपकी जोरदार तालियों के साथ. Thank you. Also, just a quick reminder, please, for audience members, I request you to please turn your mobile phones to silent mode. Also, for all the moderators who will be walking up, a humble request. They've put this timer here. Please try and follow that, because if you don't, they will forcefully ask me to come and just stand here and do nothing. So all the best.
Thank you, Aditya. You have been so kind. Am I audible? Hello. Thank you. Thanks, Aditya. You have been very kind always, especially to me. But good to see you here in the morning today. Now we have a eminent panelist today, as Dr. Batra rightly said, that the CFO's role is not really limited to look after the financial prudence of the company, but it also goes beyond to look after strategy, more futuristic view perspective in terms of how they're yielding the best test result for any organization. As many as 94% of Indian CFOs have showed confidence in India's future economic scenario. But the reality is, because of the economic turbulence, the global macro trends, it actually is shaking up India's macro sentiment. not only at the beginning of this year, we have been seeing the financial system turbulent. We have been seeing the roadblocks one after the other in the last 2 to 3 years. In this panel, we would want to discuss how going forward we will kind of navigate through this, and how are you seeing consumers adjusting to this dynamic market? Anybody would like to start? When last year the rates were really high and people couldn't kind of keep the pace to it, how are you looking at consumers adjusting to it? Is it becoming a new normal? Or how are you navigating through it? Praveen, if you want to start.
Thank you, BW. Thank you. Good morning, everybody. Thank you, Resam. And I understand, like you said, that it's a primarily the consumer behavior kind of a thing, and you said that consumer are resisting. But there is a catch here. We have seen that number of the consumer spending with vis-a-vis the tax collection, because there are few parameter by which you can gauge what is how our economy is performing, how the consumer spending is there. So GST collection is one of the barometer, we can say that, in the parameter. So we have seen that the GST collection is growing. So that is the one indicator. The consumer behavior is more into spending. Vis-a-vis, the other parameter is that personal loan books are also increasing. So that means people spending is the vis-a-vis that people are going to take borrowing and they are spending. So it's a sign of that American economy where people just borrow and then spend. So those kind of a indication that we are getting kind of a thing. And regarding that, and second aspect is the innovation kind of a thing. When the product evaluation is happening, the new products are coming. So Indian consumer and Indian market sentiments is also going for a try and test that. Whenever we have seen that when Apple launch a new product, so there is a queue to get the new model of Apple i15, 16, or whatever new model. There is a new car is launching. So there is a huge waiting list. So that means that consumer behavior is more towards the new product. They are adopting and accepting the innovation into the product line. So those kind of a thing is a indicator that people are accepting the innovation, despite that the income restriction is there, but they are adopting the innovation.
See, I think interest rates don't have too much of a bearing on consumption. You got to realize we are a country of 1.42 billion people. Now, what is happening is business models are getting disrupted. On an average, a company used to spend at least 18 years in the Fortune 50. Sorry, it used to spend at least 40 years in a Fortune 50. Now it's come down to 18. You know, the largest market cap now is NVIDIA, and this company didn't exist in 2000. So what is happening is the business models are getting disrupted at a very, very fast pace. Competition in India is cutthroat. So if you don't have a good handle on your financials, on your cash flow, on whether the product is nearing its end of life, then you'll be kicked out. So I wouldn't agree that there is an issue broadly. In pockets, it will exist. And one of the aspects I like to share is in the last annual general meeting of Berkshire Hathaway, somebody asked a question of Warren Buffett as to India as a land of opportunities. Why don't you all have any investments in India? And do you know what the answer was? So the answer was, yes, India is the future. I will have to have an energetic management to invest in India. So I think this is a land of billion opportunities. Opportunities will come. You need to take some risks. You need to take some risks. Business models have to be very, very current. You need to kind of support, like what he said, buy now, pay later, BNPL economy. And lastly, I would say, look at your own data. It tells you what your future is. So as CFO, it's my job to convert number into a story and a story into a number. So that's what I'll say. I don't think there is a major issue in pockets. There is, but we'll be fine.
Any agreement, disagreement to this, Suparna?
Good morning, everyone, and thank you, BW. My take on this is that, of course, adding to what Prabeen and Sameer just mentioned, we are certainly in a very turbulent economy these days, and it's going to continue. It's going to be disruptive. We all need to be agile. Our products need to be in tune with the customer expectations. And we as CFOs have to cater to that kind of a management requirement and with the data in our hand. So it's very important that we are very much in tune with the business, with the customers, with the consumers, and see how the market is growing and going. So that's our role, and that's how, in the last few years where we've had multiple panel discussions talking primarily on the changing role of CFOs. Yes, CFO is not merely an accountant. Of course, the accounts, the data is the oil for us to keep the machinery running. But at the same time, it's very, very close to be hand in hand with the business in terms of growth, innovation, evolution, etc.
Well said. Now, Sameer, you mentioned about disruption in business models, business strategies. I would want you to kind of discuss how you are relooking at your strategies when it comes to financial prudence. Now, every company all across the departments, all across the industries have aspirations to go higher on their growth graph, right? And you as custodians of their financial systems, their money, their accountants, how would you balance frugality and growth? In this era of disruption, we would absolutely need strategies which is new age, which are kind of most efficient in these turbulent times. What are some of the strategies you are working with right now in order to balance growth and frugality?
Thank you. I think that Mr. Batra has said that CFOs are the chief futuristic officer and chief future officer. So as a CFO, one has to see that they have to predict, calculative prediction they need to do, that what kind of a growth path they are going and what kind of a risk is associated. So they need to balance both the thing. And here CFO has to play the role of Krishna. I am taking the quote from Mahabharata. They have to play the role of a Krishna. Your CEO and other people, they will be on the front and they will be getting the sales done and other things as Arjuna, as a Bhima and other people. But you have to control, you have to balance. Though you have to look the winning target, but you have to balance the things. You have to have the brake and accelerator, both the things together. The growth, whenever you see the growth, put the accelerator. But if you see that any turbulence, any disruption, any risk is, so you at the same time, you have to put the brake as well. So the role of CFO is in this context is very vital. He has to play a dual kind of a things and make the particularly the finance team. Finance team is generally and everywhere the finance team is handling the money. So who knows better the health of the company better than the CFO and the finance folks? They know that how much is the outstanding they are in the books and how much is the creditor in the books. So they have to balance how much is the cash flow is predicted to come. There is not necessarily that sales is happening, but the money is not coming. So again, here there is a cash flow risk. So CFO has to balance that again. See, guys, do the sales, but take the financial, that finance inflow also take into cognizance. So those kind of a very dynamic role here CFO has to play. And he has to play the dual role that I've said that like Krishna, he has to play the things.
I got that. That was a pretty broader point. Sameer, if you would like to kind of lay emphasis precisely on strategy, also from a leadership perspective, you as a CFO of the company, from your leadership lens, how you're looking at strategies that are in favor of companies' bestest results or growth?
See, there is nobody better than a finance person to, kind of know what's happening in your company in your competition, in your country, and geopolitics. So as a finance guy, when I'm devising a strategy, it's my duty not only to kind of put it into numbers, but also work with all my peers and stakeholders to make sure that's well understood by the entire sort of stakeholders within the company, outside, and within the company, to make sure that there is a proper reward structure in place. Whenever I come up with a new strategy, the only way it's going to work is if it gets implemented all across. And the reality is it will get implemented only if there is an element of a balanced scorecard in your incentive compensation. So when I have to come up with a new strategy, for example, to incentivize a new product line, I will tweak the quota compensation and credit policy. So for that, I'll have to work with HR. I'll have to work with my sales guy. If I see that my product line is coming up for its end of life, I have to come up with a new policy or a new product. Then again, I'll have to work with my sales guy to get in the information from the end customer, speak with my R&D guys, speak with my production guys. So as a finance guy, I have to ensure that I'm speaking more to folks outside of finance than within finance, trying to calibrate and make some sense out of the data, and then go back to the boardroom and draw up a strategy, and ultimately ensuring that everybody buys in. And the best example I think I just gave you is to make sure that the incentive compensation on the variable side is in line with your future plan. Unless you do that, somebody else will come and eat your lunch. The competition in India is indeed cutthroat. It is a funny economy where it's very price sensitive. There is a 1.4 billion population, yet to do business is not easy. Having said that, if you run your company as a well-oiled machine, so we are the oil in the company's manufacturing setup.
So 2 points, if I can summarize this into one, is you will need to work with your peers very closely in terms of culminating an efficient
Growing up
strategy.
and communicating.
And also secondly, you would try your best in order to bring out the best returns and rewards for each stakeholders all across the company.
Correct.
Now, you mentioned that CFO is the bestest person to know every corner of the company, be it data analytics, their behaviors inside the companies or the consumers. Now, Suparna, if you want to talk about how are you investing in technology, if we can talk about, because with these advanced technologies, CFOs can really co-pilot the financial procedures, the financial department altogether. They're doing mundane tasks. But what beyond that? How are you investing in technology to kind of bring out the best from the CFO and also its team?
Very pertinent question. We as CFOs, we actually have to play a balanced role, sometimes a dual role. And when I say that, if I say a dual role, of course, the normal finance functions, the people in the finance department have to keep on supporting the business as usual. But parallelly, the intelligence of the finance department, or the intelligence, or the strategy part of the finance function or the CFO's function, is to look at innovation and innovative technologies to support business, as well as bring in a better value addition from the finance function in parallel while business is going on as usual. We have a lot to learn in terms of what the business has to offer, where the business is like all the complete nook and corners of the business, the organization, is something which the CFO really needs to have complete visibility. So if we say that, if it's the business, suppose it's a channel-driven business, and it's a service-driven business, the channel partners, the distribution, the service wing of the organization. So all these things put together is something, which drives the business. And now coming back to the finance function, whenever we think of the future market, things, the way the consumer preferences are changing, we always need to keep that in mind while we are looking at the finance function of the organization. Innovation in terms of technology, which probably the main thing which always comes to our mind is the business analytics part, the data part, and how we can use that data to support business, how we can use marketing data to help business plan for the future, the growth, the strategy, the increase in market share. So all these things require a lot of innovative ideas from finance department. And when we talk of this innovative ideas from the finance department, it also comes to the use of technology. Things, the market is changing so fast. Any innovation, if it is slow, then obviously it becomes a failure. It's very important for us to have those innovative ideas put into place very fast, faster than the way the market changes, so that we are ahead of competition. And using different kinds of technologies available in the market is something that we need to pick and choose, customize, and deliver in time to help the business. So that's how I will say that the innovation and technology can be used in the finance function to help and grow the business.
Good to know, Suparna. Prabin, if you would like to kind of share examples, how are you investing in technology at your organization?
See,
and also your observation how AI or advanced technology is kind of helping CFOs.
See, technology is the future. I mean, like my co-panelist and other people has said, and we know that without technology, you can't move ahead. Like we are, as a consumer, as a CFO, everybody is in a day-to-day activity. We are all know that through our handset, we are doing a lot of business. We are doing the share trading. We are doing the bank account. We are ordering the food and whatever, e-com business and everything. So all this has happened due to technology. Technology has like stopped the border transactions. I mean, it become the borderless. You can do the business pan-India sitting here. You can send, you can list your product in Amazon and send the product in US and everywhere. So it's a borderless economy, the flat economy. You can say that the world is flat kind of a thing. So all this happened with the help of technology. And any future progressive things, if you do that without the help of technology, you can't expand. If it is you are a standalone business, so you can grow in a GP ratio kind of a thing, in a AP, like 1, 2, 3. But if you want to expand in a GP kind of a things, in a progressive method, so then you have to adopt the technology and innovation, and then invest into the technology. Like nobody wants to be a Kodak kind of a things. They didn't invest in the technology, and we know that the story of Kodak. So likewise, these days everybody is talking about the AI, ML, and everything. So going forward, the futuristic innovation and the futuristic things are coming into the artificial intelligence and the machine learning kind of a thing, where our day-to-day mundane task, the process and other thing is run into that platform. Even in other places that in Europe and other places, the AI is playing a big role. In US, in different, maybe they are in a health sector, they are very prominent. Because in they, with the help of data, they can diagnose what kind of that innovation is required into the medical science, in the surgery and other things, which was earlier not possible. So those kind of innovation and the help of AI and ML, every sector is doing a growth business. And as a CFO, when you have a plenty of data, you can predict the business growth. You can plan in a better way. You can plan the cash flow, that how my cash flow is going to happen. So the profitability and other things you can predict, and the risk will be better taken.
See, my take on technology is that IT stroke technology and finance are two sides of the same coin. As the finance head of my company, I drive the IT guys to get on-demand business reporting to everybody. They should not be waiting for an email. They should be able to log on to HANA or whatever is your platform to get the report, analyze that. In fact, unless and until you have technology doing most of the legwork, you will not be able to act in a manner in which you're supposed to. Take the example of looking at your numbers with that of the competition or what you guided for that quarter. These days, all the analysts which are covering your stock are able to come out with their recommendation within 3 to 4 hours the moment you announce your results. There are softwares available, not so much in India, but if you go to US and Europe, they're able to come out with all the numbers within 3 hours. In my company, we have not only dashboards for the business results and how they're doing vis-a-vis what they were supposed to, but I created a new dashboard as to which leader is not accessing HANA. So I have to lead by example. The days where somebody else will give you a report and you will do the analysis are all gone. So as a finance leader, I take it on me to lead by example. And if you do that, your entire team and the entire company follows. I think unless and until you're reading your numbers almost on a real-time online basis, comparing it with not only the competition, but also what you're going to guide, it starts from day one of the current quarter. You can't say when the quarter will finish, I will decide what guidance I will give. The business models, as I said in my opening remark, are changing so fast. You just don't know what will happen. And the best example of how a company can use technology is Asian Paints. Do the research on the net. For 2 consecutive years, SAP gave them the best implemented award. The kind of data they turn out of the demand of the paint, which color, having a negative cash flow. And the second one I'll say is Indigo. I mean, the way they forecast their passenger load factors, the sheer population of those customers which book on their own website and their own internal, ways and means to kind of promote that than going through an aggregator, which is costly. So data is everything. Technology is everything. Use it, make sure people use it, and lead by example.
Lovely, very impressive. Now, CFOs are the people in the C-suite who are feared by all, obviously after CEOs, but be aware that they are looking and knowing every inch of your performance and how are you contributing to the quarter growth or yearly growth whatsoever. Now, in the last 2 to 3 years or 4 years, CFOs, more than CEOs, it was CFOs who were looked at, be it about maintaining top line, bottom line, be it navigating through economic fluctuations, be it about how are you generating revenues, so on and so forth. But when it comes to assessing a risk or a potential, what should I say, the potential potential growth, you are somebody who is more aware about the probable result or a risk, right? Now, do you believe when you sit with the CEO, you have the power of having a bias against a bet? When you know that this decision can lead to a good or a bad result, do you believe that you are equipped enough with the authority to change the final decision in order to get the best test results? How do you look at it?
See, very, very, pertinent thing, and everybody face this thing on our day-to-day activities. And as a CFO, it's a challenging, and CFOs are saying has to play the role of a good doctor. When you know the health of your company, when you know that what action will, have a positive impact or a negative impact. When somebody has taken a decision, like say your CEO has taken a decision, no, we have to invest say some 100 crore rupees on establishing a new plant and other things. And you saw that, and as a CFO, you are coming to know that the gestation period of the plant or a new investment is 5 years, 4 years, the cash flow is not positive. The lending cost will burn your profit line. The share prices, the market cap of the share will fall down. So maybe you can as a CFO put through your thought with some data, with some number, and with some logical conclusion, and showing the future, because CFOs can predict the things with the help of data and with their inner guts in the financial number. And that's a more valued, that giving a financial number with the base on data, you can put your words and thought before this the CEO and other stakeholder. Maybe if there is a disagreement with the CEO, there could be a other investment committee where without any disagreement, you can show the number and keep it to the highest authority to take a call on it. Because as a CFO, you have to take care of the other stakeholder. You have to take care of the company, and the main purpose of CFO is the value creation for the stakeholder. Either it's a shareholder, it's a board, or anybody. So CFO has to take the balanced view, assessing the risk and assessing the future growth.
I'm expecting something different from Sameer, but before I come to you, Suparna.
Okay. So just to add to what Praveen mentioned, it is definitely a day-to-day situation that we all face. But for me, when a person reaches a CFO position in the company, it comes with ability, it comes with efficiency, it comes with years of experience, which certainly gives something called a conviction in a CFO. There is data to support, there is market to see, there is the organization philosophy, the organization strategy, or the vision that the CFO would know very well. So striking the right balance with the own ability of the CFO and a strong conviction to have the management accept something which has come from the CFO in terms of investment in technology, in investment in innovation, etc. I will see that that's something which the CFO, beyond the numbers or beyond what IT gives you, it's the CFO's own conviction in something which the CFO needs to take forward. So this kind of stands over and above everything that IT has given you, that your systems have given you, the data or the numbers have given you. So my take on this is that every CFO has to have that ability to have that strong conviction to see in whatever he or she does. So I would put it that way.
I kind of agree that you have numbers to show, you have markets, results, and a lot of reports to show and kind of validate your reasoning to the decision. But in reality, how equipped are you to give away your bold bet? I mean, it can be biased bet, but how equipped or how powerful are you for a bold decision?
See, my take on this is, so first of all, I stayed in China for about 2 years in the late 90s. And if you know, their language is pictographic. It's not on a script. And if you see how they write the word risk, it's danger and opportunity. So for many words, I go back to the Chinese way of how they write it. And it's a danger and opportunity. So I think Suparna put it very well, that numbers and data is one thing, but your gut feel is the other. And I think there should never be a discussion where everybody agrees. When you get into a boardroom, unless and until there is somebody who has at least a skeptical view of it, I think it's not worth it. Now, obviously, you sit down, you discuss, and you agree. But I think how you implement it, I talked about it earlier as well, that whatever is our reward, which is our variable compensation, should be dependent on a common theme. That is where I think we work together as a team. We talk the same language. We help each other. Because if the sales guy is compensated on something else than what I am, then there'll be strife. So the sales guy should equally be having DSO, which is the daily sales outstanding, as one of the parameters, maybe a small percentage, and I may have a higher percentage. Similarly, I need to have a top line as a parameter. So good organizations, especially those who live in a disruptive world, at every level have common parameters, have a balanced scorecard in their annual or quarterly appraisals, which help the organization, not only kind of implement it, but implement it with a lot of speed. And lastly, I will say that the watertight compartments that I am a CFO and he's a CFO and that guy is a sales guy and that guy is a HR guy and that guy is a production guy are all gone. Good companies rotate people in completely different functions. In completely different functions. So the lady who used to head HR till very recently where I work was a finance person earlier. My outgoing CEO was a finance guy. So the more we rotate and we kind of realize what's going on in their world, as I said, understand what the other guy is facing, together we can solve it. And I have never seen an investment decision which was very difficult to take. We put down all our thought processes, our gut feels. And as and when you express skepticism on one aspect of that, it could be a higher interest portion, lower cash burn, higher cash burn, you draw up a strategy and we work together.
I'm sure. Very well put, Samir. In final 30 seconds, I would want a rapid fire, quick answer from all three of you. There was a report which came out with three priorities for a CFO. One is revenue generation, cost control, and productivity improvement. What could be one priority you would add to a CFO's role in today's disruptive time? One quick priority you would add to your role.
Manage the top line and bottom line both.
Samir?
Get a wonderful team. Everything else will happen only if you have a good team. You don't know all the answers. Get a team which tells you the truth and not all the things you want to hear.
This is sounding like coming from an HR leader.
I'm also the HR person.
So every manager is an HR. I mean, just to add to what Samir said and your comment, let's all remember every team leader is first an HR person and then the functional person, because you need to motivate the team and get going with the organizational deliverables. Now, from my side, my take as the CFO is that, and the advice to aspiring CFOs is that please be close to business. If you're sitting in your own silos on your Excel sheets and PowerPoints, you are never going to get there. So please be close to business, visit customers, do the legwork with your salespeople, and that's the only way for your growth.
Undoubtedly, they are not only chief financial officer, they are absolutely chief future officers. Thank you so much. It has been a wonderful discussion. I'm taking away a lot of insights. Thank you so much for your time. Thank you, Aditya.
Thank you. Thank you so much. A picture, please. Thank you. Thank you so much. Okay. Because you want to make sure that we stay on track, we will quickly proceed with the next one. Our next panel discussion from discussing financial innovation, it's now time to move ahead towards resilience. Our next panel is on cultivating financial resilience in dynamic markets. And to share the views on the same, please join me in welcoming on stage Mr. Gaurav Kant, CFO, Sham Spectra. Joining him is Ms. Preeti Cheda, CFO, K. Raheja Corp Investment Managers. Joining them is Mr. Sanjay Upadhyay, Director, Finance and Group CFO, Deepak Nitrite. Joining them is Mr. Sushil Kumar, CFO, and whole-time director, GE, T&D, India. And this one will be chaired by Mr. Arjun Yadav, senior correspondent, BW Business World. Let's please welcome them, ladies and gentlemen, to the stage.
Good morning, everybody. Thank you so much, Aditya. I think Resham covered all of the aspects that we were sort of supposed to discuss. But I think given the diversity that my panel has across sectors, I think they'll be able to share their personal perspective, insights from their respective sectors. But when we talk about, cultivating financial resilience in dynamic markets, first of all, I think since COVID, and I tell my editors every time that resilience is one word that the media has really overused. But given how CFOs, navigated these last 4 years, I mean, it began with COVID. Just when things were about to get fine, you had Mr. Putin invading Ukraine, then inflation shot up. Then I remember in early May 2022, in a surprise address, RBI Governor Shaktikan Das came in and sent the market, deep in red when we started the rate hike cycle. And in February 2023, there was a pause, but there was anticipation now that we'll soon be having rate cuts. But the Federal Reserve didn't move the needle there. And there is anticipation that till they move a needle, the RBI won't move the needle here as well on interest rates as well. So now CFOs, I think, are factoring in that we are here for higher, for longer. And maybe for next 2-3 quarters, we may have that situation as well. And post 4 June, we may have another element, probably some political instability. I'm not giving you any exit poll, but given how the markets are reacting, have been reacting in the last 2-4 days, that seems to be something which observers are noting. So that may be an added element post 4 June. But in my opening comments, panelists, given this context and what may be in store in the next 3 or 4 months and what you have done in the last 4 years, tell me, what are you gauging on the macroeconomic front, the environment, and how CFOs are now reworking their plans for this changed reality to continue exhibiting that resilience in these markets? Sanjay ji, if you would like to start.
I thought I'll be the last, but now you said it. Last 4 or 5 years, if you see, things are really, really dynamic is a milder word, but it's very volatile, and people are facing, and CFOs are really facing all these challenges. You have to have growth also. You have to maintain current profitability also. Unless you manage current business, growth will never come, in the sense manage your this year and then next 4 or 5 years. So it is short term and long term both. You also rightly mentioned that things are happening in such a fast pace. You are suddenly having Ukraine war, and every day somebody is watching what's happening to Fed rates. Now Fed themselves are wondering what to do. Nobody knows in this situation. So, and the CFOs are really, really, and if you are in a Forex business, and if you are in your export business, your business, then you have to really, really keep track of those things. Whether rupee will appreciate, rupee will depreciate, what will happen to you? And people, for others are there to judge you, but others don't realize the pressure and how difficult it is to take a call in such situation, sometimes I find people using the word hedge kar lo, ye kar lo, but I wonder that do they understand what it means? One has to take a call, anything, even if you don't decide to hedge, it is a call taken. It's a decision taken. If you hedge, that is also a decision taken. So it's a really, really challenging time we all are facing.
Right.
And create a resilience. You have to have that kind of update yourself and update your, how the market is, you can't say how the market is going to behave, but you have to have an, and don't be over ambitious. In the sense, take a call one step at a time, move forward again a step at a time, jump. So this is how a calculated risk is to be taken. The topic is resilience, means, see, the basic resilience anybody will have, any CFO will know how to manage his debt equity. managing his cash flows. Those are basic requirements. So beyond that, if you can think, that is the most critical role a CFO will have to play today. In the first panel, there was a question, the difference between CFO and CEO, and how do you voice your opinion? That's very critical to voice your opinion. It's very important. Unless you can bring that kind of different perspective to the whole thought. Otherwise, it's very simple. Payback ye hai, IRRs ye hai. I mean, these are all the simplest thing any chartered accountant will do. Where do you bring that difference? And the organization who respect CFOs, those organizations will certainly grow. If you do not respect your CFO's opinion, I really personally, I feel that is not the right organization.
Very rightly said, Sanjay ji. Sushil ji, your reading on what's happening on the macroeconomic front and how CFOs are now gearing up for that changed reality.
So thanks, Arjun. Thanks, BW, and good afternoon to everyone. I think my take is that last 4 years have been dynamic, especially the COVID that you mentioned. And after that, there have been a lot of disruptions which are there. And as you rightly mentioned, it's a new normal. My view is that, and it's a very famous quote, that change is the only constant. Change is the only constant, and that's going to stay. So as a result, the economy, the companies, they are more integrated with the global environment. So any decision in any place in the world, it really impacts us as an organization in a particular country or in a geography. So those kind of disruptions will continue to happen. How we basically react to those changes, how we come back and bounce back is really important. If you come back to the COVID example, most of the companies have bounced back. Some of them have actually come out stronger because they were able to adapt to the changes and they had the agility to come back in a very strong manner. So my take is that, and in the earlier panel discussion, it was mentioned that the resilience is not just about coming and basically mitigating a risk and managing a risk. It is also about not missing an opportunity, which is a very important element, because if you miss an opportunity, it means either you are losing a dominant position or leadership position in the market, or you are getting decimated in the long term. And some of the companies that we see have come out very stronger and have really adopted the AI, the new disruptions in the technology, which they sell to the customer and grow the business. So as CFO and as an organization, we need to be very vigilant what is happening. First step is to mitigate the risk, and second is to leverage that to basically create that into an opportunity.
Right. Thank you, Sushil. You've given a lot of points. We'll go, later in the discussion on each of them. Preeti, but very quickly, your opening comments on what you're gauging.
Yeah. Good afternoon, everyone. So I think all of us, I mean, there's no second thought on how global developments are affecting all of us. We kept talking about decoupling, etc. But I don't think that in this global order, there's any serious amount of decoupling, because anything happening in any part of the world, we've seen how maybe the Ukraine war, now the Israel fallout, all of that is affecting us. I think what has been, I think what's critical for us as a CFO has been how good, I would say, robust our models are to adjust to the changing norms. So I'll just give you an example, and you rightly pointed out, Arjun, at the start of the conversation, that how the interest rates have moved in the last 2 years. So I come from a sector which is real estate, which is very capital intensive. So any change to interest rate has a serious bearing on the way our business works. I remember we generally used to have almost 9-10% interest rates. And when the cycle was in our favor, it went all the way down to 6.5, which was never heard of in the real estate sector. So what we did is quickly, when the cycle started reversing, we quickly converted a lot of our variable cost debt to fixed cost debt, and were able to reduce our cost of debt by almost 200 bips, which is very substantial for our form of business. But we could do that because our capital structures enabled us to do that. Our decision making also enabled us to quickly, react to those changing developments and make the best of how the cycle changed. So I think a critical thing is to, one, keep a watch on what's happening, keep capital structures or your business flexible enough. So of course, while you have a long-term strategy, how you want your financial discipline to work, how you want your capital structures to work. But I think what is important is how soon are you able to make good the changing developments.
Right.
And that's what I think it's important for a CFO.
Thank you, Preeti ji. Gaurav, you have a long experience in the telecommunications industry, an industry probably which has the lowest return in terms of, the capital invested and very cash heavy. How do, you see this macroeconomic environment for such companies? And in fact, even for your sector as well.
Okay, thank you. Good afternoon, everyone. I think one thing that has started happening since COVID that we only talk about what happened after COVID, but for telecom industry, it's 2008, 9, always there is after 2 to 3 years, there's a turbulence happening. More operators coming, 2G scam, 2G to 3G, 3G to 4G, 4G to 5G, now 6G. So all those things are actually nothing but a capex, and as a consumer, we want prices to go down. So yeah, there are a lot of turbulences. I will not go to all and how we have come up out of it. But one thing is very sure is that what we have to start doing, that we need not to do too many different things. What we have to start thinking that do the same thing differently is where we will get a better return. We will able to get more output out of it. Like you talk about capex. So what we have recently done, that we have made a model that we can expand to n number of cities in India without doing a capex. Like it's very innovative thing that a telecom industry is saying that I don't need capex to expand. So this was we need to expand, but doing the same thing in a different manner, right? Coming to macroeconomics and how we are doing in India, though full year numbers is about to come by this month end, but we are very sure that 7.2 to 7.3 GDP is that is expected out of it, and 30-40 basis point more than that is what we are gunning for. So headlines for India is very good. We all talk about it. We keep on hearing about it, not in India, but outside India as well. HSBC PMI index, which has come up, says that manufacturing sector has doing best of last 16 years, a second best of last 16 years, which is 58.8 against 59.1 that we were doing earlier. Service sector is also doing best of its time. So all these parameters shows that there is a lot of things is going to happen in India. Spends for hiring has increased, spend for capex, as well as we see a lot of advertising. Like we are here, so there are a lot of advertising events are happening. So all those when a lot of advertising is happening, it shows the confidence that company has that there is a consumer outside, and so go and reach them, right? So all things are set. Yes, this is an election time. For those election time, spends goes down, new policies are not coming in. But what I have heard of that ministries are very clear what's going to happen after 4th June. They're already preparing plans because they have been instructed that once 5th June, they have to start presenting their 100 days plans. So in that context, I think there's a lot of actions going to happen in coming quarters, and the rate and we will see rate correction and all that will happen. But I think, as he said, that US federal government is having a hawkish tone. So nobody is wanted to very aggressive steps in this particular manner. I think Indian RBI will also take action basis the monsoons where it goes in.
Gaurav, I would like to start from you as well. I mean, you very rightly reiterated the strong fundamentals that the economy is having. But now, if you go deeper into what all of the panelists mentioned and our topic precisely, when we talk about cultivating resilience, how would you, describe some of these components when we talk about resilience in an organization, and what can we do to strengthen them? How do they actually help in mitigating risks? A bit of insights on this as well, please.
Sure. I actually, whenever I want to talk about something, I take an example. So for this resilience, I will definitely want all of you to think about your automobile or cars that you have, and you will have a shocker systems in your cars, or now advanced technology ADAS, level 1, level 2, whatever. So I think financial resilience is like that only. Road is going to be patchy. You can't imagine Delhi Mumbai expressway going to be everywhere. So you have to decide that on a low risk scenario where the road is little patchy, you need not to reduce the speed. Means your shockers are so good that you're not reducing your speed just because of little patchy road. If it's a bumpy road, you are not banging on your head on roof of the car. So you have a system enabled that you know how to deal with those situations. And we don't want, but any situations like COVID again happens where the wall in front of us, your airbags are working, right? So all those things is what I think is a financial resilience. Whenever you're thinking about it, that does think that with type of risk, probability of a risk can happen. To strengthen them, it is very easy to keep on doing stress testing. You keep on evaluating at what scenario, what type of stress can come, and just think on those scenarios, what are the controls you have enabled in your system or in organization. I personally believe internal auditors is also very relevant from a financial resilience testing point of view also, because when we work in the same organization, like I will take a lot of examples. I was very confident that my taxation GST filings are perfect. I have done everything perfect, 2A matching, this matching, that matching, everything was I was very confident. But when I asked internal auditors to do a checking, they were able to find out something unique, which team was not able to think through because of their operational work. So I believe that internal auditors also plays a very important role for this checking that what all risk a company can have in future, which you are not able to think through. This is the finance matter, but from a business side also, there is a possibility. So internal auditor has to be not any typical account internal auditor. They should know the industry that you work for, the risk involved there. So that is another point which I would like to bring, that we should also start thinking that how good our internal auditors are, because this will help us in future. Liquidity, we all know that this is the best tool to deal with any situation that will come in future.
Yeah.
And I think that's the key point, that I think that components and how we should work on that.
Thank you, Gauravji. Preeti, your thoughts on what are some of these components when we talk about financial resilience in an organization and how they can be strengthened?
Right. So I'll again go back to my sector, which is, as I said, very capex heavy. And I think one problem, especially real estate always faces, is over leveraging. And we have actually seen that multiplying the problems, especially when the tides are against you. So I think from a financial resilience perspective, I would say that as a CFO, maintaining that balance in growth versus, your capital structure, making sure you have, as he said, Gaurav said, liquidity, of course, cash flow management, liquidity is important. But I think maintaining that right asset liability match, your ALM handling is very critical, especially for a sector like us. We saw during COVID, the entire liquidity getting sucked, but we still had to run our businesses. Now, in those situations, when you are able to foresee such situations, plan your cash flows, and all of this is possible when you are able to have that financial discipline. Your business has to have that kind of headroom to maneuver. If you're going to be highly leveraged, if I would say your PNL is so stretched that any kind of disruption really causes a lot of pain, then it becomes a very tricky situation. And then when you land in those situations, then you'll end up taking wrong decisions. So I think keeping that space, foreseeing those risks, and of course, I mean, needless to say, your risk management is very important. We, as a process, make sure that every 6 months we actually look back at all the risks we have in our business. We get even external consultants to relook at the mitigation factors. Well, we keep doing that internally every quarter, but we also get an external expert to look at and see, are there any changes needed in the way we want to mitigate those risks? Because businesses are very dynamic. Every day you are thrown with a different problem. So risk management, again, I think is very critical for us as a CFO, and that's a constant process. It's not that you've done it once and then stay put. You'll have to keep revisiting that all the time and see that all the levers are in place for you to handle those kind of situations.
Thank you, Preeti. Sushil, your sector probably was one of those sectors that were the biggest beneficiaries biggest beneficiaries in terms of headlines because of what happened in the geopolitical arena. Tell us any personal experience on what really transpired given the developments that the sector had, be it in the energy sector at large or the commodity prices. Sanjay, that holds true for your sector as well, the chemical sector as well. How did your teams went back to the drawing board and rework these strategies? Any personal experience on that side that actually helped you mitigate the risks?
Yeah, thanks. So in our industry, which is the power sector, it's a very let's say the focus sector right now, not only just for India but across the globe, because there is a need for energy independence as envisaged by each and every country. They just don't want to be reliant on other country for oil or the other country for gas supply, because then it just chokes the system. And hence there is a lot of need of energy transition. Now, but 4 years ago with COVID, we had seen a lot of disruption because it's a very capex oriented industry. And the moment there is a disruption, everyone stops the capex, and hence the OEM suppliers get impacted a lot. So the critical component for us is, as Preeti also mentioned, the diversification, making sure that there is a asset liability management. Ultimately, what we do in the business is three type of, let's say, decisions. One is the financing decision. How do you manage your liquidity through equity and debt? The second one is an investment decision. Where do you put your investments and whether we are getting the right returns on the investment? And third one is the operational finance. Now, what we need to do is to constantly make sure that whatever changes are happening in our sector, our investments are protected. We have enough liquidity for next few months, few quarters to manage in case there is a significant disruption. And at the same time, we have enough opportunity or funds available if we need to fuel the growth, because we have seen a lot of swing between us growth and suddenly there is a disruption. The key to manage this for us that we have learned is diversification. When I say diversification, it does not just mean that you get into many products, but make sure that your own business is diversified in terms of your entire value chain. The companies which suffered the most in the COVID period were the ones which were highly leveraged or highly dependent on one sector or highly dependent on one customer or one supplier. So what we are trying to do is to have an alternatives, meaning let's say geopolitical that you mentioned, Red Sea crisis, or let's say Russian-Ukraine war. This puts a lot of stress on the supply chain. So what we are trying to do is to develop alternative suppliers. It's difficult to develop suppliers in a power sector. It takes like 2 to 3 years to develop a supplier because they have to get onboarded to the technology. And so that's one. And at the same time, diversifying our portfolio in terms of customer.
Right.
Diversifying, make sure that we are not just dependent on one customer or one geography as such, and also making sure that we have multiple sources of funds to survive and fuel growth. So these are a few of the strategies that we have adopted based on our learning in the past.
Sure. Thank you, Sushil. Sanjay ji, your personal experience and because CapEx, Sushil mentioned around, and last time also when we spoke, I asked you that has the government CapEx really stimulated the private CapEx as well? But first your experience and then what you're seeing on the private CapEx front at large for corporate India.
No, I can see CapExes are going up. There is no doubt on that. But again, the same thing as I said, like if you ask me personally, what do we do here when CapExes are there? You know, when we took up a large project, there are 2-3 things which were set as a guiding principle that we will not have cash flow, we must manage. Because whatever scenario, you know, you develop scenarios, but you must have alternate scenarios, 2-3 scenarios, and whether we will survive with enough liquidity in the worst case. Because world is again moving towards somewhere, suddenly you will find protectionism. People are leaving duties. You know, you cannot survive depending on one particular market. You cannot survive. China is suddenly entering, suddenly exiting. I mean, things are changing. So over dependence on one market and these things are gone. So we said that, okay, we will not have those kind of, we will not have a bullet payment sort of thing, because though that year, how it will be, we will not know today, 7-8 years if you have to make. So when we tie up a loan and we are entering into a big capex phase, which I don't know whether people are aware, but then it's a ballooning payment, you know, and for initial 4-5 years, there is very, very little pressure on the cash flow. It allows your business to stabilize. It allows your business to start generating cash flow so that you are able to maintain your cash flow and maintain your debt equity and the EBITDA thresholds, because these are all very, very important parameters a business must manage. Over leveraging will never ever help the business. So creating alternate situations, creating whether you will survive in this case, the loan tie-up, maintaining the debt equity, what time you want to raise equity, what time you want to raise, this timing is also very, very critical and very, very important. You can't rush to debt market, you can't rush to equity market without doing proper, because it may hit you in capital market or it may hit you in your balance sheet. So those things are to be really protected when you are doing such large capex in this, and which is what our team is doing efficiently.
Right. Thank you, Sanjay ji. My timer is showing me 4 minutes. The good thing about this panel was that the propensity of your sectors to be sensitive to the developments that happened in the last 4 years is really high compared to others. So that is why, in my last question to you, given that that experience, and if you have to sum up all of what we discussed, one advice for the future set of finance leaders based on these experiences on how they should be ready to tackle such unforeseen circumstances, and a bit of a use of technology, given be it AI, data analytics, which they can use to mitigate this risks. Gaurav, if you would like to start on what would be that one word of advice?
So I think, again, sorry, I will take a little more than what you expect, but I will go back to Darwin theory of evolution, right? What it says that strongest will not survive, intelligent will not survive, the who will be adaptable to change will survive. And that applies to all of us as well as the finance fraternity. We will have to, and I mentioned earlier also, we need not to start doing different things. We have to start doing things differently. And I strongly believe on that. So I think that's the only advice for all of us, is that keep on exploring that what all changes are happening around you. Try to adopt that, if not if not at very early stage, but at least when you see it's happening around, you should start adopting it. Like AI is I think right now AI is like a Temur.
Right.
We talk too much about it. Actually, we don't know how it will become after 5 years and 6 years. But yeah, it's okay. But I think we have to start adopting it. We will have to start talking a lot about it. What we have done in organization, that we have asked each and everyone to start presenting something that they can do on AI. Just go to Google or wherever, just do to Chat GPT, find out something that you want to do and present to all of us. That has actually helped at least to all of them started thinking about it, start implementing in a system. Nothing else, they at least know now more Excel formulas, right? That itself is a small change that we started doing. So my piece of advice is this only, that we will have to start thinking everything. What I was doing yesterday, today I am doing better than that, or in a different manner. That itself, I think, will bring a lot of change as in finance fraternity and for the organization as well.
Thank you, Gauravji. Preeti, your quick advice for our future set of leaders.
Right. So I think flexibility is something which Gaurav and everyone on the panel spoke of, so I'm not belaboring on that. But I think on the tech front, 2-3 things. I think tech is very critical, especially when businesses are growing at a fast pace. Tech is like a foundation. If a foundation is not strong enough, then it's going to hinder your growth. So I think that's very critical. And the technology also, it's not about just business flexibility, but the tech flexibility also is equally important. Right. I just want to give one example here. We got listed in August 2020, which was exactly 5 months into the lockdown. And we were the first IPO after COVID hit us. And we did the entire IPO sitting at home. Nobody could have fathomed that you'll actually be sitting at home. And we had 13 bankers to do the IPO, raising almost 4,000 crore. So nobody could have even thought that somebody sitting, 15 bankers, 3-4 lawyers, and everybody around sitting. We did our road shows. We met 100 investors online. And that's how we sold the issuance. And it got 13 times subscribed. All of this happened right in midst of the IPO. And that was all thanks to the way we were ready with our tech back end. Had it not been for that, doing an IPO when whole world is shut down would have been next to impossible. So I think tech flexibility also is very critical. I think another critical point is when we talk of financial resilience, it's not just about capital structures, leverage, etc. But I think compliance is also very critical, especially when you're on the listed side. Compliance, governance also is very critical, and getting tech in that platform is important. You have heard regulators like SEBI chairperson recently spoke of adding AI to monitor compliances for listed companies. Now that's where the world is going. So even I think on the compliance and governance, because that's also very critical when we are growing fast, to make sure the compliances are strong enough not to help rather prevent us from tripping. I think that's another area where technology will play a big role going forward.
Thank you, Preeti. Sushil, the screen says time's up, but I'm sure you'll have something.
I'll try to be quick.
Yeah.
So my advice is that end of the day, it's human being which evolve, and technology disruptions will keep on happening. We should have the zeal to learn not just in our domain but beyond our domain, in terms of what is happening in market, what is happening in business. And the most critical for the young people is to understand how to implement, because most of the time we fail where we have a lot of knowledge but not able to implement, whether within the organization or maybe at other places. And that involves critical components: use of technology, but how do you percolate in the organization? Use of any system, any processes, but how do you teach people to adopt to those processes, and how do you work as a team? So if one masters the ability to work as a team and have a common vision of changing as per the need of the industry or market, that is actually a winning team.
Right. Thank you, Sushil. Sanjay ji, your concluding comments and your advice for our future leaders.
I'm sure future leaders are techno savvy, much better than what we are. Of course, Sushil is younger, but much better than what we are. So I don't have to tell you. But only thing is over dependence on technology is also not good. That's my personal advice. Application of mind has to be there. One has to have that analytical mind. It's very, very critical. Otherwise, it's very easy to get all data on your screen and this. But how do you read that data? How do you analyze the data? It's very important. So application of mind. And the topic which we said, that CFO must stand his ground. He should be flexible enough, but whatever he feels right, he should be free to say, and he must say this. That is his prime job, and that is his real function. So that's my advice, young leaders. Join hands with your CEO, but raise your concern, raise your voice, and that the resilience comes from that only. Otherwise, CEO people are there to take call, business, SI, this, that, but then somebody has to, resource allocation is a part of CFO's job. Why, when to allocate, where to allocate is very critical for us to decide.
Thank you, Sanjay ji, and thank you all my panelists, for sharing such varied experience across sectors on your mantra for what it takes to have financial resilience in the dynamic markets. Thank you so much. Audience, can we please have a big round of applause for my panelists? Thank you so much.
A picture, please. Thank you. And thank you, Arjun, for moderating that. Thank you so much. From financial innovation to resilience, now we will come towards the leadership segment. But here we'll talk of ethics and integrity. Our next panel is on ethics and integrity in financial leadership. And to share the views, please join me in welcoming on stage Mr. Dharmendra Tuteja, CFO, Dalmia Bharat and Dalmia Cement, Bharat. Joining sir is Mr. Nikhil Sohani, Group CFO, Boosta. Joining them is Ms. Richa Singh, CFO, Puerto Rico, India. Joining them is Mr. Rohit Nair, CFO, Vadwani Foundation. And this session will be chaired by Ms. Savi Khanna, correspondent, BW People. Let's please welcome them collectively, ladies and gentlemen, to the stage. Thank you so much.
Well, good afternoon, everybody. Thank you so much for joining us today. I'd like to welcome all the panelists. Thank you for taking out your time and being here with us today. So for our viewers and for the audience to get to know a little bit more about you and your experience, let's start with a quick round of introductions. We'll start with you, Mr. Dharmendra, what you do and a little bit about your organization.
Sure. Thank you, Savi. I'm Dharmendra Tuteja, currently working as CFO in Dalmia Bharat. It's a cement organization. I've been working with them for about last 12 years, worked in commercial as well as finance domains and reached here. Prior to that, I was working as CFO in Humboldt Vedag for about 5 years. And in fact, I started my journey with the Steel Authority, Bokaro Steel Plant, did stint with the Kripco and Control Switchgear and Samtel before coming to now Dalmia. Look forward to today's session. Thank you.
Yeah, hi, good afternoon. This is Nikhil Sohania and I work for Blue Star. Blue Star is a HVACR company that is heating, ventilation and air conditioning. It's an 80-year-old organization. I'm with them for last 2 years as a group CFO. And prior to that, I was with Mahindra and Mahindra for 28 years. Yeah.
Thank you. Richa. Yeah.
So I'm Richa. I work for Pernod Ricard. For those of you who are not very familiar with the name, we are the brand owner or sellers of whiskeys like Imperial Blue, Royal Stag, Glenlivet, Chivas, and so on and so forth. I'm hoping most of you have seen or at least tried some of our whiskeys. Prior to this, I've had a long career in finance, but also I've had some stints in business leadership and CEO roles, largely in the FMCG sector and a bit of medical devices. So it's interesting where I am today. And I do feel very passionate about this topic about ethics, especially in the industry and where I'm sitting. And trust me when I say this, when it comes to ethics for me and my company, this is the only way to survive. And that's why it's my first more priority. And I'll speak more, of course, later.
Yeah. Very good afternoon. Thanks to Business World for having me here. And good afternoon to all the audience. Myself, Rohit Nayyar. I'm currently the CFO of Wadhwani Foundation. This is the philanthropic initiative of Dr. Ramesh Wadhwani. He's a Padma Shri based in the US. And we are into the business of creating jobs. So we are trying to partner with all the large institutions to help create more jobs for the youth, which I think it's really need of the hour. Prior to this, I have, for my first 2 decades were spent in the for-profit industry. And then I moved to this sector. So it's been really quite an interesting and exciting journey. And of course, ethics, as which I also said, I think that has been always the North Star, whether you work in a for-profit entity or a not-for-profit. So look forward to an engaging discussion here. Thank you.
Thank you. Thank you, everybody. So coming back to the topic for this discussion is ethics and integrity in financial leadership. You know, today organizations, they're characterized by globalization, by technological innovation. There's constant scrutiny from stakeholders, from investors, from regulatory bodies. And the role of CFOs and financial leaders, it has never been more critical than today, right? They have to uphold the ethics, the ethical standards of the organization. I want to keep my first question open to all the panelists. Rohit, I'll start with you. What could be some ethical dilemmas that financial leaders face on a regular basis?
Thanks, Avi. I think ethics is the difference between what you have as a right to do and what is right to do. I think that's sometimes becomes a very thin line. Sometimes, like, as they often say, business ethics is an oxymoron. I think that also needs to be challenged, because ultimately it is the balance between how you grow as a business and also you follow all the rules and regulations, because that's what makes you as a long-term sustainable business. So like there are no shortcuts to success. And as we all know, reputation, it takes decades to be built and can be just, gone in matter of seconds. And we have seen several such examples. So I think in day-to-day operations also for a CFO, often these issues come up, and I'm sure all my panelists could also throw more light on that, where there is always an easy way also to do things, but then there is a right way to follow the process and ensure to have a win-win solution for the organization, for the business, for the people, for the team we work. Because tone at the top is very important here in this aspect that, when faced with such situations, what is the tone at the top? How as leaders we react to such situations, how we are ready to go through, analyze the situation rather than just going for a quick fix.
Thank you, Rohit. Richa, what do you think about?
So what I'll say is the dilemmas often come to you or are posed to you by our ambitious sales and marketing teams who are often looking more for short-term gains or wins. If I purely look at our regulatory environment,
If a CFO very clearly understands what is the intent of any law, what is the intent of any policy, then the dilemma goes away. So versus just going by the words, let's also try and go deep into why has a certain law been put in place, understand that, and then be able to communicate that with your sales and marketing teams so that you're able to address the dilemma. I can take an example to make it a little more clear. So for example, everyone would be familiar with anti-competitive laws. We have CCI in India, which clearly says, you should not be doing dumping. You should not be coming up with policies or practices which prevent your competition to also flourish or participate. Yet you will often have your sales teams or marketing teams coming up with plans. And they'll use the words also in-house that, okay, if we do this, we might be able to buy out competition space or block competition from entering because we are coming up with this major launch. And this is not just in my company, it happens in all the companies, and I've worked in a few. It's very important at that point of time as a CFO to listen to them and then explain. You might not want to narrate the law, but tell them that what you are doing is going to prevent competition from entering. That's not fair play. We are in India, we are a fair market economy, a open economy. Yes, you need to make sure that the retailer is attracted to make the right choice and you come up with something attractive, but not so aggressive that you inhibit competition from participating. Right? You come up with communications and policies that will help you do that. So as a CFO, understand the intent, understand what your stakeholders also want, and then communicate. Over here, I'm emphasizing a lot on communication.
Right. Thank you, Richa. Very nicely put. Nikhil, what are your views on?
So I'll put it this way, just tweaking what Rohit said in the beginning. That is, a dilemma is a choice between right and a wrong thing, or you can say near wrong thing. There is no right way of doing a wrong thing. That's the thing. So either it's right or it's wrong. It's black and white when it comes to ethics, when it comes to what you have to follow. If at the same time, the world is so complex today that as a CFO, you need to have some flexibility. So when you say the flexibility, that role becomes very important. How do you ensure that you don't cross that Lakshman Rekha? How do you ensure that you don't cross that line of ethics and you still balance the business, because business also has to run? And if I have to just put a quadrant, x-axis and y-axis, on y-axis I put ethics, and to say on y-axis, x-axis I place flexibility. I'll say at the topmost quadrant you will have Ram, you will have Ravan down somewhere, you'll have Duryodhan on one side, and you have Krishna at the right topmost. So that's what you will have to do. You'll have to play the role of a Krishna, where you'll have to balance things out. You can't be rigid. At the same time, you can't be overly flexible. You have to ensure that you give right kind of decisions at that point of time. And that is where the role becomes very, very critical. And it's an everyday situation. Just to give you a real life examples, there will be situation I know in earlier company where suddenly you will have regulation saying that from 31st of March, you can't sell goods which are say BS3 or BS2. Now, how do you ensure, how do you liquidate the stock? So you have to make the policies a little flexible with your dealerships and how you are going to sell them. You may have to give some extra credit. All of those things will have to be done within the law to see how you liquidate the stocks. And at the same time, you're not saddled with something. Same thing happens in the current industry that I'm in. So it's an everyday situation where you will face dilemmas as to how you are going to handle the situation. As a CFO, you have to take a step back, ensure that you don't cross the line, at the same time support the business in the right way.
Thank you. Mr. Dharmender, how do you navigate these ethical dilemmas? What are your views on?
Anything? Okay. So as the fellow panelists have told, there will be continuous choices and continuous dilemmas which will come across every day. Be it dealing with all the stakeholders, customers, your suppliers, your employees, etc. So the overriding principle, I think that has to be there in the organization. What is your culture and how do you adopt business ethics as part of your organization culture? And once you have adopted that, we'll do the business ethical way. Answer to all these dilemmas will be very clear, that we have to do the right things in the right way. Because these dilemmas will be umpteen times. How to report to the stock exchange? I got a non-recurring income. Should I call it out or should I just rub in the normal income, but it will catch up soon. So all these kind of dilemmas will come. So most important is leadership from the top, adopting from the top leadership, whether ethical way of business is doing the right way. And just to illustrate the impact of this on our normal role, see, we all know that CFOs have to create lasting value for the organization. And market cap is one of the clear example of how you create value. And we also understand the concept of PE ratio. So a company in the industry may be enjoying, let's say, PE ratio of 10 and having a market cap of 40, let's say 40,000 crores. Similar company may be having a PE of 20 or even 25. So with the same profitability, they'll enjoy double or even 2.5 times of the market cap. So what difference this PE ratio comes? So this PE ratio normally increases only when the stakeholders or the investors have confidence in the management and the company that they'll create a long-lasting valuation, and they'll be doing it in a very ethical way. So you can destroy this PE and the market cap to 50% or even to zero also by doing any shortcuts, by taking shortcuts or fraudulent practices. So important is to ensure that the underarching principle is clearly established in the top management and to all the employees that ethical way of the business is the only way. So whether it's all meeting decisions, any suggestions for cost cutting or cutting corners, they'll all have to be dealt in the same brush. It cannot be that there's a complaint against your sales head or your production head, and you take a different call, yeah, we can't lose this person, and take a different call when some junior comes. So all this has to be practiced, what you preach. So that's a continuous call, and CFO being a custodian of all the controls or ethics, I think we have to take a call and we have to align the CEO and the top management that let's ensure that this is the only principle to work forward.
Thank you, sir. Rohit, coming back to you, Richa just talked about pursuing a competitive advantage while also maintaining the ethical standards. There's always this dilemma, let's call it a conflict of interest, right? So as a financial leader, how do you maintain a balance? How do you strike a balance in pursuing a business success or a competitive advantage while also maintaining ethical standards?
Yeah. So having worked in both sectors, as I said, for profit or not for profit, I think the CFO continues to be in a fiduciary role. So in a for-profit sector, it's about your shareholders, your investors. In a not-for-profit world, it's your donors. And again, the main expectation is that, how do we utilize the funds correctly and for the maximum benefit of the organization, and especially in our sector for the wider community and beneficiary as a whole. So it's not about, just using the funds. It's about utilizing the funds in the most effective manner so that there is maximum impact to be felt by the beneficiaries, because that's what the intention of the donor also is when they are putting aside large amount of funds, whether it is CSR or the other initiatives. So that's where the role of CFO becomes even more critical, to really understand and evaluate that how does the funds get allocated, how the resources are being utilized, and whether it's again just an easy way to use the fund, which I think is a given, versus the most effective and efficient way of using the funds, whether it reaches to the last mile beneficiary. And that's where technology of late, as we all can appreciate, has made a big change. Instead of, again, today we have the facility of direct transfers, bank transfers. So I think CFO needs to be at the forefront of adopting technology, adopting these best practices, implementing all these processes, change in the organization. Really needs to be the catalyst for this change, because it's very difficult to otherwise track transactional level. So unless you put in a full ecosystem of efficient processes and systems in place, then only you can channelize all these investments in the most efficient manner. So it's a journey, because new things come up, expectations come up, as my fellow panelist says. The cross-functional teams may have their own reasons to do things in a certain way, which as a CFO, again, we cannot be guided by our own personal ambitions or preferences. It has to be what is right for our beneficiary, in our case of the sector, or for the shareholders, or for the community at large. And that's I think that's where the CFO really needs to demonstrate through various actions and leading from the front that this needs to be done in a specific way. But of course, one cannot also follow an approach of my way or a highway. So that is where collaboration across sectors, across the cross-functional teams are important, so that we all together make it a win-win solution.
Right. Thank you. Richa, we already got your views on this. Mr. Nikhil, do you have yeah, please show.
I just wanted to clarify one thing, and I really feel very strongly about this, that competitive advantage and ethics are not exclusive. Okay, they coexist. A sustainable competitive advantage really comes from product differentiation, pricing, superior consumer service. Whenever you have to make a trade-off that's echoing on ethical dilemma, that means it's a short-term gain, it's not sustainable. And there's so many examples, where companies have come in and they've gotten the competitive advantage, not because they did something wrong, not because they tried for a short-term win, but they really came up with offerings that changed the game in the market. I mean, I can talk about some FMCG offerings. If I talk about, most of you would be familiar with diapers. Diapers existed in India for the last 20, 25, 30 years. Procter & Gamble came with Pampers, took over the market from Snuggie and a few other brands. Later came Mami Poco and took away the market from Procter & Gamble, and every time it was product differentiation. I do want all of you to reflect on this, that let's not assume that these are exclusive.
Thank you, Richa. Mr. Nikhil, my next question to you is, when we talk about ethical values and integrity, it's very important for organizations to embed these values across the organization and also in the teams, especially if we talk about the finance space, right? As a leader, how do you embed these values across the organization in the decision-making process and also in the corporate culture?
The way I'll put it is, it has to be in your DNA. It has to be in the organization's DNA. It can't be that, you will start doing it. It is something which the organization has or does not have. And the leadership has to walk the talk. So if you are recommending it, you have to ensure that first you demonstrate it. So in your whatever decisions you take, in the actions that you show, you should demonstrate it from day one. Second, very important thing to build it as a culture is to have awareness. See, many a times that you will have new people joining, you will have people joining from outside your organization. So the culture is something which has to be built. And when you have to build that culture, you have to ensure that people are aware of what the culture of the organization is. So it is very important to build awareness, to have training sessions which are voluntary and if required even mandatory. So that is something which is very important. You have to assign responsibilities. You have to ensure that there is a freedom for people to speak up, because unless people speak up, you will not know what's going wrong in the organization and where. So the speak up culture has to be embedded in the organization at all levels. And more and most important is a listening culture. You have to listen, because if you don't listen, then it's no use picking up also. So you have to listen to everyone at whatever levels, not only at a particular level. It could be the lowest rung employee of your organization, but you should be ready to listen. So if you kind of build this kind of culture within the organization, where there is an awareness, there is responsibility, there is people walk the talk, there is speak up, there is listen, automatically it gets embedded in the culture. And that's how it will get built into the organization over the years. Culture is something which has to be done over the years. It's not something which will happen overnight. And once done, it stays with the organization forever.
Very well put. Mr. Dharmendra, would you like to add to that?
Nikhil, I think fairly covered various dimensions of the culture. It has to start from the top, and you have to demonstrate on a day-to-day basis. And sorry, just 1 minute. Can you please continue?
All right, sure. No worries. My next question is to you, Mr. Rohit. I'll come back to you. Monitoring, identifying, and mitigating ethical risks is very important, especially in financial reporting or, let's say, auditing or corporate governance as well. How do you do that as a finance leader?
Yeah, I think that's very important that, first of all, there has to be a common thread. We all need to identify the right things because, right could have a very different meaning for different stakeholders, different parts of the organization. But it's very, very important to define the core principles, the core values of the organization. And that is where tone at the top and leading by example becomes paramount. So there are often, I'm sure CFOs of especially the listed companies face this dilemma of the short-term stock exchange reactions to the long-term sustainable growth. So that's where the role of the CFO also becomes very, very critical, so that there are no excuses done or no shortcuts taken for just to meet a specific requirement which could jeopardize the long-term interest of the organization. So during that process, there could be multiple discussions with the stakeholders, whether it's your auditors or your CEO. And that is where the CFO really needs to hold the light up and really, keep pushing or keep having this conversation ongoing and the dialogue ongoing, that, how certain things needs to be disclosed, and how certain transactions need to be reported. And as Mr. Narayan Murthy famously said, when in doubt, disclose. So I think that becomes the ultimate sort of guiding force for a CFO, that whenever you feel there is confusion or there is some dilemma, it's always better to disclose. And that holds good for the long-term growth of the organization.
Richa, you want to add?
So at Pernod Ricard, when it comes to KPIs and metrics, we are definitely in the process of setting up a lot of KPIs across our different P&L lines, starting from discounts. So the kind of discounts that go to retailers, to distributors, in the manufacturing plants, the kind of wastages or scrap or anything that's getting, reported. We put our internal controls filter on each of these to make sure if there's anything, any deviation, it triggers a red flag or an alert, which our audit teams then go and audit. I'll not say that we've completed the journey, but we are really trying hard to put a KPI lens into a compliance and controls culture. Now, the second part of your question, what else can we do or how do we make sure this happens? While we are setting up these KPIs, we also work very, very strongly with our external auditors. I think they play a very, very strong role in keeping us honest and keeping us, very clear on what really needs to be reported. Very, very transparently, focusing again on clear communication and transparency. We share whatever's happening within the company, outcome of our internal audits, internal reports, compliance checks with our external auditors, and we let them decide that how much of that is really relevant from an external investor, external regulator perspective that we should disclose, and we don't intervene in that.
Thank you, Richa. Mr. Dharmendra, coming back to you. At Dalmia, how are you mitigating these ethical risks?
So it starts from the culture from the top. I think starting with the understanding between the promoters, MD and the CFO and the top leadership, that whenever any ethical issues will come, let's say the CFO will have a kind of veto right, that you can always question that this is not okay and will not allow it to go. When you're dealing with, let's say, promoter family companies, and this examples came in the last couple of years, we took a call that, see, this is the only value at which we'll transact with you. And this was not based on some kind of a fair valuation report from XYZ, because valuation can be taken anyway. What we felt right was this is the right way to transact things. It will take care of the concerns of the minority investors or the larger stakeholders. And this is the way it has to be done. And that was aligned before going ahead with the transaction. In the end, ultimately, promoters also lost. But for him, the valuation of the larger company is much greater. So he respected our wisdom. And same thing comes when it deals with the situation of, let's say, any kind of ethical complaints come. So nowadays, if I compare my experience, let's say earlier versus last couple of years, so time being devoted to the ethical complaints handling as a part of ethics committee members, that has changed significantly. I think a lot of time we have to handle these complaints and dispose of quickly. There will always be some situations where some employee has done something wrong. If we try to sit over it and, let's say, not handle it in the right way, it becomes that management is part of this kind of conspiracy or management is part of this wrongdoing. So decisive actions, timely, that is most important. And whenever, let's say, we are dealing with the investors, be transparent, don't try to be, let's say, hide the bad news. How to ensure consistency and predictability, that is important to demonstrate. So I think compared to my earlier experience versus recent years, we have changed the way we deal with the business team members. Earlier used to be that whatever results come from the business team, finance has to ensure that a consistent growth should be shown to the investors. That means we'll adjust in the accounting. Sometimes we'll release the provisions, sometimes we'll create the provisions. So that concept has changed. Now we push the business team that you have to ensure consistent performance and predictable performance, which will get demonstrated and explained to the investors. Because any kind of adjustments you do in the accounting, it becomes really apparent. Because nowadays investors are so demanding that each and every KPI is told to them in the either press release or in the investor call. They can simulate your business model, forecasting model in their own spreadsheet. So anything you try to do, it will easily catch up. So all these actions, I think, clearly demonstrate that there's only one way to handle this is the right way.
Very well said. Thank you. Nikhil, your views on, in case an ethical lapse or integrity breach, what are the next steps for a CFO?
If there is ethical breach, I think there are no two thoughts on that. If there is an ethical breach, there is only one solution. If the person has committed it, he goes. I think there is no two views on that, from my side at least. Because an ethical breach is something very serious. Okay, there can be an error, there can be a mistake, but if you are doing an ethical breach, you cannot say that I was not aware of it. See, because therefore I said, when you are building a culture, you have a culture of awareness. You cannot have an employee in your organization who is not aware of what are the ethics in which you have to operate. So there is no pardoning for ethical breach. That's a given rule, because if once you make an exception, there is no end to it. Then there will always be some exception which you will have to keep making. There will always be a reason why something has been done. So there is only one way of doing business, and that is the right way of doing business. As I said, there is no right way of doing a wrong thing. So to that answer, it's a very simple answer, that if someone does an ethical breach, then that's the end of the thing at that point of time. And it does not matter what the amount involved is. It can be a large amount or it can be a small amount. Because when a person does it even for a voucher, what it shows a character. And that is what is not right. Because if you have that kind of a character, I think it's like it will spoil the entire organization. So you need to be very clear on all these rules, and organization has to send the right messaging when they do it. Because if again, at what level a person is does not matter. Okay, if the person may be at the highest level, and he may have done a thing with the smallest thing, but I think he still has to go. Once that messaging is clear, you will ensure that the organization, everyone behaves ethically in all the decisions.
Richa, what trends, looking ahead, what trends do you foresee in the intersection of upholding ethics and also financial leadership?
I can touch upon once again on what I mentioned, that it's going to be a lot about leveraging technology, setting up clear data analytics, artificial intelligence that's going to help you capture trends, capture behavior that could be generating a lot of red flag. Also, if I talk about the future and financial leadership and how does it weave ethics into it, we as finance leaders today are no longer simply accounting and reporting people. For us to be successful, we have to be influencers. And this is where I do want to highlight that as finance leaders, yes, our key role also is stewardship. We are custodian for ethics, but we need to make sure we enroll senior management with us or the board with us in the agenda for ethics and integrity, and that's when we'll be successful. So support the organization with very good analytics, support the organization with finding business solutions to what is needed to deliver growth. But at the same time, be a spokesperson and find other spokesperson, including the MD and the CEO, who's going to stand and talk about ethics, reward ethics, and be with you if you have to really use the stick when it comes to incorrect behavior.
Thank you, Richa. Mr. Dharmendra, I'll come back to you. What trends do you foresee?
We all know in the investing world, a lot of institutional players have come in, be it FIIs, FPIs, or even local mutual funds. So all of them clearly demand very high premium on the governance. I think that is a starting point for even selecting a company, whether it should be in their portfolio or not. So ensuring that your processes are right and you create a long-term sustainable value, it's important that ethical way of doing things is going to be there. Within the same industry, who will get picked up by these players for investment will be the leading players having a very high, impeccable record of governance. So of course, technology will definitely come into play, but it commands a premium. You can replicate the methods being deployed by one player for cost reduction, for sales maximization. But replicating this governance journey, I think that is more difficult to achieve. And it is not like you have to tick box 10 things, that if I do these 10 things, I'll be very governed, let's say, ethical company. It is a mindset change, and mindset change doesn't come overnight. It is not a tick box of 10 things that I've done RPT transactions, I've got them audited, I've taken care of this, I've taken care of that, I've done the code of conduct, I've done the roadshows. So these tick boxes will not help you to get that culture of ethical business company. Mindset change will take a couple of years. Mindset change is very, very difficult from the promoter side, from the top management side, demonstrating it day-to-day actions and replicating for all the juniors. I think that once you create, it's a sustainable competitive advantage. I think that is the path everybody would prefer that companies will march towards.
Thank you, sir. Rohit, do you have something to add? Also, we have a lot of students here. So any piece of advice for the freshers and for the talent who are looking to become financial leaders like you?
Yeah. So I think CFO has a unique role in the organization. With all due respect to all the leaders across functions, CFO can really chart out or connect the dots across the organization. So sometimes, the different business leaders may just be focusing on their stream of business or their lines of operations. But as a CFO, you get to see the full view, and it's very important to comprehend and get that full view so that we can collaborate with the specific business people on where are we doing correctly, where do we need some course correction. So I think that dialogue is very, very important in this role as a CFO to be successful, because ultimately it's about adding value to the organization. Now financial reporting has also moved, or it's rapidly moving away from being just a diagnostic reporting to more predictive and prescriptive. So with the advent of technology, nobody is expecting the CFO to just rattle out the last month's sales number. I think that's like not at all any value add, but the story behind it, what drove the sales, and the actions which the organization is taking, how will that impact the growth, the profitability in the coming quarters or years. I think that is what the insights which the organization is looking at from the CFO. So that's where the CFO cannot no longer be just sitting in the back room or in the corner room. The CFO has to be at the forefront, engaging with all the business leaders, trying to understand how we create value or how can we create more and more value for the organization. And again, balancing agility with compliance. Again, we just cannot go all out. We need to respect for the compliance. We need to respect for the organizational policies, the ethical way of working, and that's easier said than done. So I would encourage, each one of you that, this is, you really need to climb up the stairs, as they say. There is no elevator available, and it's a journey. I think we all have faced that in our careers. We continue to face the challenges, but as long as you are clear, and as I strongly believe, there is no softer pillow to rest than a clear conscience. So I think that's what it's very important that as we build our net worth, we should also take care of our life's worth and continue to move forward.
Thank
All
you
the best.
so much.
Sorry,
Yes,
can I
Mr.
add
Dharmendra?
one analogy for the students?
Sure, sure.
Many of you must have seen this movie 12th Fail. So if you notice that there was an example of should you do cheating or should you do hard work and then pass? In cheating, you may get 80% marks, but ultimately it's not a sure shot way of success throughout your life. When you do the hard work, even if you get second division, ultimately you can succeed in the life. So similar is the example in corporate world. All these shortcuts will never take you far. This can give you success in the first quarter, second quarter, third quarter, maybe 2 years, but this will catch up. Whereas if you are following the ethical practices, you have a long way to create your success story. I think that's a very clear-cut example with your student life in the real corporate world.
Amazing advice. I hope students have taken a note. And Mr. Nikhil, your closing remarks.
I'll say that be open, be honest, be consistent with what you're doing. You have to build trust, because if you build that trust, then you can ask for what you want people to do. So it will not come if you force them. You should demonstrate the trust, that trust. Then only it will happen. And that is the most important thing. So you have to be bold as a CFO. You cannot be timid. It may be 1 against 8 in your leadership team also, but you have to stand for that. So you have to stand for values whenever required without worrying about what are the consequences. Because when you do that and when you demonstrate that again and again, you get that trust, you earn that respect, and you will be able to do what is right for the organization.
Richa, your closing remarks.
So for the young ones over here, I do want to say that it's as you start your career, so maybe if you're early in your career, it's very easy to get swayed by the word business partnering. And I do know a lot of young talent always want business partnering roles. Till the time you're in finance, you'll always have to carry the stewardship hat. And you need to remember business partnering does not mean closing your eyes and letting your business teams do what they want. Business partnering means helping them do the business right in the right way, in a way that will ensure long-term sustainability and growth for your organization. And as a finance person, especially when you're young and you may not be that bold, or it may not be right for you to always speak up against your teams or vehemently put a point across, it's good to find support systems or alternative channels where you can seek a second opinion transparently without offending the other person. So you can keep your friends, you can look and be a strong collaborator. Yet, when in a dilemma, always reach out for a second, third opinion and speak to the right channel who can support you in this journey.
Well, thank you for the insightful discussion. A big round of applause for all the panelists.
Hello. Thank you so much. Your picture, please. Thank you. Thank you so much. Thank you. I always say this, from food for thought, it's now time for food for our stomachs. It's 1:15. It's time for lunch. Lunch is served right at the back of this hall. For our speakers, lunch is served outside. We shall reassemble at 2 sharp and then start with the next session as well. Thank you so much. Please enjoy your lunch. Hello. Welcome back, everybody. 2 minutes more, and we shall start with the next one. I would request all of you to please settle down till then. If your colleagues are outside, you can call them inside so that we can start with a full house again. Thank you. Console. House music. 2 minutes, and we shall start. Hello. Okay, well, all of you are still settling down. I had mentioned about the magazines from the house of BW Business World, also about the very latest issue that talks of technology, information, and more. May I please request our team to play the magazine AV till then?
India has a lot of opportunities, not only because of the sheer size of the market, but because of the way digitalization has got democratized, creating a very strong foundation for creative and tech innovation. The India Stack has brought solutions closer to clients and enabled Indian talents to lead global innovations. For us at WPP, all this has led to unprecedented growth and has ensured that our people sitting in this market can build solutions for global clients at scale. Read about our story and how we build better futures for our people, planet, clients, and communities in this issue of BW Business World.
Hello. Okay, welcome back. Everybody had lunch? Yes, no? Yes, sir. वो कहाँ से? Where does yes sir come from? हाँ सर, आपको तो मैंने देखा था. Okay, just having fun. If you've had your lunch, please just raise your left hand. Left उठा लो यार. That shows you if you're raising your right, I know you've had extra rotis. That means you're already going into the sleepy state. But okay, thank you. Thank you for replying. We know that you haven't slept and you won't, because the next panel discussion, it's panelists. They bring a lot of experience with them. The discussion is going to be super engaging as well. And next one, it's on strategic financial leadership for sustainable growth. And to share the views on the same, now that you've had your lunch, I'm sure कि आप बहुत ही जोर से उनका स्वागत करेंगे. Please join me in welcoming on stage Mr. Mayank Kholani, CFO, Indian Synthetic Rubber, a joint venture of Indian Oil and TSRC Taiwan. Joining sir is Mr. Siddhartha Khetan, Group CFO, Supply Chain and IT Head, SME Consumer. Joining them is Miss Upma Goyal, CFO, Piramal Enterprises. Joining them is Mr. Vikas Wadhwan, CFO, REA India and Business Head, PropTiger.com. And this session will be chaired by Miss Sumetha Verma, Senior Director, SAP Concalus. Please welcome everybody. Or you've just had lunch. Thank you.
Good afternoon, everyone. So my panelists here have promised me that this session is going to be like a power-packed, punched-packed, zingy, and only like a 40-minute session. So let's get started without any further ado. So my first question is going to be for Vikas. So Vikas, we were having like a bit of discussion about this outside the room as well. So what do you think are the key components of strategic financial leadership, and how do you believe they contribute to sustainable growth?
Thanks, Sumedha, and good afternoon, everyone. I hope you had good lunch and not sleepy. We'll try and keep you awake, but no promises. So, Sumedha, the question which you asked is a bit more generic, but I'll try and give my perspective, how I look at it in my organization. And I'm sure my co-panelists may have a slightly different view. So please feel free to jump in. So from a strategic financial leadership perspective, a few things are very, very critical. First and the foremost, how I look at it, how do I align the financial goals with the overall organizational objective? And when I say that, you need to go a little bit deeper, that what the long-term goal of the organization is, and how do I provide how do I align my financial goals with that? How do I provide resources to realize the long-term objective of the organization? That is super critical, and that's where I would like to quote one example. If you look back, Disney, when they started investing in Disney Plus, there was a lot of backlash. In fact, their share price went down, but that's where that entire financial planning and long-term investment comes into play. And today, Disney is when they started actually investing in OTT, and they've not now started realizing the gains of those investments. So sometimes you need to take those long-term bets, get your financial strategies aligned to the overall long-term strategies of the business, and be a little bit more patient and not be too focused on short-term goals. That's one. Second, I think from a strategic financial leadership perspective, we as finance people are good at, and that's what we were discussing just before this panel, we are good at financial analysis. But I think what is important, that we need to build the commercial acumen in what we do. When I say commercial acumen, so we can do a lot of financial analysis, come up with a lot of variances, graphs, pie charts, and so on and so forth. But it's important to understand why a particular trend. What are the factors which are external to the organization impacting that particular trend? what are the factors which are contributing to that trend, and how do we create specific actionable out of that commercial and financial marriage, right? That is super critical. The third piece, which I believe is super critical, sometimes we not pay so much attention to it, is communication and collaboration. And when we say communication, we spend a lot of time and energy in communicating to the external world, but less so to the internal world, right? I think internal world communication, even from a financial perspective, is as important, if not more, as communicating to the external world, because your financial decisions impact different business lines, impact different departments, individuals. So getting people aligned and getting the collaboration on the table is super critical. I'll give you one example what we have implemented internally, or in fact two examples. One is we've implemented a group investment forum, and that group, as a CFO or as a finance leader, one of the most important job is resource allocation. While it's important for you to do that, but it's important for you to also get other people aligned to those decisions. So what we've done internally, we've created a group investment forum, which is a constitution of people from different functions. So whenever a decision is being made that we're going to invest into this particular pocket and not there, everyone on the table has an equal voice, and accordingly we come up with investment decisions. That brings a lot of collaboration, and it tells people why we are investing in a particular pocket. The second such example, when I talk about collaboration,
Just a follow-up question. Is that like a cross-functional team which you have created?
it is a cross-functional team. It is a cross-functional. And second example, I will give you a little bit more insights there. So I am an active member. We being a technology company, we do at least 1 or 2 hackathons every year, where our tech team comes together, spend 2-3 days back-to-back innovation, come up with 20-30 great ideas. I am a regular participant in those hackathons because that's what gives me a lot of insights. What's happening? What are the areas to invest on? So tomorrow, when some ideas will come onto the table, purely from an investment perspective, I understand what the team is thinking behind it, how they have done that hack, and what is the potential of scaling that hack. So I think that is the kind of participation of financial leadership beyond just looking at the numbers is super critical in today's world.
So thank you so much. You have made such excellent points about finance CFOs or financial leaders being patient. You've shared, a couple of examples as well. You shared the Disney example, which was very useful, and creating these cross-functional teams, which can add to the organization. Since we, talked about being patient, but, most of the organizations, whether it is public or private space, everybody wants quick market value creation. Especially if you are a public company, you want to show the value to the market, to the shareholders, that what is the return on the investment. So this segues pretty well into the next question, which is that this question is for you, Mayank and Vikas, that how can financial leaders balance short-term financial objectives with long-term strategic goals?
Good afternoon, everyone. Thank you. So I think there are few things which as a finance professional or even as anyone in management need to do. So first is, in my view, we need to set the clear priorities, right? What are our priorities in terms of long run and what are our priorities in terms of short run? Because as you rightly said, we have to manage both the things, because long run, you could have a plan of 5 years, 3 years, but for that you can't can't leave your short-term performance. You have to report numbers quarterly. So one is you have to have clear priority. Then second is measurement and accountability, right? Unless you measure, how you are progressing on long run and how you are progressing on short run, and who is accountable for what, things may fall out of place, and everybody, short-term performance where people will blame on the long-term project and vice versa. And this also, I'll give an example from my past experience, although because I'll not name, not give the name. So I was working on a divestment thing. Okay, so we are selling a business, part of a business. Now, and it so happens that, okay, everybody, unofficially, a lot of people also get to know, right? There are rumors, and because same thing has happened in past also. Now, if you don't end up selling, and the business, because it's a long lead timed business, long cycle business, and it continues with you, you will be in a big mess. And to clean up that mess, you are going to take as much as a midterm time, right? It will, if you get into a wrong situation, it will take a minimum 2 years, 2.5 years, and it's a significant part of your portfolio. So in that way, we have to balance both. Then the third one, I would say, is risk management, in terms of, again, to balance both the things. Another one is communication is key, in terms of, with your stakeholders, whether it's internal or external, because they should also understand what you are doing, why you are doing, and for whom you are doing that. So these are a few things. I think there could be a more points as well. So where we need to focus in terms of balancing the long term and short term, and both have their own importance, and you can't leave one for the other. Thank you.
Understood. So I loved your, point about explaining the why to everybody. So Vikas, maybe if you could also throw some additional light on how do you get everybody to agree, in case if there are any disagreements, how do you align everybody to common objectives, whether it's short term, long term? Yeah.
Yeah. No, so I think to add to Mayank's point, I've been personally on both sides of the table, being part of tech startups for the longest, and now being part of a listed company, which is listed in Australia and US. So I completely understand and appreciate those quarterly reportings, and it took us long when we got acquired by a listed company to adjust to that quarterly cycle. Startup mein to it's always tricky, right? But I think, Sumedha, how do you balance short term versus long term? It all depends on, especially in today's world, when the world is so dynamic, the business cycles are only getting shorter and shorter. Earlier, it used to be you start a business and then it takes 4, 5, 6 years to is a gestation period, and then 50 years is the life of the business, or at least 20 years is the life of the product, right? The product life cycles are too tiny. Even the life cycle of a business is also short. So how do you plan long term is all about how much you are willing to invest in your long term growth, how much you are willing to invest, not only looking at disruptive technologies, but also disrupting yourself, because either you disrupt yourself or somebody else from the outside will come and disrupt you, right? That's how I see it, at least internally. Coming back to how do you balance it, quarterly results are important. You have no option but to deliver that, but at the same time it is important for you as a business leader or a finance leader to create room for the innovation and long-term investment. What we do internally, we again, I keep on quoting internal frameworks. So we have a framework of CET, which we use internally. So CET means core, extend, and transform. Core means what we are doing internally and what is running right now. So how much is the room for that particular piece? Then second is extend, which means how do I extend my core business? Like today I'm present in 15 cities. How do I go to the next 10 cities? Today I'm present in this particular product. How do I do adjacent products? And that is where the investment, and how do I create room, and what is the wiggle room I have in terms of success metrics and all. And third is extend, which is a little bit of moonshot, where I don't know what the success metric will gonna be, but I'm willing to invest for the longer term, and we create room in our P&L for that. If you do that, then it's easy to handle those market expectations, easy to handle your quarterly results, and so on and so forth. And obviously you need to play around and adjust sometime, but at least then you know how much to adjust in which pocket. Otherwise, if you don't distinguish, then your moonshot projects or the longer term projects, which will give you a sustainable growth, will be the first one to cut in a downturn, which is the worst thing to do.
Just want to add something. Yeah, just wanted to add something. So thank you guys for having me here. So I think one very, very important thing is on the short term, most of us enter into an organization which is already up and running. So it's about the fact that, and I'm talking about more at a leadership level. From a leadership level perspective, when you get into an organization, you need to deliver today. That's the first and fundamental rule. But you also need to deliver for tomorrow. To deliver for tomorrow, you need to undertake either a resource allocation, change in business direction, any other strategic decision making to ensure that you are always thinking long term. So any organization, in my view, is always all about creating value. You create the value, you create a consistent and sustainable value, and that value is created on a long term, but through the decisions that you end up taking. Yet, very importantly, if it's a listed entity, you also cannot go back to the street and say, look, guys, I want to do this over a 2-year period. So for 2 years, you're going to have completely adverse results. You're going to have a bad cash flow. You're going to have a pathetic balance sheet. You can't do that. So you have to keep on. And I think what Vikas was mentioning very clearly was the quarter is very important. So you undertake steps so that your quarter or your financials do not deteriorate. Yet at the back end, you also keep on undertaking either a resource allocation or separate activities or decisions to ensure the long-term goals, be it a 1 year, 2 year, 3 years, is also met out. So I think that's exactly where I think very importantly, we need to balance the short-term versus long-term. Without that, I think existence of a finance or existence of a leadership itself is not there.
So I love, I mean, all the three, all the three responses. I think your short-term and long-term strategy itself, talks about risk management, because ultimately you're balancing what you are doing today, what you're delivering today versus, what you are creating for the future. So everything is working well for the organization. You are creating consistent value for all the shareholders and making sure that the business is sustainable. And because you also spoke about the innovation bit, that is, with respect to long-term projects, that you keep investing in such projects which will deliver the results for your organization for tomorrow. And there goes my next question to Siddharth and Upma on similar lines, that what role does innovation play in shaping strategic financial leadership, particularly in terms of disruptive technologies and business models?
I'll go first.
Yes.
Okay. So in my view, I think when you take decisions towards the long term, you need to undertake steps. You need to innovate. Innovation can be of different kinds. Largely when people talk about innovation, it's all about the fact, if it's a consumer goods industry, it's about how many more new products that you really bring into the market. That is one part of innovation, a very small set of innovation. That's not really a complete innovation. But if you want to take innovation in its true sense, it's all about the fact that on one side, product innovation is important. The second very important thing, process innovation. You need to undertake changes in your process. A process change, just to kind of give you one example, is about your current function from a current setup to a shared services environment, where your entire cost structures can get challenged out, is a process-based environment. You can undertake a tech-based innovation. So for example, today we bring about ERPs, whether it's an SAP, Oracle, XYZ, whatever you want to get on. Again, it helps you to bring a lot more technology into the picture. Today, when you get into the market, a lot of these startups, a lot of the new age companies which are coming up is all very tech heavy. Very recently, in our organization, we've installed things which are towards a reconciliation software. Most of us have tie-ups with organizations which are doing the ASP, GSP. These are all small techs, but these are all techs which are in place. There are a huge amount of money, startup environment towards data insights. Now, these are all technology. How do you use technology? We have a lot of predictive analysis coming into the picture. What is the market demanding for? So how are we bringing a lot of this technology into the framework? And what are we doing? Because nothing is going to come in till the time those decisions are undertaken for us to bring about the change. It ultimately goes back to say, what are your long-term goals? If your long-term goals, let's say, is about growth, you will deploy technology or innovation very differently. If your long-term goals is to say, the state in the company where we are in, we have a very optimized revenue structure. I'm going to only have a 4 to 5% growth. Then to maintain your profitability, you have to cut down on cost. To cut down on cost, you start bringing in efficiencies. Just to give you one very quick example. So I hail from a consumer goods industry, more from the cosmetic side. And when I came into the venture about 5 years back, we were operating out of 6 manufacturing units. So very early on, we took a call that we need to start merging these entities. we need to build scale, we need to build sustainability, we need to build the right compliance environment. So we today are actually, we've collapsed those six manufacturing entities into 3 manufacturing entities. However, my production capacity has gone from a 1x to a 2x. So we built in larger capacities, larger scale. These all required investments. It all required the foresight about where we want to reach on. And that's exactly how we ended up reaching there. If you were to talk about into the e-com space, a very similar kind of a setup, people are doing 3P. They do not manufacture at all. So there is a zero manufacturing. They're able to scale up. But it's also about the decisions that we end up taking. And at least in our case, we ended up taking a decision about manufacturing ourselves. For us, logically, it was more about expanding the capacity, which we did. So that's the kind of innovation, that's the kind of strength that you need to bring to, depending on your long-term goals.
I'll just take it what Siddharth is. I'll take it from the Siddharth, and he's talked about how the innovation is important while we are into the disruptive world. When you talk about the long-term strategy, you'll say, what exactly are you looking at? Your stakeholders, be it your customers, be your investors, be your regulators, you need to be very clear what exactly you have been going from the long-term perspective. And in the disruptive environment, without the innovation, you just can't survive. So for me, innovation is something that's part and parcel of your regular spend, what you're doing it. Without the innovation, while you're keeping a very tight eye on what my competitors are doing, how the economic environment is being changing, but the things are changing so fast, we really need to invest into the innovation and the R&D. And I'm not just talking about the finance as a function, but for the organization at large. Unless, suppose if I'm into the product company, what exactly I'm doing it for my customers. Today, my customers are getting X. What would happen after 5 years? That's something we need to think through it. And that's how the whole piece of innovation. So most of the time, there are a lot of companies, we're actually carving it out some part of our spend as call it as a R&D spend. That's something really required for, to have a sustainability growth. And when we're talking about all our long-term objectives and how to align our innovations and all our R&D towards that long-term objective. So innovation is something which I'm saying it's like a core for any business. And if anybody is not thinking through, we are saying we are doing good today. We never know what happens tomorrow. That means we are not prepared ourselves for tomorrow. So it's like we have entered into that world. Even in the finance field, gone are the days when people used to prepare the books of accounts, then the trial balance, and then the financial statements used to come. Now with this AI and ML, we just get it real time, the dashboards, even the balance sheets and your analysis. So you won't require a person to tell you what happens to your variance, where exactly you're doing good, what are you doing bad, what happens to that geography. So that things have already imbibed into our day-to-day activities. So we are into that stage where systems or the technologies have already taken over the activities which the human beings are doing. So that just talked about bank reconciliation. So most of the places there are RPS which are already institutionalized. Even you need not even send the mail. There are bots and they're sending the mails on your behalf. So we are enter into that era. Now what is the next thing? That means the finance team need to really upscale themselves, have to have a complete business mindset. So it's no longer a thing has happened and we are reporting. We have to partner with the businesses. That means we need to go to the root cause in the sense understanding what type of a business, what are their pains, and how we will ensure that we will get a risk adjusted returns. That means wearing the hat of a risk head, saying that there will be a risk. If this risk is there, are we prepared for it? So it's all on to the predictability, making sure that what if analysis, are we prepared, and supporting the business partners with those data points online so that they are also in a journey of strategic sustainability. That's what I feel. So for me, innovation is like a very basic core things for any organization. Thank you.
So all the panelists here have, talked about bringing technology into, to the forefront for having a good today and even a better future. And we talked about from technology perspective, we talked about two different aspects. One was the process innovation side of it, and the other one was the product innovation. And from process innovation, since the business models are changing very, very swiftly today, it's important to make sure that your processes are very agile. And even when you are implementing a new technology, you are sort of rethinking about your processes as well. And all the insights and different examples have been shared by our panelists. They all belong to a different industry set. So I can see the diversity in the viewpoints as well. And thank you so much for that. And with this, my next question goes to Siddharth and Mayank. So we've talked quite a bit about communicating communicating the value which we are creating internally to internal stakeholders and to external stakeholders as well. And the question is around that how can organizations effectively measure and also communicate the value created through strategic financial leadership initiatives?
I'll go first. Yeah, I think this a very valid question, and measurement and communication is key, because otherwise people don't understand what you are talking about or what value it brings. We may keep talking of long-term projects or any strategic objectives, but unless we communicate and measure them, it's not right. So first and foremost, we need to have a clear metrics of measurement of the any long-term project or any strategic decision what we are taking. So we know, okay, these are the KPIs against which we need to measure. Second, we need to have some quantified financial impact, right? What is the financial impact which we are looking at and how we are going to measure? So we know, okay, this was the target, what we have achieved. Third one I think of could be the ROI, right? What we are investing, what we are getting, and we also have to have a timeline associated with the numbers so that we can measure on a progressive basis. Otherwise, you can't measure completely up when the period ends or the project is over. Next one could be, I think, benchmarking. With if you have know something similar in some other industry or your peer group, so that again you can compare and see. Then now along with it, in my view, when we are talking of measurement of the financial impact, we need to have a metrics for the qualitative assessment also, because you are talking of a strategic thing. So now for that you need to have a qualitative assessment also. It's not just about quantity or how my budget was 10 million, I spent 9, I am good. But what is the quality? That is key. Then a big part is obviously the stakeholder engagement, because they should know what you are doing. And then the last but not the least is communication in terms of transparency and accountability. So people know there is nothing hidden. Whatever is happening, you are sharing with them how it is performing, and accountability has to be fixed for the metrics, because as much as accountability is fixed and you know who is responsible for what, we can drive it better instead of something lying, falling in between the cracks and nobody is responsible. So that's what I feel. I think.
Thank you, Mayank. There is a very fundamental question about measure. I think there's a lot of things about measure. So, in my viewpoint, anything and everything in life can be measured. We very qualitative thing. Person A is better or person B is better. We do it through appraisal. I'm not saying it is right. It may not be right. For example, it's again sometimes it becomes perception based, but then we still measure. Coming to the second point, and early on I kind of picked it up. For example, a green chili. How hot is that green chili? There is a technical measurement available for something like how hot the chili is. So when a lot of people are aware that Guntur chili, or these are supposed to be the hottest chili in the world, one of the hottest chili in the world. There is a measurement criteria there. Now, just to shift gears, all of us have some kind of a favorite restaurant where we go to, and you find that there is one particular dish or a few dishes which taste exactly the same month on month, day on day, whatever, year on year. Why? Because there is a proper recipe in which it gets measured. slightly kind of moving off. There is a where my office is. There is a tapriwala, a chai wala, who's like literally on the road. He has a stall there. And the other day we were just kind of we were down, couple of us we were down, and we saw that he was making tea, and we said he was periodically looking at the watch, and he said, "What guys? What are you doing?" He said, "Sir, this has to be boiled for 18 minutes." So we got interested. A guy who's on the streets making. So he was a decent guy, whatever. 18 minutes he has to boil. And then I kind of, obviously it creates an interest. And you said, Kivas, okay, what more can you do? So he said, sir, I need to put whatever 5 liters of milk liquid. I need to put, so this is the proportion of tea and the sugar mixed together, which I need to put in. And believe me, I've had tea from him for quite some time. It tastes exactly the same. So all of this comes back into the measurement criteria. And I think it's important for all of us. And I'm sure all of us, when we deploy money in terms of marketing, media spends, it's a nightmare for a CFO. I need to put 15 crores into media. But then in today's world, there is a measurement which happens whether the media is effective or not. So I think measurement becomes so important for all of us to track. And we do maintain different levels of measurements that we undertake, whether money which is there. I think Mayank did talk about various elements from a communication, timeline, ROI, blah, 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 which is all very important. But all of us have our own set of metrics in the way we look at things in terms of how we measure whether that the effectiveness of, let's say, a campaign, a spend, or an activity has happened or not. Ultimately, if we were to reach the final goal that we are targeting, it has to be through a series of measures, what we are targeting for and how have we reached it. So I think that's the way we see measured, and that's the way we see it happening.
Yeah. So thank you so much for your responses. So I think both of you, talked about definitely communicating the why of measuring a certain KPI internally to all the stakeholders to ensure that everybody is aligned and on the same page. And on the other hand, Siddharth, you talked about measuring the impact of the investment, which is possibly the most important element. You want to add something?
Yeah. So I was about to add on that measuring the impact of investment, and I think that's where it becomes tricky. See, what is running? It's still comparatively easier to measure something which is new and which is kind of it's kind of a technological investment. You don't know where you are headed to. It's a moonshot project. How do you define the success metric? That becomes super critical. It may not be quantifiable, but there might be certain success metric which you can define internally, which may not be even qualitative metrics, but at least you know that by investing so much, I want to get there, that my at least product market fit should be available, or at least I'm able to see a product which I can go and take it to the market. So different milestone needs to be defined clearly, because while we know we are living in a very agile world, but at the same time, as a CFO, it's our important responsibility to know how judiciously we spend the money, right? So we should know when to pull the plug. That is where measuring and clearly defining the success metrics, even in an unknown territory or uncharted territories, is super critical.
Absolutely. So we are all utilizing the shareholder money to expand and grow within the organization. So obviously we will be answerable to them, not just on a quarterly basis, but at every juncture. And you made like an excellent point about these moonshot, projects, which are aimed at long-term growth and sustenance of the organization, that it's very important to keep recalibrating time and again. And throughout this conversation, one word, technology, and different things which you are doing internally within your organizations has, come to the fore. So my last question is pretty much, on that, what are the emerging trends and best practices in strategic financial leadership that organizations should be aware of? So we are talking about the trends, not necessarily just technological, but what are the trends? Upma, I would want you to maybe start by responding to this question in detail. And for rest of the panelists, it'll be like a rapid fire.
Thanks, Medha. On the trends, what was the emerging trend? Yeah. So, again, we talk about the sustainable growth. The trends is like if I just talk about the finance, we already have all the data available, analysis is available. What is the next level? Partnering with business. So effectively, the CFOs are now becoming the business CFOs. They've been sitting with the businesses, they've been participating in the discussion making, be it product launch, be it any process improvements. So they are now becoming the partner with the businesses. With that, the whole agility comes in place. The mindset changes how we are spending, and the whole piece of, the CFOs are typically onto the cost. They are moving from the cost to understand the value creation. The moment you understand the value creation, and that is the long term, they will start thinking about the ROI. On the trends is nowadays, a lot of industries, and that's happening in our company as well. It's all availability of the real time data to the business partners. Let's not shy away whether you make mistakes and all. They should have real time data so that they can do the course correction as they are doing their business. That's something very, very important. And the predictive analysis. What if you will increase your sales, say by X percentage, how your ROI will look like, and if you will reduce it, how it will look like. That should be handy for them so that they can take the decision accordingly. Third thing is like collaboration comes extremely important. And on the trends is CFO is like wearing the business hat. That much I say. And technology is playing such a large role, whereby today you have your sales, you are predicting how the things will happen. And in your predictive analysis, you are also creating the worst case and the best case scenarios. So while CFO is talking about predictability and all, I always make sure that please take care. We also responsible for managing the risk. So if the risk is there, you have to carve out certain percentage for the risk, for the contingency, so that you're prepared and you will never have such certain sort of exigencies that comes up into your P&L. And that's something I can talk about.
Sumedha, I'll try and keep it very, very short because you said rapid fire. So from a trend perspective, two things which I feel is super critical. One is environmental and social impact. We are all talking about value creation for the business, but at the same time, how does that value creation impacts the environment and society as a whole? And that's not for somebody else, but it's for the business itself because it's going to increase the cost for the business at the end of the day. Second is digital transformation. We are living in the world of Gen AI. We have to transform our business, and it is not a one-time activity. It is an ongoing, continuous effort to keep on innovating and re-innovating your business processes, business models, and so on and so forth. From a best practices perspective, I would say proactive risk management is super critical. Not only telling people that this is risky, but going forward and telling them, yes, this is the risk involved, but these are the mitigants which you can follow, and let's go down the path as a business partner. Second, from a best practices perspective, is human capital development. The world is so dynamic, things are changing so fast. We all, at least I'm born in the era of when Excel used to be the new thing. Today, we are living in the world of Gen AI, right? So things are rapidly changing. We have to invest into human capital development, which is super critical. So these are the things I want to put it on the table.
Yeah, thanks, Vikas.
Just a quick line, I would say. For me, it's all about data analytics and how we can put predictive analysis into the business to ensure that the proper decision making can happen. So that's the way for me.
Coming in the end, almost everything is covered. So I'll just put it what way today's CFO is kind of co-pilot with the CEO, right? You are not out of the cockpit. You are in the cockpit as a co-pilot. So that's the way it is. And obviously now today's CFOs are also doubling up as the chief risk officer, and even with the BRSR coming up in terms of a big way in terms of sustainability actions and reportings. Because when we are going for reporting, you have to get into so many, and you realize that, okay, this is what you can do. There is a big thing, big set of actions which you need to do because you are not even measuring them so far. So that's what I would add. Thank you.
Yeah, thank you. Thank you to all the panelists. So just to sum it up, what we all, discussed today about was, all the different aspects and beyond finance as well. That financial strategies are obviously very important for sustainable growth, and they include multiple aspects. It is maybe efficient resource allocation, that is managing all of your investments in a strategic way. It is all about risk management. That is not just, looking at what you are doing today, but what could be the potential risk, and measuring the risk. And then, looking at the mitigation strategies as well, as you mentioned, Vikas. And that is, pretty much like resilience building measures for your organization, so that you can sustain as a true blue profitable organization, which is on the path to exponential growth. And some of the things which we talked about was sustainability as well, and CFOs today being the business CFOs and partnering with all these stakeholders internally within the organization, being also, responsible for external world, responding to the external world, that is to all the shareholders. So in nutshell, I did promise all of you a power-packed, punch-packed, insightful session, and that is what we delivered. Thank you so much. I hope that you found it very helpful. Thank you to all the panelists for sharing your views.
Thank you. Thank you so much. Your picture, please. And thank you, Sumedha, for moderating that. Aye. Thank you. Thank you so much. Thank you. Okay, so from financial leaderships, from ethics and integrity, from financial innovation, financial resilience, it's now time to move towards analytics. Our next panel is on empowering decision making with advanced financial analytics. And to share their views on the same, please join me in welcoming on stage Mr. Bharat Agrawal, Director, Finance Diversity. Joining sir is Mr. Mahindra Lodha, CFO, Bloomsbury, India. Joining them is Mr. Saibal Sen Gupta, CFO, Orient Electric, Mr. Sridhar Toshniwal, Director, Finance, CK Birla Healthcare. And this session will be chaired by Ms. Rima Badori, Editorial Lead, BW Business World. Let's please welcome the ladies and gentlemen to the stage. Thank you. Thank you so much. Thank you.
Good afternoon, everyone. So we have been talking about financial leadership since morning. We have been talking about resilience. We have been speaking about, how sustainable growth is required. Coming on to a more critical stance or more intense stance, our panel is about empowering the decision making with financial analytics, with advanced financial analytics, rather. Before I start my session, I think everyone had lunch, so we can give a big round of applause for our panelists. Thank you. Thank you so much. Okay, so when we talk about these advanced financial analytics, when we talk about the decision making, there's a lot of new tools and techniques that are, being used. How are we leveraging that in order to extract actionable insights from the vast amount of financial data that we have? So if I start with the topic on a more critical stance or more intense stance on it, if we go on with what are the key benefits that you look into when we are integrating these advanced financial analytics into the decision-making process. Mr. Agarwal, if we start on with you, like if you can, start off with naming one, for example.
Data analytics, right? The name itself says the availability of data. So I would say for you to create anything that you call wow, first availability of the right data is what you should ensure. So that's first piece that I would like to start.
Okay.
Yeah.
Lodha?
So, good evening. Thank you. So, if you talk about, say, one of the advantages of the advanced financial analytics, I would say once the right data is available, it's been cleansed, it's been verified, it's been that this is the right data, then you can get the predictive analysis, analytical information, which you can use to say cost reduction, to say how you want to plan your strategies in the future, and a lot of things like even compliances for that matter, that are we compliant, are we capable enough to take care of things where we are, is the data, suppose the data is sales is growing, are we enough, do we have enough people in the our compliance team or our finance team to process that data, to get the reports, to get all the things. So I would say from the advantage point of view, the major would be cost reduction and enhanced strategic planning.
Mr. Sen Gupta?
Yeah, I think, Rima, you mentioned a very critical word, which I would like to emphasize upon. And over and above what Bharat and Mahendra, my esteemed colleagues, has said, I agree with them. And that is integrated financial analytics. I think I would like to harp upon that word integrated. Let me remind you, the journey started probably with the ERPs of the world some 30 years back, where the whole concept of integration came in because it was enterprise resource planning. It is not a functional system. In integrated data analytics, what happens, the whole enterprise gets associated. While data hygiene, the data cost, compliance, everything is absolutely necessary. But question is, for decision making, who owns that decision? Who owns the action? That is very important. So when you have integrated data analytics and decisions trigger from there, it becomes cross-functional. It is no single individual's baby. It's an organizational responsibility that will drive business results. That's where integrated data analytics play a very fundamental role.
Mr. Toshniwal?
So I agree, actually, what taking Saibel's point further. See, what happens, like when we used to actually think about financial analysis earlier, it was largely a variance analysis. And I always considered financial analysis little different than the business analysis. The way finance as a function has evolved over last few decades, it is more like what is the value we bring on table for the business. And that's why I think having the insight on operations and adding the financial analysis, which actually integrates, as the right word Saibal also used, what is the value which it brings? Like in the healthcare industry, like where we work, having a very critical hospital-based KPIs are extremely important rather than just a normal basic financial analysis. So that's what I would summarize the point as.
Thank you. Mr. Sehgal, you spoke about, the implementation of it. We all spoke about the, key benefits that advanced financial analytics has. But when we talk about the challenges, of course, understanding and getting to know about both sides of the coin, there are opportunities and challenges in every industry that we witness. But what challenges do you foresee when you see the implementation of these advanced financial analytics into the organization, whether it be data, whether it be privacy or security?
Yeah, that's a very, very important point, actually. While all this looks to be very fancy and final results are very, very impressive, no doubt about it, which touches our daily lives, but the challenges are far from many. The first big challenge, I think Bharat touched upon a little bit on that as well, is the readiness, the data readiness. And it's not only the data, the whole IT architectural readiness, the business readiness, most important part of it. Is the business ready? Is the mindset ready? Is there a top-down approach? Is there a right, what is the tone at the top? Is there a ownership right at the top that drives down, trickles down? Because normally which happens is adoption becomes a challenge, change management becomes a challenge. You will spend crores of rupees and you will get it implemented. We have faced in our organization where adoption has been very, very slow. Our digital readiness was there, but adoption was very slow. ROIs were getting delayed. So therefore, it is very, very important to assess all these parameters. And then from a technology perspective, that what is the readiness? A big thing, let me just touch upon. We started a big initiative, which was all based on AIs and MLs and all of that you can think of. It was SaaS-based. Halfway through, we realized our masters are not in place, which is a fundamental core. And we are in consumer durable industry. We were doing a transportation model, which was all AI, ML linked and all that. And all ROIs were calculated theoretically that this is what that whole functionality will do. But then what happened for a transportation model to work, it is very important that in the masters should carry accurate information about volumetrics, which was incorrect. And if it is incorrect, it is garbage in, garbage out. So that readiness is very, very important to check box that yes, we require these 25 things in place. Before that, we are not going to start. So therefore, just a piece of advice, and this is what we are doing right now in a very, very interesting project, which is going through completely AI enabled. And that is, we are to be doubly sure before putting the money on the table. We have advised to do a POC, a proof of concept. You do a pilot or a proof of concept for a few months, weeks, depending on the project, the magnitude of the project, then test it out and see whether it really works for you. Are you ready to scale up and do a full scale? When you get convinced, then you dive into it to have the assurance of the real business benefits.
Understood. Mr. Agarwal, yes, coming on to you, I saw you, agreeing with Mr. Sen Gupta, and, you spoke about readiness. According to you, how do organizations overcome these challenges while implementing these financial analytical solutions?
See, over a period of time, right, we have become a set of company or a setup ecosystem where people rely more on their gut feel. People rely more on their sentiments. For example, if I'm doing a budgeting for next year, somebody would walk up to me and say, look, I'm going to do 30% growth next year. But how it's going to come? The fabric of the organization has been driven based on the people's emotions, reactions, and their passion to do the business. We changing towards a place where we look for a data-driven setups, financial analytics. A whole lot of a fabric change in the organization is needed. And that starts, as I said, from the data readiness. And it is not only a finance job. Let me make it very clear. Yeah? Finance plays one part in it. Everyone has to come together if we have to drive an organizational related change, right? From your, say demand planning, production planning, manufacturing, all sort of a vertical, right? They have to come together, think about it, make sure we have the right data in place. Post that, we build further things on it and make people used to look into that. Whatever you do, if people not using it, still bypassing it, it won't serve the purpose, right? So I know a place, it's a big company where a friend draw a nice project in terms of making a AI-enabled tool in place, but the sales folks are not even looking at it. So imagine the entire efforts, investment that has gone behind it. So it requires a whole lot of a change in mindset and the fabric change in the organization for you to get the result.
Understood. Mr. Toshniwal, if I, ask you for more challenges in this industry and how are organizations, overcoming them with these financial tools, how would you, this financial analytics, how would you progress that?
See, I think technology is only an enabler, right? And we have experienced, and at least in my personal experience, as a finance function, we always play a catch-up game. And when technology is rolled out and then we start thinking about, okay, we need to roll this out and work towards it. Just look at the way ERP implementation things, right? There are still many organizations where the large ERPs are still not in place. In fact, many of them are still using the nascent technology and still talking about AI. So, it is a contradictory thinking in itself in case they think that, okay, we will enable AI. sometimes I feel AI is a buzzword which has actually come in the picture, and everyone is just jumping on it. I think it reminds me like when I was actually in the initial stage of my career, there was a Y2K problem which happened in 2000. Everyone was talking about Y2K without even knowing what is Y2K. So I think that's what is happening in case when people use the term Gen AI and AI. See, AI will work only when there is a proper way of data capturing, and at the same time, absolute clarity amongst everyone who is going to use that AI tool. Then only I think it may work. But at times, the way data is captured, it is captured by some teams working on it. At the end of the day, then it comes to finance for overall or the last mile processing of information, which is either recording the revenue or making the payment. If that is only not captured accurately, I think no tool can actually work because the logic may not work to define the technology function to enable the usage of AI. So the way we have been working is that we need to be clear in the solution what we want, whether there is a tool which can help us in delivering it, whether it's an operating system, a finance system, or an artificial intelligence tool. That's why we are trying to actually work toward it rather than going by the fancy terms only. So that's how we have been progressing.
Just to add one point there, the way organizations can deal with such point is to have the review mechanism based on such tools. Today, what happens, ironically, you have all the fancy tools available. For example, you have a Salesforce available, right? Where your territory managers to everyone else is working on that. But when it comes to the boardroom, you expect a nice PPT to come to you. That's where you defeat the purpose and people start bypassing those tools. Yeah.
Just to add a small point, I think the collaboration is equally important when you have all this and like a large organization where your different stakeholders are there. So collaborating among once the data is picked up and this and that, maybe finance probably uses the most data, but it is equally important for all other stakeholders. And it's a real-time information availability via dashboard, or maybe that gone are the days where you will wait for email to come and say, okay, this is the data, this is sales for the month, quarter. Those are all gone. So you need it at the fingertips. So all these, after all this happens, you collaborate and you have the real-time access availability of the data. That probably will, shorten all the challenges and will take it into the right place.
Understood. Understood. So, Mr. Lotha, coming on to you itself, Mr. Toshniwal mentioned AI. I mean, when we talk about advanced financial analytics, how can we not talk about AI? AI being the buzzword, AI, people knowing what it is, people not knowing what it is, everyone is talking about AI. So when we bring artificial intelligence or machine learning into this play, what role does it have, in enhancing the predictive analytics in system?
So the major role, as I said in the beginning, it talks about what is the advantage of it, why we have it. If you talk about why we have it, because we want to predict what we are going to do next quarter, how the investment is going to be placed, which areas we are going to go into. So that information will come from data analytics. So that is where it's going to be very important to have the right set of data and the right set of systems and the right set of stakeholders who are behind the transformation, that yes, we are going to adapt it and then we are going to use it.
Got it. Mr. Toshniwal, your views on that, since you mentioned AI as well. What role does it play in enhancing the predictive capabilities into the financial analytics?
See, I think we focus largely on number analysis. I think for number analysis or developing some predictability, there are still various tools which industries were anyway using it. Now, what is happening? Some of the tools which people were using it, they started associating that with AI. Actually, AI is an intelligence what we are creating in function. If you ask me honestly, the areas where we need more intelligence is the technical side, not just a purely transactional side. Because if let's suppose, as a finance professional, if I talk about beyond numbers, and if someone asks me, okay, Sridhar, I have to start office in US, and in next 15 days, the branch should be up and running. I will be thinking too many things. How do I start it first? Because that will be the first thing. Generally, what people will do, they will rely on Google, and that's where, you start taking wrong decision itself. What we need, an intelligence tool which can help a finance professional not only in doing the analytics work on the numbers, but helping them in actually achieving the true meaning of predictability and assisting them in that intelligence which is artificially created. So yeah, that's the thing. I hope it answered the query what you had on the numbers.
To add on that, Rima, and what Mahendra and Sridhar talked about, I would like to provoke one thought with everybody. I'm leaving that thought with you. Somehow I believe artificial intelligence cannot supersede human intelligence. Never. The big question is that artificial intelligence is a means, it's not the end. I, as a finance person, as a CFO, as a finance leader, has to decide what is the end I'm looking for, and then use the means to find to that end. Therefore, I have to be tech savvy. I have to know what I want, and accordingly, I will have to develop the means, the AI. So therefore, this is very, very fundamental, because many times we have seen, we go and take a plunge, we do the AI or whatever output comes up, that output does not suit either does not suit the purpose of the business, or it does not suit the purpose of the financial outcome that is desirable. End of the day, what is it about? Either problem solving, or it is business growth, or it is profitability. These are the 2-3 things, or it is compliance. These are the 3, 4, 5 things that analytics will try to address. Now, if I do not know where I have to reach, what is my destination, how do I know whether I should take a flight or a train? That's thought I would like to leave with everybody, because it's very important. I have seen people lose tons of money by making wrong choices. I can go to a SaaS model. I can develop and codify a system myself. All these are very, very fundamental decisions, because resources are involved, money is involved, investment is involved, and returns are prime for a business. I would just wanted to touch upon that.
Mr. Agarwal, coming on to the AI and speaking about the AI aspect itself, Mr. Sengupta, put it that, it helps in profitability, it helps in growth. What role does AI has in enhancing how much productivity takes place, or how much time reduction is there while we are using AI or machine learning is there?
It does play a great role, and I can quote a practical example where I used to work with an oil and gas company almost 5 years back, and I had almost 27 countries under my purview. We used to have a large number of people who used to just do a bank reconciliation, receipting entries. We just installed some bots, 2 bots, who every 30 minutes will just pull in the statement and do the accounting entries. And we just shifted those people to do more analytical job than the operational job in which they were investing their time. So the entire future of finance, and I'm sure all of us are experiencing in our space, is if you look at the pyramid, right? The entire base, 50-60% of finance is becoming an operational finance, which nicely can be used and leveraged with the help of machine learning. On the top, you have 20-30% space where the analytical job, the strategic inputs come in. And then on the top, you have few finance folks who does the business partnering, who drive the business decision making, right? So in the middle of the pyramid is the place where you use this data that gets generated at the bottom of the pyramid and helps know business what is going to be the future, right? To a point, by workday 3 and 4, I'm sure all of us know our books are closed. So the past is reported. But what is going to happen in future is the question that always a CEO will ask to the CFO. If there is a disruption in the Red Sea, how much airlifting can I do? What is the trend and how it is going to impact my future P&L is the question that will come in. So if you have a robust fundamentals in place in your pyramid, what I was talking about, and your middle pyramid is good enough to give you the analytics, you can do a solid business partnering, which is what missing to a great extent. So yeah, that's how it can be productive and efficient.
So what I can understand is AI and machine learning is definitely, helping in boosting productivity. As you mentioned, the pyramid example, at the bottom of it, it is there. And while Mr. Singh Gupta mentioned that, of course, it cannot replace human intelligence. I am a big voucher for human intelligence. Uh, does it? I mean, does it definitely helps in creating more decisions in the future?
It does. It does. It certainly it creates a level of a data certainty and a reliability for you. For example, right, you have option of getting all the import data available from the customs. If your tool is good enough, smart enough to pick up the data, tell you the trend and say, look, this is the change happening in the import space, you can drive a lot of future decision based on that. So yes.
Got it. Understood. Thank you.
So I'll just add one quick thing, like he was talking about example, just a real life example, like we are in the publishing industry. Our principals in UK decided that we are going to sign up for this CO2 reduction. So most of the books were imported by air across the world because that was the fastest way of getting the books there. And they had the data of last few years. And they said, okay, fine, we flew 30 tons of books around the world, and this is the what we generated. We want to reduce it. How can we do it? Now, then it became very, very easy to make decisions on technologies like print on demand. You order a book, the printer will print for you, and then it will ship out to you. I mean, you order one book which was published maybe 15 years ago, not available in India, but you can still order it. It will come out to you. Business benefits, cost reduces, CFO is happy, no inventory carried out, and the group is achieving its target. So that's the impact of AI when you talk about it, that you have the data available. What can we do with it?
Lovely. Understood. I'm actually very delighted that I have such a diverse panel who can give me, instances of different areas, different segments into it. Okay, so now when we talk, I mean, AI, of course, we are somehow looking at it at the future, but I'll leave AI for the time being. Uh, Mr. Sengupta, we were talking about, talent and skill set. And while we are talking about the future, uh, what skills, I mean, talent is something, again, a very important word in today's date. A lot of people, a lot of youngsters are sitting here actually. So what are the skill sets that you look into when you, look into this industry of financial leadership?
Yes, Rima, that's a very, very relevant point you touched upon. And I strongly feel and advocate the skilling is very important driver behind successful data analytics. See, to me, the skilling or talent, as you talk about, has two parts of it. Now, when you go to advanced data analytics through whether it is artificial intelligence or any other technology, so technology-enabled data analytics will require two sets of skill sets. One is the pure techie part of it, which is the codification, right? Which you have all the tech world getting immersed into the codification. The other part is also equally relevant, and that is a digitally or a tech savvy finance manager. If end of the day, what will a coder do? How will he codify? If you do not, it's like going to the restaurant. If I do not define what I want from the menu, how will the chef cook that for me? So it's very important, just by having coders and having some ready off the shelf SaaS applications, which is freely available in the market today, it really doesn't help. That way, if you see, even your Microsoft O365 suite has tons and tons of AI built in it, which we do not realize. We use it every day, every moment, right? Google has it, everybody has it, right? So off the shelf solutions, tech solutions, I'm not talking only about AI, any kind of tech solutions are freely available. Point is not that. Point is, it's like a pack of cards. You have 52 cards. How do you decide which card to play on? It's on the player. So similarly, a finance person need to have a fair degree of tech savvy understanding. What exactly do I need to use and how? Now that in these two places, I think there is a little bit of a need gap, both from a tech skill perspective and both from a tech savvy finance perspective, because we consider ourselves very tech savvy, are we? And then does the both ends meet? Because the requirement, the need versus the delivery, they have to go hand in hand. Now, today, if in the tech world, if half of the world feels, well, I do a 6-month certification and I become a coder or I become an analyst, it may not always be true. And I have seen live cases where people fail to satisfy the basic tech requirements for a development. This is where a point of concern is. Similarly, a finance person in today, let me give you my live example. Well, I belong to a little bit of old school of thought. I am very, very long time into the industry. I'm a chartered accountant who qualified way back. So in those days, there is to be in the curriculum something called EDP, electronic data processing. That's it. We used to study some theoretical concepts, definitions. That's it. And you pass the exam, you become a chartered accountant. Nobody taught us how to use a computer. Forget about Microsoft. It was non-existent those days. From that day, fast forward till today, I have not only become a digital manager in my existing company. Within 2 months of my joining, I was asked to do the complete digitization of the entire company. Now imagine if that has to evolve over a period of time, and I look upon in this audience, I find a fair cross-section of very young talent sitting over here. My advice to all of you, get ready, guys. The future is very, very going to be very exciting for you. It will be a roller coaster. There has to be continuous learning, self-learning, because tech is changing every moment. You implement something, by the time you implement 6 months, a new tech has come in. That's what is going to happen. And the tech savviness and the tech enablement and the tech codification, all these things have to go hand in hand. And there are specialists in each area. Like in medical, you have specialists in each and every part of the body today. Somebody was jokingly saying there'll be a specialist for the right eye and a specialist for the left eye also. It has gone to that extent into the digital analytics world as well.
Understood. So before I start with my next question, is there any question from the audience that you'd like to ask our panelists? Anyone yet? Okay. No one.
Everybody's bored, perhaps.
I don't think so. I think it's a very interesting discussion. Anyhow, so Mr. Lotha, if I talk about the financial aspects, how do financial leaders ensure that these analytics are being used in in a subset, in a way that it is efficient, in order, and they're actionable, they're effectively actionable in the organization?
So again, it will go to the same thing. If the data is validated, the data is correct, then yeah. And of course, the organization has its own mission, its own strategy, what they plan to do with the data and all that. So this will actually go into that mindset and say, okay, the organization does want to use this data analytics, and this is the predictive. And let me tell you one thing. The data analytics may not be only for finance. That could be for any other functions. You could have the analytics for marketing functions. You could have the, like I work in publishing, in our marketing functions, they have analytics like what is the social media following of the author, or how much, what he does. So the analytics can be from any part of the organization. They can still be used in decision making. And of course, they will be a very, very important part of the decision making.
Mr. Toshniwal, your thoughts on this, that how can financial leaders ensure that the analytical driven insights are being used and being measured in an actionable format?
See, it's being used, like for example, in our industry, digital related measures or metrics play such an important role. Like, for example, we run hospital and healthcare retail chains. Majority of leads who actually come to our hospital or clinic are generated using digital means. So we reach out to patients. It's like a pull, right? Either you push or pull. And it's a competition in the market. So how do you convert those, I mean to say, as a customer? So digital plays an important role. And so if that plays an important role, obviously, then there has to be metrics which actually gives us justification. Okay, these are the measures or these are the KPIs which are actually working out and enabling that, okay, digital as a channel or a medium uh, is the contributor of this much of revenue or footfalls. So for example, when we actually do registration, so even if a patient calls the call center or the hospital, there's a Salesforce channel which actually measures, okay, how many leads are generated using the telecom channels, using the digital channel, using the social media channel, and how many of them are actually getting converted into an OPD, and then from OPD to IPD. So that's how, these measures are getting into place. I feel finance is a profession. Actually, it is much beyond bookkeeping and doing a basic business partnering. If the aptitude is there, I think there is a time when you will see that there are people becoming data scientists from the finance background, because they understand operations, they understand the financial impact of that operational initiative, and any kind of improvisation measures, be it on the cost, be it on the revenue upside, it plays an important role. Like in case of hospital, because I can give tons of examples of the industry where I come from, we do a lot of sense analysis also. Like for example, if a patient billing is happening, the patient might get discharged. Before that, we have to analyze the kind of consumption which has happened of the drugs and consumables, whether that is billed to patient or not. If not billed or remain uncharged to a patient, it means that that revenue is gone. So we take measures in actually understanding the nature in the way consumption pattern happen to figure out whether there are instances or repeat instances coming where the billing is getting missed. So it actually helps in minimizing the revenue loss and not only the cost initiative or cost improvement initiative.
Understood. Thank you. Thank you so much, Mr. Toshniwal. Thank you so much, panelists. And I'm on time, Aditya. Thank you, everyone. I think, is there still any question? I'll still keep it open. Or is it too intense to understand? Okay, from somewhere from the last, can we have okay, one we have from here as well. Can we have a mic or something like
Good afternoon, sir. Good afternoon, ma'am. I would like to ask, what advice would you give to a student who are passionate about finance?
No, good question. Yes. See, as I told you, you have to choose which part of the skill development you want to do, which part of the talent sharpening you want to do. You want to do codification, which also interesting. You can get into data science. You can get into that part of it. But a data scientist has to be fed by the functional people. Now here we are in the finance panel, so that's why I'm talking about finance. So it's the finance guy who has to tell that what is the ask. Now, if you are a finance guy, then you have to be that tech savvy, that what is my ask? That is the skill that you have to develop. That what is the analytics? Forget about AI, forget about anything for that matter. You need to have that sharpness through your financial deliveries, that these are my problem statements. Let me give a classic example. Sridhar just now mentioned about healthcare, how he does it. I will give you an example of the consumer durables where I belong to. Right? I want to introduce a product. Let us say I want to introduce a premium product. Why? Because that will increase my average selling price, that will increase my margins, that will increase my profit delivery. I want to know in all over the country where are my premium products selling, where I will target my launch so that I do not spread it thin all over the country and my launch becomes effective. I'm just giving the simplest of simple example. And this is what all FMCGs and consumer companies do it. So that is where your skill, you have to see where your fascination lies, where your expertise lies, and where you want to grow your career. Be sharp over there and grow. These are the two broad. They're very broad. Within that, you have a lot of channels of specialization further. I hope I've answered your question.
Yes, thank you so much.
Aditya, do we have, okay, we have time? Do we have? Um,
Good afternoon, everyone. Basically, I am from a MBA background. So what we learn in BBA related to finance, the same thing is stressed in MBA. Actually, that what we are not getting the same, matlab, what corporate finance is actually what about. If you are getting the training in the MBA, then it will be better for us to know that actually how corporate finance works. So do you think that the education system has to be changed when it comes to MBA related to finance?
We have shifted to education.
I strongly feel so. Yes, I do agree with you. As we speak, I'm already in touch with a couple of institutes. But yes, I think this is a concern, and I can tell you many of the institute, actually the Delhi-based ones that I'm aware of and I'm closely associated with, are actively thinking of revisiting the curriculum. And I genuinely feel that the gap between the industry need and the curriculum has widened a little bit, and that needs to be bridged. And quite a lot depends on you students as well. When you guys are also selecting your course, you have to be very clear in your mind what do you want in terms of your career progression and career development. That's how you choose your avenues and areas. I don't want to take more time because we're running short of time.
Yes, thank you. Thank you, everyone.
I hope that answers your question. Otherwise, we can talk outside.
Thank you, the panelists. Can you please give a big round of applause? Thank you.
Hello. Thank you so much. Thank you, Rima, for doing that. A picture, please. Thank you. Thank you so much. Thank you. I think you have a lot of students in the audience as well. So अगर आपके कुछ और भी सवाल हैं, I think you can take them on a one-on-one basis with our panelists outside as well. Yes, we can't really cover everything here, but I think an hour, what max it can do is just start a discussion, start a dialogue. All of you have your views, you can of course share them. And please feel free to do so as well. Moving to our last panel for the day. Now, this is on AI-powered financial decision making, redefining the role of CFOs. Now, before I introduce the panelists, मेरा आपसे एक सवाल है, and I'll ask the question again in the end as well. How many of you feel in the audience that AI is a good, let's say, medium or a platform for making financial decisions? How many for good? कितनों को लगता है कि अच्छी बात है? That's going to be a tool to use for financial making decisions. There's one hand. कुछ आके वापस जा रहे हैं. आप मानते हैं? There's 3 there. How many of you feel no कि जरूरत नहीं है? Only 2. I don't see any CFOs raising their hand for anything. This is why I asked. But good, you have opinions. That's a good thing. Chaliye, let's introduce our panelists for this one. Mr. Deepak Rastogi, President, Finance and Group CFO. Deepak Fertilizers and Petrochemicals. Joining him is Mr. Jyoti Prakash Garia, Managing Director, Resurgent India. Joining them is Mr. P.K. Harihara Subramaniam, CFO, India Cognizant Technology Solutions. Joining them is Mr. Tanmay Kumar, Group CFO, Shiprocket. And this session will be chaired by Ms. Meha Mathur, Senior Associate Editor, BW Business World. Let's please welcome them to the stage. Thank you so much. आई थिंक सर आप गलत ही बैठ सकते हैं कंफ्यूज करने के लिए. आधा सेशन हम यही सोचते रहेंगे.
Good afternoon, everyone. So in the previous session also, discussion did, center around AI tools and its efficacy in financial and analytics. And so I think we will carry on that discussion over from that particular panel. And we have a great panel with us. representing various sectors from fertilizers and fertilizers to resurgent. Then you are in the midst of, technology.
In the midst of tech.
The right person to talk about all the issues, but I'll restrict myself to certain aspects.
Sure.
And then you are from Ship Rocket. My first question to the panel is basically, I need to know, is there enough clarity about how best to use AI? Because while it's the buzzword, have organizations gone through that kind of rigorous brainstorming about what aspects to be used, where to be used, and how to be used? So starting with you, sir.
So the answer is yes and no. And what at least we are doing is that we are actually testing all the products right now in AI as well as analytics, what would actually work, understanding where it will work. So we have obviously done a lot of work on supply chain management, especially on the pricing tools, on the decision making. In fact, for fertilizers specifically, we have gone even to the extent that we actually create and get data from the farmers, and we understand their needs, and we are able to place our product based on what the need would be, based on the prediction of the rainfall, for an example, or which area where the crops are grown, what kind of products that would make. The other thing which we are doing right now, especially on the tech side, is for pricing, as I said, what kind of pricing is required, so that the discussion actually ends up into an order. Because earlier what used to happen was that there would be a judgment call from the salesperson or the CSR guy, and we are able to differentiate and get better. And in the earlier panels there was a discussion, obviously AI cannot take obviously place of a human intellect, which is correct, but I can tell you based on the experience that the decision making has become far more sharper overall, the way I see. But it doesn't come automatically. You have to test what you want as a company, and the second thing, which tools would actually suit your requirements the best, because nothing is actually available off the shelf today. Everything needs to be implemented, which is very, very customized and implemented for the specific needs of the company. That's the way I would answer it.
Mr. Gardia.
Thank you, ma'am. In my opinion, what I have seen that in terms of whatever the AI or the software that we are talking about, there are two ways that the company purchases it. It is either that the company knows exactly what they want and then they hire a vendor who and the company tells the vendor ki ye input hai, ye output hai, these are the things that need to be done. Everything the company knows, usko pata hai kya karana hai, and this is how it works. This is one way. The second way is that ki otherwise the sum of the vendor keeps on sending us emails, and then we try to usko bula ke uska demo dekho, uska product dekho. We have understood it from the market ki this is the new type of a product which has come up. Based on the market intelligence, we call the vendor and then we tell them ki you come and give us a demo of the product. Now, in both the things, what is happening? In the first one, when the company knows exactly what need to be done, it is such a dynamic in nature, it is such a cost-provoking thing कि उसके अंदर कभी कोई आदमी change हो जाए, that is actually never get implemented in totality when the company start getting implemented from scratch to end of the thing. Secondly, when any of the vendor coming in and telling us ki sir, I've got a solution for this thing, 90% of the time what happens is that ki whatever the input document that he is wanting and whatever that connection with the existing system that need to be done, wo kabhi nahi ho pata, because if there is a Salesforce which I am using, I have done some sort of a data structure in that way or the other. There is another माने हरी भाई आए और उन्होंने बोला कि ज्योति हमने एक AI का सॉफ्टवेयर बनाया, it will capture the data from your CRM and then it will start doing it. Because my CRM data is not even captured in that way that whatever the Hari sir's the software whatever that Hari sir has developed, वो इसको input उस तरीके से दे के आने के लिए I will take another 1 year. और I have to मेरे को last 5 साल का data, only one field is missing. I might be doing 90% of the thing, only one field is missing. Based on that, whatever is the top of the software that I need to install, that doesn't get installed at any point of time. So as any point of time, whenever I see this software, so these are the two type of dilemma which I always faces. So I've got Hari sir and everybody here, so they need to answer this, that how we need to solve this type of a dilemma.
So before I come to you, I would like to ask you your experience about
Using AI?
Yes.
No, so let me just first add to what everybody said on the first question and come to my experience of it. So very clearly, is there clarity, or is every organization clear in terms of how they will use AI? I think the answer is evolving, because the whole set of tools and technology is growing at such a pace that it's almost impossible to keep track of it. Most of us who use the word AI are using it in the context of a very intelligent BI tool, or a demand planning tool, or a RPA tool. Now they are AI, right? But the level at which AI tools have now evolved, the amount of intelligence that one can use, whether for financial analysis, or for forecasting, or for anything, or just for data retrieval, is unbelievable. I work for a technology company. We have like in a month, transactions run in tens of millions. There are lakhs of merchants on our platform who are transacting. And for us, this is extremely key, right? Now, for a simple, I will give you an example. Our team was making a bot for our customers where they can just chat and retrieve some data in terms of how their performance is. And I was there and looking at the tool which was in beta. And I said, shit, why can't I use it? And then realize that, imagine, we can create a tool which can simply, you can just write, give me a trend of this, and it gives you a graph. It sits on our database, gives you a graph, gives you a trends, gives you insight. We are working on something like this for our finance team, since the topic is that, and we will have that in hopefully 4 months' time. So it is something that I don't think I had visualized 3 months back till I saw that. So therefore, my answer to this is yes, we have used it at many places. All of us have. Do we really know the limits of it or the places where we can use? I think we are learning.
Coming to you, sir, I want to know, he said that the technology is evolving at such a fast pace. It obviously brings into focus the regulatory mechanism. Are the new technologies in sync with the present regulatory mechanism? And also, what changes are needed in the regulatory mechanisms?
Well, that's a very interesting question. And, I can probably explain a few of the things that we do as a company, because we are like one of the thought leaders in the implementation of AI. And we lead in what we call as responsible and ethical AI, coming to the regulatory framework. And this is basically like you're talking about the pitfalls or shortcomings of an AI, and think about how you can actually plan for that and mitigate the problem, right? So coming to think of it, it goes into multiple different dimensions, depending on the industry that you operate in, and depending on what kind of data that you are possessing. Starting with a very simple data privacy issue from a GDPR if you're operating in a in a European market, or a POPIA if you're operating in a South African. And of course, in our own country now, we have our data protection bill that's about to become a law. So now you have to be very clear about how you're going to protect the data, how you're going to make sure that it is really safe, because the entire premise of AI, the success of AI, draws from a very strong underlying data lake, right? And that data lake has to be accessible to the AI engine if it has to get meaning out of it and give you answers for every question that you have. Now it can be a omnipresent, omnipotent entity, almost like the Almighty. It can give you answers for everything, but it needs access to the data. Now, if you have to provide access to that data lake, what is the ring fencing you need to do around your data so that it does not step out of your organization is number one. Similarly, there are countries which have got regulations in place where it says your data cannot cross my country's boundaries. And that's a very, very difficult situation to solve for. And thirdly, looking at the security, which is around the cyber security element of it. Because now life is centered everywhere around cloud, and all of your data is all on the cloud. Now, what happens if there is one instance of a cybersecurity issue? Somebody taps into your network. So those are all different elements that we need to think about. Now, these are underlying plain problems. The complicated problem is that of AI itself. And that basically stems from what is AI's strength naturally becomes its own weakness. AI's strength of being able to crunch data, do deep analysis, do deep learning, and then come out with an answer is itself its own weakness. In what way? Let's say you build a AI engine to, let's say, we have a lot of students around here, and the students are putting in their applications for a job. And you build a nice engine. That engine is going to filter out applications and give you the top 10 qualifying people. Now you have built the engine with a particular logic, but what the AI will give you may not necessarily be of the same logic that you have constructed, because it is going to continuously learn. So it is going to look at every person who has survived in this company, who has been a star performer in the last X, Y number of years. It's going to learn from history and say, for a person to be successful in this company, the applicant should be named Gadia. The last name should be Gadia, and that person should actually be coming from Gurgaon. Then this person will be a fantastic guy. Possible. And I'm not making this up because there is a case law on this. This has happened. And if you guys want to look up, you can research on this, on the name Jared with lacrosse as the sport. This is a particular 2 pieces of info that a system built on its own. It did a machine learning, deep learning, and it said somebody with this 2 characteristics is going to be a fantastic guy. So this is a inherent problem that comes with AI, which actually leads us to a concept of bias. And that is where we have a problem of whether the AI engine is going to really do an ethical job. And can you rein in the AI engine? Do you really know what it is going to come up with? Because you built it with an intent, but what it throws out as an answer may not be completely in your control. And in that form, when you look at AI, it's typically like a black box, right? You don't know what it's turning out to be. So then, are we getting into a trouble here? Looking into the future, are we going into a kind of a bicentennial man kind of a situation, or we are going to age of Transformers, rise of machines kind of a thing? You don't know what we are getting into. So the only way to look at it is focus all your efforts on building an ethical and responsible AI. And when we say that, there are 3 or 4 fundamental principles. You should first focus on transparency. Now, the underlying tenet of the AI, the underlying tenet of your product should be very clear and transparent and should be easily explainable. So one of the things in coming up in AI, which everybody will learn about, is explainable AI is a concept. Now we talk about generative AI, which is shortened as Gen AI. We talk about predictive AI, and there is a concept called explainable AI. Now the chat GPT that we work on, it falls in the category of non-explainable AI. So there may be answers which chat GPT will give you, and this I will tell to the student community. It may not always be right. Please don't trust every answer that chat GPT gives you. It is not intended to be always right. But there are the other categories of AIs which can be built as explainable AIs, where to test out how it is giving a particular answer. Now, there are concepts like sharp values. There is a concept called LIME, which is locally interpretable machine, agnostic kind of explanation that can be brought out of it. So there are different models on how you can bring out transparency. Keep accountability as very important, which is, I think in one of the previous panels, somebody spoke about the tone at the top, starting from all the way. The decision should be very clear. The focus should be very clear on setting the right kind of expectation from the system and taking accountability for it. And then finally, the last point would come down to keeping a human in the loop. AI cannot be just allowed to operate on its own in its own world. It cannot dictate humans. Eventually, in any AI project, there has to be one human in the loop who will provide the supervisory support. And then that is the only way that you can keep this in check.
Just to add to what he just said, right? So since the question was a regulatory framework, while the new law addresses the things around privacy and security, everything else, which is the liability around what the output is and what the quality of output is, how the data will get used, the whole issue of black box, whole the issue of having a transparency about how the algorithm is, none of it even is thought about in the regulation that is there.
And that's coming, by the way. That's coming, by the way. European Union has adopted a law on artificial intelligence last month, just about 1.5 months ago. And US is following suit. And most of the other countries are preparing their framework. So there's going to be something on a specific law on artificial intelligence itself. So it's coming on the way.
Yes, yes. So I was referring to the Indian law.
Coming back to Mr. Rastogi, so what has been the organization's approach towards training aspect of AI? Like when you recruit newcomers, do you look for a certain skill set? How are the training programs happening in the organization? And your own, upskilling efforts in this regard?
So I will give you a live example. We are actually implementing Industry 4.0 at this point in time. And the question was whether the manufacturing folks are actually equipped. And, we have people who are working at the company for 20 years, 30 years, 35 years, because they are day in and day out manufacturing folks. And, we need those guys who actually understand the machines. Not per se the technical part, but, they understand the machine so that the product is actually available whenever is required to be done. Now, are they really tech savvy? Because one of the one of the requirements for Industry 4.0 is that all the machines should talk to each other, so that all the data comes as a part of the data, like which he was mentioning. And then, from a preventive maintenance perspective or anything which you have to do, how the machine is going to perform, what kind of productivity the machine is going to give, where it is going to fail, what product, what part will actually fail, all these things are there. And what we did was that, we actually had a list of questions to all our technicians who are actually working on the shop floor to understand their ability to imbibe the new technology. And based on that, the training modules are actually getting developed. To what extent the person would be able to train himself or herself, or, if he or she cannot actually, because there are some people, who cannot take it. So, you give them a job which is less tech savvy, so that, the organization doesn't suffer, but at the same time, the individual actually does the job where he or she actually likes. So it's a mixed bag, it's no straight answer. And, at the end of the day, it is about your own motivation as an individual, how much you are able to actually learn. Now, with the new age kids, the benefit is that, as they grow up, there is so much of tech, they have actually seen it. But, in the earlier, generations, they have not done it. And they don't feel using it because they feel like, they are not in control of what they are trying to do. And so we are trying to, do our best. But it's a learning for everybody. And the tech is changing so fast that today you implement something, tomorrow, the version would change, third day, the version would change, and you have to continuously evolve as an organization and as well as for the individuals as well. So that is what we have done. And we have huge budget for trainings. Obviously not as much what the IT companies are doing, because they have to do it day in and day out just for their own sake. But for us also, be in the business, I think it has become far more important now.
Mr. Gadia, in your organization, what has been the experience in terms of, implementing AI for accuracy and speed for planning, and also day-to-day tasks, so that, the top management is free for strategic initiatives?
Two things. First of all, I can say that for a company like us also, we are for a smaller companies also, and for a mid-sized companies also, the mindsets are changed. Now the promoter or the company people, they are willing to take more risk, or they are willing to experiment more. They are willing to take कि चल एक बार try करके देखते हैं एक बार. So that type of an attitude which has come up, so that's again a very, very good thing. Again, as the Haribhai told that since we were trying to implement one chat GPT type of a concept in our company where we have got all the HRMS is a different software, our CRM is a different software, our accounts is a different software, our project management is a different software. So everything we are managing, but it is through a different platform that we are managing. So we were trying to see कि ये जो 4 या 5 software, whatever the 4 or 5 software that we are having internally, how we can have combined at one place, and it should have a chat GPT type of an answer that whenever we want any question, the chat GPT type of it should talk to my HRMS software and take something from the accounts, take it something from the project, and then give us the thing. But what happened was that either the cost of the smaller mid-time company, which were affordable, we were not able to trust ki, sir, the data of that research and boundaries, it will not go out. And what is the logic that they are using? They are not able to convince us from that cost perspective or from that logic perspective. And from all the bigger companies that we were talking about, the cost is so prohibitive enough for us that we are not able to take that plunge, whether we should go ahead or not. So now we are at that dilemma ki what we should do. We have the idea, we know what need to be done, but the cost, वो AI बोलने से ही सर वो cost 10 गुना बढ़ जाता है सर आप लोग के यहाँ. वो cost के अंदर लग के आ जाएगा, वो AI बोल देंगे. So what is now happening at the present moment, the cost for all the mid-sized companies for implementing anything of that sort, it has become such a cost prohibitive matter. And plus it is, and it is like a black box to me. We don't even know, ki, sir, how the things are getting connected. At least from me, if I'm doing some HRMS software, if I'm doing some project management software, I know the input. I exactly know that what they are doing, they are just sorting the huge data point for me, whatever the relevant information we want, it is coming, how it is calculating, from which cell it is coming, what is the data structure that they have. We are exactly knowing what is happening. But when you talk about something ki sir, ये तो AI बन के आ जाएगा, तो it means AI बन के आ जाएगा means हमको नहीं पता है calculation कैसे होगा. मतलब AI बन के आ जाएगा in case if any person is using telling कि सर ये AI लगा रखें, it means I don't know कि सर ये calculation होता कैसे. So it means in case if there is anything which is explainable, it is not an AI. If it is not explainable, it is called an AI. Sorry, sir. So this is what our understanding from a common layman perspective is.
I think just going back to it, probably you need to consult somebody like us who can give you real, clean, understandable AI, right?
So coming to you again, sir, because you would get a lot of concerns from across the industries. If you can highlight some of these concerns and how to address those here.
Well, I think, he just gave a bunch of concerns. There are a lot of concerns which will keep coming from different industries. But I'll tell you, the concerns start from where? The root of the problem is not truly understanding what is AI all about. I think it's all about the hype that's created around AI. In fact, we have published a separate ebook and that's available for download on our website, Beyond the Hype of AI. And, looking back at, how CFOs treat the world of AI, 2-3 years back, obviously during COVID times, everybody was on the internet, all data had come to the cloud. So you had a lot of opportunity to bring AI into life. That's how AI happened. But it's not like AI just came into life yesterday. Do you imagine when the seeds of AI were sown? Any rough ideas? Can you imagine? Rough shot? 1950s. The Alan Turing test that we are talking about today, Alan Turing's time, it's from the 1950s. A concept of AI actually took place from there. 1956 or 54 somewhere in MIT lab, a gentleman developed what is today's chatbot. He developed a concept called ELIZA. He developed a chatbot and it got so wild, so nicely done, programming, that he had to literally kill ELIZA at some point because his secretary was not actually addressing or answering his calls. Secretary was busy chatting with the ELIZA. And then AI was just thawing for all this long. There was a long winter period and it again picked up steam because now all data was available. Like I said, the core concept of data lake being available, etc. It has brought AI into life. Now, to address the concerns, what should happen? From a CFO standpoint, again, I'm not as a IT company. I'm now talking as a CFO's world. Most recent surveys done with with large CFOs has actually proven that CFOs are now looking at this as a serious concern. just exactly aligning with my friend Jyoti. You know, in CFO's lens, there were a list of concerns, top concerns in their viewpoint. The top one being lack of access to capital was the number one. The number two thing was a hasty AI adoption. And this is a worldwide top CFO survey. The top two, number second risk is hasty AI adoption. And people have started to see the reality of it because everybody can just pass off some product saying that, hey, this is like, this got AI. It's an AI enabled product. Please buy this. And that is where the problem becomes bigger. So how do you address that? There are two ways to it. One is to either go for a very, very established AI product. But in today's world, you cannot call anything as really finalized, fine-tuned, perfect product because the world of AI itself is still evolving, right? And the second option, like Mr. Deepak said, is to invest in building AI internally, which companies can go for. But there is a big challenge there. If you don't go with the right partner, then it is actually designed to fail. It is like, typical of any big transformation project. McKinsey's reports always say, any big transformation project, the success rate is less than 30%. Now, if it comes to a digital transformation project as big as an AI thing, then the success rate is even lower. And even if you successfully implement an AI project, the ROI is going to be in the smallest single digits if it is not done in the right way. And within the next 1 year, 6 to 12 months, it will start falling. Because the product or the solution that you're implementing has to be something that can scale up. And there has to be continuous work that has to happen. There has to be a right team that is available who can explain what is inside the black box also, right? Because the business keeps evolving. As your market changes, market volatility, the customer preferences, all this keep changing. For instance, I'll give you a simple example. If we build a prediction engine for for estimating when can you expect collections to come out from Resurgent India. Resurgent is one of your customers. And it's a standard fact that they always pay in the third day of every month, right? You build an engine for that. The engine is all set. Now, suddenly, Jyoti decides that he will not pay on the third. His business has changed and he wants to pay only on the 15th. Your prediction engine will go wrong. Unless you have got this as an area that can be edited, that can be addressed, and the AI engine has to be continuously tweaked and changed for all these changes. So, people build AI solutions without understanding the core of the business because AI is only helping you to solve an underlying business problem. It's only a layer. It's only something sitting on top. But if the core of the business problem is not well understood and not translated into the AI solution, then your product is designed to fail, clearly. So the layer can always be built by techies. But the solution to the problem, your business problem, should come from a CFO. And that is why AI design cannot be just taken in isolation by a technical person. They cannot build a right AI for you. It has to be built by a functional person with the right inputs about problem solving. What is your real issue? To solve the problem, what is the design? Has to come from the functional guy, typically CFOs, who understand the business fully. And then the solution is built. That will be the right way to address the solution.
Let me understand. In my opinion, whatever has been successful in my journey in whatever the IT adoption that our company has done, that whatever the complications in terms of search engine that I have made within the company, that has been successful. Because earlier, if you talk about if you go to any of the search engine, if you talk to him only one question, it will be answer. But and this, or this. If there is a multiple questions into one question, if I'm asking 5 points that the software has to go and search, there are something and there is something called or. If there is a very complicated question that the IT is perfectly able to answer, that is where it is there. But if I go and tell them, because I am telling them, I am asking him a question which I know my question. I know ki sir ki 1973 or whatever is my date of birth into the date of birth. What was the American president date of birth? Who was the American president at that point of time? What was there? You can have something question after question after question. And then whatever the answer is coming, that till that time, the complexities of the question is getting answered. It is all right. That's where the rapid processing, you can call it AI, you can whatever that. But till the time you can start telling me what would be the commodity price fluctuation, If you can tell me, ki, sir, what would be the expected rating, what would be the expected default rate in this company, that's where the entire prediction and that's where the entire thing starts getting it wrong. You can have a curious case, multiple question. You can have a 5,000 page question, and then the IT will give you a fraction of a second answer. Till that time, it's all right. Because it means what I've understood from a layman perspective, if you know your question well, then only you will get the answer. If you don't know the question well, then the answer you can't rely upon.
Just simply add, say, these are enabling tools. So you cannot 100% rely on these answers. That's number one. Second thing is that whenever there is an answer from, especially for the business, you have to put your own human, obviously, intuition and then say, whether it is right or wrong. And most of the time, it has to be tested through the business. It cannot be, you just pick the answer and it is right. It never happens. You test it out multiple times over and then say, it is really suitable for implementation or not. Otherwise, you just shred it off because, it is not giving the results which is required to be given. And we have several instances in our company wherein, we don't get the results which we need. And then, we don't want to actually implement irrespective. And this is a investment, I would say, that, in the process we have learned, what could be the right way to do it. And the business has to actually implement it so that they can assess the actual results. When I was talking about the pricing or when I'm talking about this thing, we have seen certain results and then we know how much accuracy it can bring in. Because, it cannot be 100% accurate. Nothing is 100% accurate in this world. So, you have to take with pinch of salt and then say, what is that you could rely and what is that you should just simply ignore it. So that is the decision making as a manager, as a CFO, as a CEO, you have to always day in, day out, you have to actually take those, obviously solutions, in mind.
We have about 3 minutes. So if anybody from the audience wishes to ask a question to the panel. If there is no question, then maybe final comments from each one of you.
Oh yeah, I mean the discussion was so great. So, well, so I think what's pertinent, the answer to, or maybe let me just summarize. What does it mean, right, for the lives of us? The change in our life from a finance perspective is many things, and that comes from everything that was discussed so far. The change is that we all need to therefore learn what tools are available. We all need to understand what regulation, like Hari was saying, affects use of AI and use of such tools. We need to learn and understand how we will manage this whole change that's going to come about. Now, and I think, not to belabor the point that Deepak kept mentioning, which is have the insight to be able to use that tool to the right tool, right, and analyze the output out of it, because it is just a tool that it can throw many times, like Hari said, a black box. It's a black box. So to summarize, for me, as a final comment, I think this is a time for a big change, and we all have to upgrade our understanding and skill around these few things that just got discussed.
We can discuss last thing, I think. So if we can ask all the panel ki how much cost to bear for all this AI and other things. So पैसे के बारे में बात नहीं हुई, CFO की बात करते हैं. If we can just discuss last thing and anything about that, how much should the company, what budget they should have, whether it is linked to turnover, whether it is linked to something, what should be the budget and what is the cost of getting it all the AI thing done? If we can ask all the expert here.
time is very short. So maybe another panel.
So I will
later
answer
on.
that
Yes.
for you because we have been dwelling, whether we are spending right amount of time. I'm also the transformation officer of my company, so we actually do dwell on these questions, and it ranges from 0.5% of your revenue to as high as around 5% or 6% generally. No, so it is not about the big company or a small company. It depends upon how much automation do you need. So especially if it is an IT company, obviously you need far more automations and things like that. But from a manufacturing perspective, I don't think so that we need so much of automation. We can still, because at the end of the day, the cost benefit analysis, giving the job to a person versus doing the job through a system, which will give the most productive and the right answer. That's the way the decisions are taken on a day-to-day basis. So, to your point, for resurgent, obviously there is no right or wrong answer, but anything between 0.5 to maybe 0.75% would be a very decent amount which you can actually incur. But if you have certain changes which you are going to go into the system, certain years of those would be far more higher than what would you generally. But these are sustainable numbers. And I've gone through Gartner's and different reports and like that. There is no right or wrong answer. It depends upon what the organization needs and to what extent the automation is required for the company. There is nothing that a single solution fits all. There is nothing of that.
Yeah, absolutely right, Mr. Deepak. I think it's dependent on the need in your industry and how much benefit it can bring to your table. So it's truly the cost benefit analysis, that finally comes down to, and including in manufacturing industries, by the way. Most recently, a new AI has come into play, which has changed the lives of people who are even engaged in, as hard tasks like even, carving out a kind of bone rib for chicken, another kind of, meat manufacturing plants. Even that work has been taken over by AI. So it is cutting across all industries. I think everyone has to really, weigh their options and say, how much benefit am I going to get out of this? And then go for it and then decide that. One last piece that I will say probably to conclude, a lot of people have this question whether AI is going to eat up my job. Is there
I deliberately refrain from that because it has been asked, but yes.
Yeah, I really want to answer that thing because, we need to understand what we should do about it. So that will be the last piece that I will say and we'll close that. So this is my two-line answer. If you choose to remain AI, AI can consume your job. If you choose to remain AI, when I say AI, if you choose to remain absolutely ignorant, AI can consume your job. But if you're committed to stay AI, then AI can make your world, your career very interesting. Which is if you choose to stay alert and informed, then AI can make your world AI, which is always interesting. It is an ever evolving thing. You have to stay committed to it. You have to keep learning. Like every day can be a new learning coming with AI. So if you are willing to invest your time and energy on that, you can decide which AI definition that you are going to put yourself in, either absolutely ignorant or alert and informed, then that will make your life always interesting. Yeah. Thank you.
Thank you so much to all the panelists. Thank you.
Thank you. Thank you so much. Picture, please. And thank you, Mehaji, for moderating that. Thank you. I have to admit that that buzzer is. दोस्त मत बजाया करो. आपको खुद कन्विक्शन नहीं आ रहा उसको बजाने में मुझे दिख रहा है. But of course, we have to make sure that we run on time. We don't really want to lose out on anything. Okay, while they're clearing the stage, with that, we come to an end of the panel discussions. There are two very important keynote addresses that have to be delivered. And after that, of course, we have the annual BW CFO World, the Best CFO and Finance Strategy Award ceremony, the 7th edition of it. So in the last panel, Jyoti sir had asked as to how much spend on AI is necessary and how much is too much, etc. I think picking up from that, almost under the same umbrella is our next keynote address. It's on future proofing a business with an intelligent spend management solution. We've all been discussing opinions and questions. Now we have someone who's giving us an answer as well. And to share his views on the same, please join me in welcoming on stage the head of spend management, SAP India, Mr. Ashwani Naram. Everybody, please, let's welcome him. बाबा अवार्ड्स अभी आ रहे हैं तो आपकी तालियों का जो जोश है वो ऊपर जाना चाहिए, नीचे नहीं. लेट्स ट्राई एंड डू दैट अगेन. Thank you so much.
So I have a difficult job. Thank you. This is the world we live in. You just heard a CFO pointing out to a CIO. The CIO would say, I can get you AI, but the CFO would say, kitna paisa lagega? That's the world we live in today. That's what we discuss with our customers, I believe, every day. And I think that's where we also need to educate people that there's something happening on AI. And I'm going to touch a very little bit on that piece, when we look at it today. So going forward on my presentation, and I saw this 2 months ago, and sometimes we believe staying at the bottom is going to help us. And that's what the graphic tells us here today, that if you look at the recession probability, but since you come from the finance background, India is at 0% as of today. Now look at the contrast. My company is from Germany. That's where we are headquartered. And we are right at the top also, that we are going to have problems in Germany. But we are happy that probably that's not going to be India. That's where we are growing threefold in the last 3 years. That's what we have done for a living. Now, what does this mean? This also means that there's a lot of work which is coming our way. While probably companies are going to look at it differently in different regions, but when you look at it, how this is going to happen in India, I believe we have much more coming our way, and this is not going to be easy. And that's where I say it's time to look at spend management very, very differently. And probably the first thing I wanted to say is we are managing transactions with our suppliers as of today. That's how we think, but we need to be more innovative with them. Can we develop more products, for example, in our own country? And that's the trend also which is going on. Or let's say from automating steps to connecting people, processes, and systems. I am connected with you on LinkedIn, on Instagram, on Facebook, and whatnot. What is your connection with your service providers, your suppliers, your travel and expense agencies? How do you connect with them? If you don't have a system where you're connecting with them as of today, then you're doing it very well personally, but professionally, we have a huge void which has been created. So that's where the problem lies. From improving the processes within a company to optimizing process, and that's what we do best. We always talk about, can we do this better? And that's where I think the panel was discussing. We are doing a particular process in a certain way. Can AI make it better for us? And that's where the question is going to come from. Or let's say from environmentally, are we sensitive enough? So if I ask you today, how many trees did you save on your own, in your organization or personally? Probably I did print paper in my company today. Maybe I sent more emails. Maybe I could have ignored them. Or let's say if I'm buying too many goods with probably a cost of packaging which is involved as well, which is not recycled, or buying products which are not sustainable. That's how I am looking at it. Personally, am I adding to the ESG goal of myself, or let's say the organization is doing it for themselves? And finally, I think building a responsive workforce. And that's where I believe the bigger problem is getting answered. So the skill management is becoming a problem for all of us. Ask yourself, and if you're a CFO of an organization, ask yourself, if you want to hire somebody tomorrow in your company, where I would say we want you to actually come in And if I'm a manufacturing company, I want you to buy packaging equipments for my organization. And if I go to the colleges, how many people do you think can do this job? Do we even know this? Or for that matter, even if I carry some sort of an experience and I'm trying to hire a permanent employee, or let's say probably a gig worker, which is the contractual labor, then also am I doing the requisite which is required by my organization? And therefore, when you look at all of this together, it goes beyond the boundaries of buying anything where you're spending in your organization. You can't now talk about only direct materials or indirect materials or workforce or your travel and expense, or we are talking about supply chain finance. It goes much beyond that. And when we talk about this, the important question which comes back from a lot of companies where they tell us, you know what, I have a fair enough system which does something. And this system is good enough for me to run my operations. And that's what we lose when it comes to having good enough systems and not probably the best in class. There are about $105 billion which was lost across the globe because the violation in travel policy was done or expense policy was done. Are we taking it seriously? There are about 20% of organizations who consider themselves that we are equipped enough to handle the supply chain crisis. Every 6 months, almost in the last 5 years, we are having a supply chain shock. We saw the Brooklyn Bridge, which was pretty recent, a month ago. Do you know how much is the exposure to a insurance company because of that? It's $6 billion, one event. And consider that whole place is stopped for a while, and therefore ships cannot pass. Therefore, you can't have your material. And that's where the problem lies. There are about 44% of spend, which is covered only by a formal spend category. If I ask you a question as a CFO today, how much target have you given, for example, to your procurement people to tell them in a particular category, you have to give me 5% savings because I need to take care of my bottom line, my EBITDA. And if you have not done it, let me tell you, we are living by chance because that cost will continue to grow and we will not be able to sort it. Now, similarly, good enough systems are not going to help me because the world is more volatile than ever. And therefore, what this brings us to is the important theme, which is what are the red thread themes when we talk about in today's world, what are the red thread themes for the CXOs? Now, complete spend visibility is one of the important criteria. Let's ask a bank, if you come from a bank, let's ask a bank, how many peons, clerks, your miscellaneous work done in your bank branch, how many people do you employ? If there are 5,000 branches across the nation, and let's say we are going beyond the boundaries as well, you won't even know that as of today because there's no clear spend strategy on your contingent labor. And that's why we don't even know what kind of problem are we solving. Does the system tell you proactively, you are going to overshoot on your travel budget this year because there are 3 events your company has organized, and therefore you need to actually go for more budgets. And these 3 events were, of course, not planned for the year, and therefore the whole thing is going to shoot up. So are we having that complete spend visibility? Now, when we move to the digital transformation, and that's where what becomes more important is buying something in your organization. Is it as easy as when you buy this on Amazon or Flipkart? If you are a CFO, if you want to order something for yourself, you would know the plight of ordering something in your organization if you don't have the consumer grade experience. And that's where things are changing. Can I have a mobile app? If I want to buy something, I can actually order it from my mobile app, just like Amazon or Flipkart. Or getting onto the transparency and resiliency part of it, your ESG goals. Now, the BRSR mandate is out. by Government of India. And by 2026, we like it, we don't like it, you can't trade on Nifty and Sensex if you're not giving your BRSR report out with your P&L report. And therefore, I want to ask you a question. If you ordered a particular item in your company as of today or a service, do you know how much carbon footprint that carries? If you took a flight from Delhi to Mumbai today, how much carbon footprint that carries? And if you do not know this, first, you would need to know. Second, if you can't prepare a report out of it, then the Government of India is going to tell you that this is something you have to submit every quarter, mandatorily starting 2026, because India wants to be carbon neutral by 2070, right? So there's no choice. And therefore, I need to know what is my carbon footprint across my spend portfolio. You believe it or not, we are the largest polluting community on the face of earth when it comes to supply chain procurement, travel and expense, because we get everything inside the company or outside the company. And that's where we need to control this. Compliance. Very easy for me to say that I basically got a good deal with a supplier, but then am I buying at that price? If this is something which remains in your contract, but it is not getting implemented or executed, then there's no fun in actually negotiating that good contract, I would say. And therefore, compliance becomes very important. Cost containment right on top. How can I actually look at my shipments real time, traveling from one place to the other, and realize this is the longest route I'm taking, and therefore I'm losing money? Can I optimize? And that's the question. And finally, internal experience, which is even more important. I can give you a gadget, but let me tell you, if you don't like how to operate this, you're not going to use this anymore. And therefore, that becomes a bigger problem. It's very easy for me to buy technology, but can I adopt it well? Or can I give a good user experience back to my internal customers? Which brings me to the important point of looking at how we are reeling under pressure. Not only us, I think every department, every industry, because the global population is on a decline. And people did mention just before my session in the panel that I can have a big report on AI, but maybe it doesn't work. Or maybe, you know what, AI is going to eat up my job. Or let's say AI is something which is still getting matured. Let me tell you, it is inevitable. The moment the global population is going to go down, you have no other option but to go for automation. And therefore, that's going to happen, which brings me to the important topic of AI. And if you look at it, what Hackett Group is saying is the top strategic focus for businesses in the next 1 to 3 years is AI and digital capabilities. Let us ask yourself a question. Can you predict and tell me if your top 20 suppliers in your organization have not filed for bankruptcy? Do you know this today? Can you tell me if somebody in your supplier community have done child labor in America and they're facing a lawsuit? Or can you tell me if a supplier is actually having a shipment which is coming from place 1 to place 2, but it is stuck now because of a hurricane? If I don't have these visibilities, then of course my supply chain is under danger. So can I deploy AI, which basically gives me the advantage over others, whether it is competition or probably getting there first in the market? And because I come from a technology background and I represent SAP, it would not be good of me to tell you that we do all of this, right? And which brings me to the more important way of looking at it is this is how we have defined spend management. So we are talking about all spend under one umbrella. I can give you a platform which can manage 100% of your spend, whether it is related to employees, which is travel and expense and invoice, or it is related to your material or your services, or you're talking about your contingent labor under one roof. consolidated, which is very well connected with your suppliers, your travel partners, your consultants, your media partners, your advertising agencies, your material providers, your services agencies, via something which is called as the SAP Business Network. And by the way, that's the largest P2B network in the world. If you want to put things into perspective, we do $5.1 trillion of commerce on SAP Business Network every year. If you want to put this further into perspective, that is equal to India and Australia's GDP combined. If you still don't like it, that is 2 times of Amazon plus Alibaba plus eBay combined. That is how much we are doing. And India, by the way, is the fastest growing when it comes to SAP Business Network. We have grown this by 3 times in the last 3 years. So that's what we do best. Your UX basically reimagine in-depth integration and AI. And that is evident. That will be there. You will not be able to stop it. And it is important that I tell you how we visit or how we view AI. And that's the North Star vision of end-to-end spend management, what we have drawn for our customers. So it starts, of course, with the gamut of complete spend under one umbrella, powered by SAP's offering on AI, which is called Joule, which is the underneath layer. And then on the right-hand side, on my left-hand side, your right-hand side, you would see all your trading partners getting connected with this. And on the left-hand side, for me, all your services or direct, indirect materials. Now, I want to make probably one last point, and the panel was discussing, is AI real? Is this here to stay? Is this going to eat up my job? Maybe we are writing too much, but AI is not giving us that benefit. Is it giving me 100% correct results? I think all of these questions, which was raised by the panel, and I want to tell you that this is real because we have delivered this. I'm happy to tell you today that SAP has given almost 150 use cases on AI, just on spend management globally. There are 50 customers in India right now, which are running something or the other on AI. And I want to pick up an example very quickly, which is somebody mentioned ChatGPT. We don't write job descriptions anymore. Our system does it for us. If you want to hire tomorrow a person which you would have hired in your organization sometime, the system can actually write the job description and give me a job description. And I'm going to use that, send it out, get the required CVs. And let me tell you, let's say there are 5,000 people who have applied for 10 jobs in my organization. You tell me, how will you find 5 relevant people? I can find it on the click of a button. The system is going to give that to me, depending upon the job profile which has been created. Or for that matter, if you're traveling, and if you say, I need to go to a particular place where there is a conference, and then I'm looking for a hotel, which is near to a hospital because I'm not well, and maybe a chemist, and it should have another 20-seater room inside the hotel because I have my team traveling with me. I don't plan for it anymore. I just give all this requirement in the system, and the system will tell me, you're going to Frankfurt, there are 2 airports. Maybe you choose this airport because this is very near to your conference center. By the way, there are 5 hotels based on what you're looking for. And out of these 5 hotels, probably 3 are best fitted for you because they have a hospital which is just a half a mile away from your hotel. And that is what we are delivering to our customers as of today. This is AI. This is what we have done for our customers. If you are a buyer in your organization, even if you are a CFO and you continue to buy something similar or same every now and then, you tell me, why are you raising a purchase request once again? It's criminal. So we have stopped it. The system will actually look at your behavior and system will create the purchase requisition for you. And by the way, if you're doing your 3-way match or supply chain finance to your suppliers in your system, that behavior will also be taken up by the system. And the system will suggest this is how you should do it. And that's where I say AI is real. It's inevitable. It is going to stay with us. So let's not be afraid of it, but let's imbibe this. And we are there to help you. I think that was my time. And I would say thank you very much. And these are 3 key takeaways I would leave for you pretty much self-explanatory, but I think real-time spend visibility, compliance, working capital management becomes important from a CFO perspective. Sustainability does matter to you, to your customers. So let's pay more focus. And of course, technology is an aid to get you there where you want to be. So thank you very much. Thank you for the time. I hope I was on time.
Hello. Hello. I feel the business world team moderators should meet, sir, on how to check the time, especially. Oh, no, thank you so much for your address, sir. Thank you so much. With that, it's 4:45. Let's take a quick tea break, or a coffee break, or a green tea break, or a water break, or just a break and be back here by 5 for our next keynote address, and then the awards ceremony awaits us. Also, there's a celebratory dinner at 7:30 after the ceremony. If you wish to be a part of it, meet all the CFOs, etc., you can get your coupon from the registration desk downstairs. Thank you. House. Hello. Hello. May I please request all of you to settle down. Also, if your colleagues are outside, can you please request them to come inside so we can now start? Volume. Hello. एक नोट. Just a minute more and we shall start with the next keynote address, and then of course the award ceremony also awaits us. Hello, base. Team.
We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information, so you can make bookings that match your personal travel style. Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, TAF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity, an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services, valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services, primarily focused on providing advisory services in the areas of corporate finance, deal structuring, and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. PEP study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs.
Baby, leave me one more.
We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information, so you can make bookings that match your personal travel style. Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, TAF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers.
Hello. Okay, welcome back. I had mentioned it's now time to move ahead with our next, the last and the most important keynote address of today. He's spoken of leadership, AI, ethics, etc., 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 and of course, more. This one is on governance, the key to success. And to share his views, his opinions, his experiences, please join me in welcoming on stage Mr. Setu Ratnam Ravi, founder, Ravi Rajan & Co. LLP, and also the chairman of TFCIL and former chairman of BSE. Please. Well, come on. What happened? You took a break. You're supposed to be like, thank you.
Good evening to everybody. It's a pleasure to be here. And I know it would have been a whole day session and you would have gone through various, as I saw the schedule, it was artificial intelligence, ethics, etc. The whole regulatory environment is moving in a very different direction. And you see the number of regulations, including the Companies Act, the changes in the Companies Act, the guidelines, various guidelines, FPI guidelines, and every other change that happens. The speed at which the change is happening is very rapid and very fast. And the businesses are not able to cope up with the speed of the changes. And that's where the CFO, being the heartline of the company, has to control, regulate, ensure compliance, and still see that the companies grow as per what they desire to do. So there is always this great pendulum which shifts between means increasing business, number one, doing compliance on the other side, and keeping a balance between the two. And I think the CFOs and the people who are involved in strategy play a very vital role. I have seen a lot of aspects that have, and you can see it in the newspapers every day. For example, you saw what happened to even Kotak. They got fined by Reserve Bank. We saw JM, they also had a fine. Bank of Baroda had their one part of the business was told to be 6 months moratorium was given to them. So you see, and Paytm, you saw what happened. So, and even if you look at Byju's or you look at the whole scenario, I think there has been a lot of regulatory pushback for good compliance, good governance. And I think that is the key today to the business. Without good governance, it is not possible to run any business because the cost of non-governance is the brand erosion. Anything that happens, actually impacts the brand. Now, just because it is in public domain, we can speak freely. Byju's, such a great brand in the Edicom sector, one of the best known companies, well advertised and very progressive. And it got into issues of various sorts, including it being a going concern, etc., shareholders issues. Why did this happen? Why did this happen? Because somewhere they were not well aligned to governance, to the key stakeholders, because that's why the stakeholders got very unhappy and did whatever they did. So there are many such examples like this, so which are in public domain where, the governance has played a big role.
The CFOs also have a very important role because let me tell you, I have seen situations where the CFOs are blamed by the promoters if there is a failure. And I can give you one example outside India, which was B.R. Shetty and company, which you are aware of, where the NHS was the company, where what happened was when the company went bad, there was a press statement and there was a press meet, and where they said it was all my employees and my CFOs who were responsible for this. So what happens is the CFOs can be easy targets. And if you look at the regime in the last 4 or 5 years of regulatory outreach, the first fallout or the fall guy or the file person is the CFO. And that is why the CFO's role for governance and for not even tolerating small little non-compliance, that's the key role to the CFOs have to play to ensure that there is good governance, good ethics, their relationship with the board members, their relationship with the stakeholders, complying with stakeholder agreements, and complying with regulatory framework, complying with all sort of regulations. Now, just let us see, last December, data privacy has come into play. And what is the responsibility here? The responsibility is huge on the company as well as the board of directors, because data privacy, the bill has been enacted, the rules are still getting framed up, and it is going to be very, very challenging in an environment where we have outsourced many things, and where there are online transactions, and where we have kept data of everybody. So this is going to be the most important aspect as we move forward in governance. This is going to be one big challenge as far as governance is concerned. Though I am doing a keynote address, I would still be open to questions. You can stop me, and I'm happy to take anything, because I don't want it to be a monologue. But what I'm trying to emphasize through my speech is a little bit that governance, without governance, there is only going to be failure, failure, failure. And because the penalties, the cost is very, very, very high as far as non-governance is concerned. Now, also you must be very closely observing, especially in the startup space where there are multiple stakeholders, multiple promoters, there are difference of opinion between the promoters also. Why does it happen? Because the fundamentals are not clear. And the fundamentals, for example, the shareholder agreement, are they tight about everything? Have they made a simulation of the situation? They have not. And that is why shareholder agreements are more mechanical than actually being realistic. And that is the challenge which each one faces while they go about. And, when the company does well, there is a problem because the shareholders think, oh, I have done this. And when the company doesn't do well, they say, okay, this is the person who's responsible. So these are the type of roles which are not clearly identifiable. And this is a very integral part of governance, because unless there is a fundamental good shareholder agreement, how can you implement anything? Now comes the other aspect, board level governance. So with LODR, with all the conditions of LODR that have to be followed, and the minority shareholders that have to be followed, and also the proxy advisors' role has become very important because they keep on voting in the AGM. So you see, there's a whole set of external people who run this whole governance, and that is why the pressure on the CFO is huge, because even for example, if there's a voting in the annual general meeting, I won't name a company where one of the promoters was outvoted. And, outvoted because there were some conditions that they felt that they should put, and the proxy voters gave an advice to all the institutions that they should be not voted for. So, even in the public domain, we have those type of challenges. And, even if it's not a public domain company, the challenges can be very, very different even. For example, GST. There is an arrest for GST non-compliance, and that is what you see. The latest thing is the insurance companies are paying something. They have made a demand of 15,000 crores, and from wherever there is an interpretation issue here, which is yet to be resolved. But 15,000 crores is the demand made, and you see the CFO is always under threat in the sense there is a liability of arrest. So this is the type of things. So legal protection for everybody is also very important. In my if interpretation and getting legal opinions and keeping ourselves well equipped is a very integral part of governance. I urge anybody, if you have any question, means I'm happy to take, and I can move forward otherwise. You have anything? So shall I move forward? So coming to another aspect of governance. So I did talk of board, I talked of stakeholders, and I am now going to talk about the auditors. So anybody has an idea how many auditors have been punished in the last 1 year? All big firms have got NFRA penalties, and it's all in public domain. So I'm not speaking anything in which is outside the public domain. So why has this happened? Is it only negligence? Or is it willful? Or is it lack of understanding? It's a mix of everything. The regulator is looking with a very different perspective. And the regulator looks from hindsight. Actually, what happens in a company? It's live. All the decisions are taken live. But after 5 years, certainly one can look back and say this is wrong and this is right. So for the auditors, it becomes very important to document things. So for example, I also head a firm. So we have got into documentation, huge amount of documentation, which puts a lot of pressure onto the company itself. Confirmation from clients, documentation, everything. We want documentation, the minutes copy, everything. So what has happened is everybody tries to protect. The auditors are also very careful. They are not casual about it. And the Companies Act also has, migrated into a very strict regime. And so that is, the first big fallout was Satyam. And after that, many such instances happened in India. And after that, even NFRA came into existence, and NFRA has sort of, brought a new perspective to this. And NFRA will also realize the problem of auditors, whereas auditors also must realize that the guidelines are stronger, and also the outreach, the auditor's liability is also huge. And that is why whatever we certify as true and fair must be true and fair in the truest sense. There can be interpretation issues, there can be issues of opinion, but I think that can always be settled through emphasis of matter and qualification. So the third big constituent is the auditor. The fourth, of course, in every sentence I have been talking of the CFO, and MD and CEO are also important. The MD and CEO normally run the business, and they want bottom line, top line performances. And I think they drive the business in multiple ways. And I think their job basically is to see that business parameters are met, the budgets are met, the shareholders are happy, the board, whatever they have committed to the board, the budget is always met. And here there is a very fine line. The other risk manager sitting as a risk manager is the CFO, who is always looking at, the governance part of it, whereas the MD and CEO is looking at business growth, capex, to everything, and the CFO on one side is looking at being conservative. The person who's like a risk manager who wants to pull back many things, but between all of them, I think the balance between the two is very important, and that is why sometimes disagreements are very good for everything. And I think healthy disagreement will give better results. So that is why unanimity sometimes is a cause of concern. Sometimes some people who can be risk managers without being very negative is a very, very good trend and a good this thing. And I would like to have a person who can disagree with me on some matters, but let business grow as it is, because the ring fencing of the risk is also equally important. Now, most companies are having CXOs, CTOs, CROs, apart from HR heads, etc. And these all become part of KMP. I'm sure everybody knows here in this room, but they also are very vital in this whole setup, because CTO in this regime of digitalization, of artificial intelligence, and also where we require a lot of data from various points, and where MIS and decision making is fast. So the CTO plays a very important role, especially in this area where there are a lot of frauds, digital frauds that are happening, and we have to protect data. Privacy has become an issue. So how do you address all this? It is addressed through the CTO, who makes a very robust policy, and software issues also along with it. And especially one is migrating from one platform to another, it becomes very important to sort of have a good CTO. Very, very important to have a CTO. In the financial services market, of course, we have the chief risk officer. Even in the manufacturing companies nowadays, a chief risk officer is there. CRO, who is always deemed to be the most negative person, because he's always flagging of risk. But it's important that we keep such a person who can flag off risk. And of course, we can overrule the person by giving justifications, but sometimes adhering to, if it's a genuinely flagged risk, can it be sort of addressed. So I think the whole ecosystem, right from a shareholder to the board, to what the CFO is, to a CTO, to everybody, makes a good governance in the whole sense. Then we have external bodies, the regulators, and of course the auditors play a role. So there is the regulators who are always on the, we are always accountable. Then there are this MCA, and then there is these tax authorities, which also, play a very important role in the whole ecosystem of governance. And I think very important that we are tax compliant, because today the law has changed in many ways. And, including the shareholders, the ultimate beneficiary can easily be traced. And I think that is the key to the whole thing. So how much of data we have on everybody. So ultimate beneficiary, any shareholder, we can get the ultimate beneficiary, and RBI or anybody else, even SEBI, is asking for the ultimate beneficiary, which is very, very significant in the last 3 years. And, even if the investment comes from Mauritius or from Singapore, everybody wants to know who's the ultimate beneficiary. And that is what is a very important part of governance, because, we have to ensure that these FATCA compliances are done. And then also the ultimate beneficiary, we have very clearly outlined. Then another aspect of the governance is how is our credit rating. Means credit rating is a challenge. Means because there is always this difference of opinion, whether I should get better rating. What are the parameters that will help me in get better rating? Most of the companies have to look inward to understand what credit rating they can get, because sometimes lack of knowing how to get a good credit rating can cost them one notch down. Rating can be one notch down. So because you will not get investments if there is no good credit rating. So it's it's a thing that if you get a good credit rating, you will be able to take bank credit, and you'll be accepted in the market. So I think these are all the external factors: the credit rating agencies, the regulator, and of course, all other like tax authorities become the external regulators, including RBI in case of listed companies, SEBI. In case of insurance companies, it becomes IRDA. And there are 104 regulators, by the way. India, if you look at all the regulators in all the sectors, there are 104 regulators. And I think each one of you will be countering different regulators in different form. And that is, I think, the whole environment. We'll have to do business within that. And it's good for us because if we work business through this regulatory environment, we will have a long, safer passage and business over years, a successful business over years. We are feeling the pinch because the transformation is happening. And any transformation has its own challenges. Like you all witnessed, GST had its challenges and still has interpretation issues. But it has given a lot of depth. The collections have increased, and many issues have been resolved with GST. I think every regulatory environment that is pushed, that is you never had RERA before us. RERA has to the builders has become a big thing for the people who are investing in flats, apartments, houses, etc. So, but it has regulated the builders. So all these regulations that have come in the last 15 years are all, sort of maturing. And this also requires a mature handling as far as governance is concerned. And I personally feel that we are moving towards a very sort of a very governed, very accountable, very we have to be very prepared and well prepared with knowledge. And that is the way we have to move forward as far as governance is concerned. Can I have somebody speak, or should I still continue? Yeah, please. Thank you so much. So Anurag, I have deviated from a keynote speaker to a bit of change, if you don't mind.
Good afternoon, all of you. Good afternoon, Deviji. Can I ask one question just? I think there is a blanket firing of notices has been, whether it is you're just concerned, talked about GST or direct taxes. So regarding section 16(4), the ITC and other things. So without the basic fundamentals, I've seen many notices has been coming. And as far as the CFO forum is concerned, I think we need to have a more unity regarding the facing these challenges, which is actually not, government is not going behind the logic behind the notices and other things, whether it is income tax 148, whether it is GST 16(4) section or other things. Can you have some comments on the unity is most important rather than facing these challenges? Because I personally address more than 100 appeals in this.
So I'll answer to you in a very straightforward way, and I'm not going to be diplomatic. GST notices are coming because there are interpretation issues still. I can tell you that there are many interpretation issues still. Whether a very simple thing, I do a yoga class, or I teach separately, or I do it in a class. There can be an interpretation. See, this is a business and this is something for health. So, there are many, like insurance also. Suppose my marketing expenses, why should I pay GST? That's a big interpretation issue that is sitting at this point. So what is happening is the GST has been enacted very strongly, but it had to be enacted because somebody required to push it so that the implementation can happen. So what is happening in the endeavor to get more revenue, notices do come. But what happens is the CFOs have to also push back and tell them, see, these notices are. So we should also be very brave enough to understand the technicalities and push back. So there is an overreach here, certainly, because first of all, they have not, there are interpretation issues. And, even if you look at a small PC of yours, there is a software, there is a hardware. Even if you look at EPC contracts, there are GST of 28% to 18% to 5% in an EPC contract. You can see that. So there is a very fine line that happens between all of them, and that's why the notices keep cropping up. And also, they are also risk averse of non-collection. So, or there is also zeal for over-collection. And it is important you have forums where you call these people, invite the top officers of GST, have a session with them. And that is why even the department has started an awareness sort of a thing where they train the officers of the problems of the client. I think we are maturing. Here, I would say that this will all settle down. Now, coming to income tax also has shifted from what one could, an SSC could go and explain. It's faceless. It's all on mail now. Now, that is also, there is no human element that is there to explain anything. And it's a tick in the box type of an approach that happens. Plus also AI. Suddenly somebody rang me up, my tax has gone up, my returns have this, what during COVID, they must have traded a bit. And suddenly they saw there was this income that has generated. So the person who was not doing trading was during COVID in lockdown was doing all this. And the AI captured it, and that was there in the tentative income tax statement. So what happens is the artificial intelligence also is throwing up many things. The center also has trigger points. Suppose your credit card, your expenses are more than 5 lakhs. The trigger will come in. So the artificial intelligence also, and then what is the discretion of the person who is assessing you? He'll go by that artificial intelligence. Notice will come, you will explain. It will get settled. So we are moving, and in this type it will happen. But engagement and also unity is fine. Unity is very good, but also knowledge is very important. And I think it's important to have a communication between the SSC and the department. And that is what I think we should encourage that. And you should all at various forums speak of them, call them also. So Anurag, have you called anybody from GST here? You should call. You should make them interact with CFOs because they will know the problem of the other side. I think the forums have to come in and do all that. I hope.
Thank you.
So I was given 20-25 minutes, Anurag. So want me to, I do not know what is your schedule. You want me to still go on? No? Yeah. So, so my final take is that governance is going to be the key for any company to succeed in the future, because the regulatory outreach is there. Regulatory changes are fast and furious, and we need to actually be prepared for it. And that is the only way to go forward with good business ethics, with good artificial intelligence, with proper data privacy, and with the right type of people, which is the most important thing, having the right type of shareholders also. People who raise money, take any type of shareholder, and then they really repent after that. So what I'm trying to say, the governance ecosystem has to, is in a very uniquely placed at this point of time. Thank you so much for having heard me. And thank you, BW, for calling me. It's a pleasure to have been here. Thank you so much.
Thank you. Thank you so much, Ravi. So it's always a pleasure to listen to you. Thank you. And now, ladies and gentlemen, as we transition from the discussions of today, it's now time to move ahead with the evening's celebrations. Once again, my name is Aditya Malik, and it's an honor and a pleasure to welcome you all to the 7th edition of BW CFO World Best CFO and Finance Strategy Awards, on occasion to recognize financial brilliance. In today's ever-changing landscape filled with challenges, CFOs like you and financial strategists like you, that you try and bring about the ability to turn crisis into opportunities through your effective planning, of course. Now, these diverse roles of yours, they involve shaping business decisions, fostering a financial mindset throughout the organization. And today, at this very moment, we gather to celebrate those outstanding achievements of yours. This award ceremony is being broadcasted live on all BW Business World platforms, including our social media channels and also on www.bwcfoworld.com. I request you, please join in the celebrations of the evening by using the hashtag BWBestCFO. A sincere gratitude to our partners as well for the support. Our spend management partner, SAP Concur, a knowledge partner, Resurgent India, organized by BW Business World. Our event partners, Joy Travels Private Limited, Fandrum, Beanley Coffee, The Thick Shake Factory, Reality Plus, Exchange for Media, IWM Buzz, Impact Weekly Magazine, and also Pitch. May I please request our team to play the partners AV once?
We redesigned the entire travel experience from the ground up to provide a seamless journey for the traveler. We start with enhanced search capabilities. You can search directly for a corporate office or conference center, and we smartly suggest the airports and hotels closest to your destination. Whether you're picking your flight or hotel, we give you the data to make sustainable choices. Emissions data and an overview of all important info on each option help you understand your spending patterns and the total impact of travel habits. And to top it off, we augment the experience with rich information. From flight booking to hotel and car reservations, you will be guided by dynamic media, flight data, and intuitive maps. Rich information, so you can make bookings that match your personal travel style.
Leading investment banking firm, we provide bespoke funding solutions. Our service offerings: debt syndication, private equity, valuation services, financial advisory services, credit rating advisory, TAF study and DPR report, insolvency services, training. Debt syndication, a loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity, an alternative investment class and consists of capital that is not listed on a public exchange. Valuation services, valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services, primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory, and M&A. Credit rating advisory, Our team's experience can bring immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. Have study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs.
Thank you. And I also take this moment to thank our jury members with whose deliberation we finally arrived at this list and also at these awards that you will all be bestowed upon with. We personally feel that when stalwarts like you, visionaries like you apply and nominate yourselves for these awards, for these categories, we believe already a big winner have you already applying for these awards. But of course, a list is a list, a category is a category, an award is of course an award. It has to be won by somebody. And I also believe that healthy competition is also very, very, very important. But as of now, I really wish to thank the jury members. And before we move ahead with the awards ceremony, we want to show you exactly what happened in the entire jury process from you nominating to us arriving at this list today. What was that like? Will you please have the jury, everyone?
Business World CFO Award had exceedingly good entries. I was impressed with the quality of entries. And for the jury members, it was a very difficult task choosing the winners. The jury members also would have learned a lot from the dynamic presentation made by various CFOs. I wish BW great success. The best part about this whole award is it's not being influenced by anybody, and there is a lot of transparency and democracy while selecting the winners.
What we have seen this year is that there's a lot of innovations which our CFOs have done for the corporate sector. And I'm sure that when we talk about a $5 trillion economy, it is these corporates and these CFOs who are going to majorly contribute to the progress of this country.
I'm the jury member of Business World Best CFO and Financial Strategy Awards. I would like to compliment the team Business World for bringing the very talented CFO as nominees in each of the categories. These CFOs have adopted best practices and innovative financial strategies in their businesses to take it to the next level. Therefore, it was very difficult for the jury members to select the winner in each of the categories. We have done extensive exercise and then selected the winner in each of the categories. I congratulate all the winners and wish them lots of success going forward. Thank you.
What a phenomenal experience it has been. The sheer quality and the number of entries have been overwhelming. Two, as a jury member, to look at the standards of remarkable transformations and achievements over the last 1 year of Indian enterprises, phenomenal. Three, I think great expectation that Indian CFO community is now going to have huge amount of talent that it can export globally for every single brand that operates in India and elsewhere. My heartiest congratulations to all the winners and those who didn't make the formal mark of number 1 or 2 or 3. Here is my message. It doesn't mean that you lost out. It just that means that what you delivered, somebody did slightly better and you're up there anyway. Thank you and wish you all the very best.
I would like to say that it has been a wonderful experience to be on the jury panel for the Business World CFO World Best CFO and Finance Strategy Awards. Throughout my career, I focused on fostering financial strategies that not only support, but also drive organizational success, making my role in the jury exciting and very appropriate. Participating in the jury meet was an enriching experience, offering a unique vantage point into the innovative financial strategies deployed by today's CFOs across various industries. The quality of entries that we saw was quite impressive, showcasing a blend of strategic foresight, ethical financial management, and adaptability. These entries not only reflected the CFO's commitment to excellence, but also highlighted their pivotal role in shaping the organization's futures. To all the winners, I extend my heartiest congratulations. Your achievements are a testament to your leadership and visionary approach to finance that significantly contributes to your organization's success. Keep up the good work.
For all our jury members, I'm sorry to say this, but I think the entire process that deserves much warm and a round and a loud one as well. Thank you. Thank you so much. Thank you. And now to formally open the award ceremony and also to sort of welcome you all to the 7th edition of this specific awards. Please join me in welcoming on stage Dr. Anurag Batra, Chairman and Editor-in-Chief of BW Business World and founder of the Exchange for Media Group. Please. Thank you, sir.
The spotlight is for the CFOs, not for me. Good evening. It's my honor and privilege to be here at the 7th edition of the BW CFO World Awards. These are about strategy and finance and organization building. You heard the jury members. Thank you, Dr. S. Ravi, for chairing the jury. Thank you to all the jury members who gave their time, name, and patronage to these awards and actually spent time looking at entries. Like with all BW Business World initiatives, we're only custodians of the process. I don't even know the list. I mean, they write the mail stream from my mail, but actually, I have no role to play in the award. And I can only say that we do it in a very honest way. And I can only tell you that that's a big differentiator in today's world. So we don't have a brief for or against anyone or an organization. Shri S. Ravi talked about the role of a chief financial officer. He talked about governance. He talked about how a future-ready organization needs to deal with challenges that comes from policymakers, from the stakeholders involved in the process of governance. But I must say the role of a lot has been said during the day. I was watching it on the BW site because it is being streamed on BW CFO World. And I always say to some friends of mine who were CFOs, then they became CEOs, some became fund managers, that CFO is a chief futuristic officer. Sometimes the CFOs are also chief frugal officers. They bring in frugality when it is needed. But almost everything that needed to be said during the day. But just to contextualize, I genuinely believe that more and more CFOs are becoming CEOs. More and more CFOs are creating wealth for all the stakeholders. And really, the role of a CFO is like a steward. You have the vital assets of the organization, and how do you steer those assets to be able to deliver whatever you need to deliver in terms of impact and in terms of financial performance. And these days, looking at what are the ESG goals, what is the social impact, and so on and so forth. You play the role of a steward. You also play the role of an operator, because at the end of the day, on day-to-day financial matters, you or your team are very involved operationally. You also play the role of a strategist. Dr. Ravi also talked about that, strategy is a very integral part of a CFO's job, where to invest, where not to invest. And I must say, tomorrow we have our GC 100, and we have almost 120 GCs from very large organizations in the room. And in the US, the two people, if you're doing a merger acquisition, you're doing something very important, you're deploying CapEx. If either the CFO or the chief legal officer says no, it doesn't happen. It doesn't happen. So the role of the CFO as a strategist has been seen in play, and some of the elevations in India in the last few months, and I'm not even talking last few years, showcase the growing role of a CFO. And last but not the least, a CFO is a catalyst for growth. A CFO is also a growth officer, like the CEO. He or she is the CEO's partner and a cross-cutting reference, a common denominator for every big decision that the CEO, the promoter, or the board takes. Shri S. Ravi also talked about the fact that risk management is a very important part of a CFO's role. Doing compliance is very important. But today, more and more CFOs are also responsible creation of value by playing the role of a steward, of an operator, of a strategist, and a catalyst. They're looking at future and saying, what should we do 10 years from now? Mr. Ravi also talked about the role of artificial intelligence and how it is changing every business. CFOs are responsible for CapEx, responsible IPOs, they are responsible share buybacks, they are responsible even today in organization building. They work with the CHRO and the CEO and the important key management professional to be able to have a say in how you build talent and how do you build a innovation funnel. The digital transformation of organizations is also very much part of a CFO's job today. I just want to say that before I go on to close this, I would like to know from all of you, who do you think is winning in the elections? Because CFOs are the chief future officers. Do you know who's winning? Anyway, coming back to the role of the CFO, I just want to say that at BW Business World and BW CFO World, we're building a separate community for BW CFO World. And we are now going to do a offsite for CFOs, 120 CFOs on 9th August in Amritsar. It is 90 days away from today. We are on 10th May. It is on 9th August. And at some stage, we'll come to you. I just want to end by saying that more and more CFOs are becoming CEOs. A lot of CFOs are becoming entrepreneurs, or they're becoming managers of capital. The role of CFOs is an all-encompassing one. While it is defined by the aspects that have been talked since the morning, the role of CFO is about wherever the future is and wherever the value creation is beyond the points of risk management, governance, and compliances. today's awards that BW CFO World celebrate that. And I can only say that today, out of the 30 unique winners, 29 or 28 are represented in the room. 29 are in the room. We have a ceremony now, and I met a CFO outside, and he was telling me about the transformational story of his organization. It's truly authentic, and it happened at a scale. And I said to him, he said, "Would you have some interest in covering that?" I said, "We are an editorial product. We're about audiences and impact. Everything else is around that." And I can only say that the stories of the organizations, individuals that win today are on our digital platform, our print platforms, and on our social media platforms. There is an issue every year we do dedicated to the CFOs, and it is received well. The awards will be covered through a special issue of BW Business World, showcasing the impact and contributions of CFOs to their organizations and the best practices they represent in this room and the awards. I wish you well, and I can only tell you that this is the 44th year of Business World. I genuinely believe that the best times for us are ahead of us. I will look forward to celebrating your success and making sure that editorially we cover all your organizations and the good work that you're doing. Thank you. God bless you.
Thank you. Thank you so much, sir, for that address. Just a reminder that today's awards ceremony is being streamed live across all BW Business World platforms, including the social media channels and also on www.bwcfoworld.com. If you're uploading anything online, please use the hashtag BWBestCFO. A humble request to all the winners who join us on the stage. Two very important announcements. Once you've received your award and you step down from the stage, please proceed to stage left for a picture that we will need for, again, sort of helping you promote your work, your vision, etc. Like sir mentioned, covering you editorially as well. Lastly, also stay back to the very end for a group picture, again, for the magazine and for the digital world of us. After that, we also have the dinner. So please also stay back for that. Yes, a humble request. Now, time to reveal the winners of the 7th edition of the BW CFO World Best CFO and Finance Strategy Awards. To honor our first set of winners, please join me in welcoming on stage the presenters of the same. Mr. Sethuratnam Ravi, founder, Ravi Rajan & Co. LLP, the chairman of TFCIL and also former chairman of BSE. Joining sir is Dr. Anurag Batra, chairman and editor-in-chief of BW Business World and founder of the Exchange and Media Group. And joining them is Mr. Ashwani Narang, head of Spend Management, SAP India. Please, for them. Okay. Just to tell you, there are two categories that we have. First is organization, and then we'll come to the individual ones as well. The category, etc., will all be shown here. And of course, then I will also announce and call out the same. Can we proceed with the first category, please? This one goes to Narayana Hayes. We have with us Sandhya J, the Chief Financial Officer, receive gold in the category of sustained wealth creation. Madam, please. Ma'am, now before, of course, congratulations, and before you leave, just a couple of words on exactly what does your company do, and also words of acknowledgement, anything, please.
as a socially leaning listed company, I think our task was very well cut out, that we wanted to be able to meet our social objectives and at the same time create value for our investors. I think that's what we did. We've delivered a 17% CAGR since listing, while being able to channelize all our social objectives, which you can read about in our ESG report. So thank you for this award and thank you for this recognition. This is for Team Narayana.
You know, I had just acquired Business World. It's been more than 10 years. I was on a flight from, I think, Bombay to Bangalore. Met Dr. Devi Shetty, he was flying next to me. There were certain airlines that used to fly then, which doesn't fly now. Right? And we ended up talking. He had come to our healthcare summit a couple of weeks back. And then he told me about his plan of insurance, 1 rupee a day. And he's doing it now, right?
Not 1 rupee a day, but we are doing it.
Well, at times he talked to me about 1 rupee a day, right?
5 rupee a month.
Yes. Okay.
Yeah. Yeah.
So you brought it down, and so dreams do happen, ideas do come to fruition, and you are able to make an impact. Yes. So I was thinking about it. I think 2 weeks back you announced it, or 3 weeks back.
Yep.
Yes. So just Narayana Health is doing great work. So please give them a big round of applause.
Congratulations. Moving ahead, the next category in this, we have the silver. Please. Limited silver for remarkable transformation. We have with us our Chief Financial Officer, Saibal Sen Gupta, to receive the award. But then, please, everybody. So, a couple of words on this.
Thank you very much to the entire jury for this recognition. It's an immense honor and pleasure, and I'm humbled. Orient Electric as a company has gone through and is still going through a big amount of transformation, which is happening. It's a 70-year-old business, but we became listed just 6 years back when it was demerged from a separate entity to this entity. So transforming to a completely high governance oriented, as Sir was talking about, that it's one of our strengths of the organization and the group. I must proudly talk about that transition itself, along with a huge change in the balance sheet, strengthening the balance sheet, and on top of that, bringing digitization and a lot of strategies on the ground is really, really helping long-term sustainable business. Thank you very much for the recognition.
Congratulations. Congratulations. Now to our next category. We again have a silver in this. Please. We have the Chief Financial Officer, Preeti Naveen, here to receive the award. Well then, please, everybody. And also the entire team that awaits this award back home.
Thank you, jury members, for recognizing our hard work and presenting this award to us. Mindspace Business Parks is one of the first REITs in India, relatively new concept in India. We are one of the largest commercial real estate players in India. We home to over 200 companies in India that serve their clients both domestically and globally. So we hope that we are playing a very strong, a story in India's rise as a global economy. Thank you once again.
And the next category, we have a golden nut. Please. Limited, gold in the M&A Project of the Year category. We have with us the Executive Director and Chief Financial Officer, Anisha Bhandari, to receive the award. For car trade, please, everybody.
Thank you so much. This means a lot coming from BW. About car trade tech, M&A has worked well as a strategy for us. From Carwale back in 2016, people know of Carwale, Bikewale, crudely put as Google for cars and bikes. It's under the same umbrella. We have OLX. This award was for this. We acquired OLX about 8 months back. And we have Shriram Automall under the same umbrella. So car trade tech is a house of brands which has Carwale, Bikewale, OLX, and Shriram Automall. And our core strength has been the growth has come from a lot of M&As, but the strategy is to integrate these businesses smoothly into the parent entity, keeping the founders and the entrepreneurs spirit alive in the business. So we just back great founders and great businesses. Thank you.
Thank you. Congratulations. Congratulations. Winners, please don't forget a picture here and then also in the very end for a group picture. Next one, we have a gold in our next category as well, please. Limited, gold in the investor management and relations category. We have as a Chief Financial Officer, Jagannathan Chakravarti, to receive the award. For them, please, ladies and gentlemen.
Thanks BW World for this award. Definitely it encourages CFOs like us. We are a kind of a small cap company with all the swings for many, many years. Our market cap has been at a very low end. I know 4 years back, we were about reached a low of $150 million and now crossed $2 billion of valuation in the last 2 years, 2.5 years. It has been a very tough journey, but consistent, focused investor relation and management has helped us win this award. This goes to all my colleagues, my leadership team who has helped worked along with me in this process to get this achievement done. Thanks to all and my team members who has worked along with me and helped me a lot. I thank them all for this support. Thank you.
Thank you. Thank you so much, Ashwini sir, for helping us with the award. Everybody wants to sir, please. You also delivered a keynote session today. Thank you. May I please request Ms. Sumihita Verma, Senior Director of SAP Concur, to please join us on the stage and help us present awards to next set of winners. I am ma'am. Okay, next category, a gold again, please. Again, it's with response. We have with us P.D. Naveen Shera, the Chief Financial Officer, to receive the award, along with her team members. For Mindspace, everybody again. You know, we're not even halfway there. तो अपनी ताली में कंजूसी मत करो. A long way.
Thanks a lot, Business World. And I would also like to thank our management. So as we established REIT as a product, we have been able to achieve many firsts. We did first commercial paper issuance and green bond issuance as well. And it's really heartful to have a management which supports you for innovations. Thank you.
Congratulations. And the next category, we have a special mention and a silver. First, the special mention, please. Indigo Digital Transformation Project of the Year, special mention. We have with us the AVP Corporate Planning and Analysis, Nishant Jindal, along with his team to receive the award. For Indigo, please, everybody.
Good evening, everyone. Thank you, jury, for choosing Indigo for this award. We are humbled and honored to receive this award after so much of hard work the last year. Indigo is one of the fastest growing low-cost carrier in the world, and we established ourselves in 2006. And in a span of less than 18 years, we are among the top 5 most valued market capitalization global area carrier in the world. And in terms of our order book, we have close to 1,000 aircrafts on order book. So we are growing at a very pretty fast pace and trying to connect people and places across the globe. So that's our vision, and we'll keep on trying to grow, and that's what we believe in. Thank you so much for the award.
Congratulations, Zayed. Okay, a digital transformation project of the year. That was a special mention. We also have a silver. Please. Cargo Logistics Limited, silver. Digital Transformation Project of the Year. We have with us the Group Chief Financial Officer, Deepal Vinod Shah, to receive the award. The silver winners, everybody. For them, please.
Well, good evening, everyone. Thank you, BW and the jury members, for selecting All Cargo as the digital transformation winner. It's been a long journey. As you know, we are more of a brick and mortar company and being a cargo company typically. And the whole digital transformation meant a lot. And there's a huge change management. And we are very happy to kind of take this on behalf of the team, which has really toiled very hard to deliver the digital transformation, more particularly for finance as well. Thank you so much. Yeah.
Congratulations. You know, I just remember the story that Dr. Batra keeps telling us that when people only either mention BW or only Business World, we need to tell them it's entirely BW Business World together as one. Yes. Moving ahead, we had a special mention. We had a silver. Now it's also time for a gold in the digital transformation project of the year category, please. Hindustan Zinc Limited, a subsidiary of Vedanta Limited. We have with us our head treasury, Anushri Bafna, to receive the award. There she is. For them, please, ladies and gentlemen, Hindustan Zinc Limited gold winners.
Thank you, everyone. On behalf of Hindustan Zinc entire finance team, I would like to, thanks BW World jury members for giving us this award. The journey from manual to digitization was not easy, but we all the finance fraternity people, we came together and finally we did it. Honored and humbled to get this award. Thank you so much.
Congratulations, Zaire. Thank you so much, Sumedha ji, for helping us with the award. Thank you so much, ma'am. Once for her, please. She's also moderating a session today. And please request Mr. Ved Shukla, the founder and CEO of Milo Martin, also advisor to BW Retail World, to please join us on the stage, sir, and help us present awards. Zaire. Our next category, we only have a gold in that. Please. Director of Finance, Santosh Shi, to receive the award. For them, please, ladies and gentlemen.
Good evening, everyone. So thank you, BW. Thank you all jury members for recognizing the credence. So on behalf of all the team members and the CFO, so thank you.
Tell them what is Credence. Some may not
Okay. Credence is a data analytics company. We are in this for 10 years now. So we are based out of US and we have offices all over the few places in Bangalore and Delhi. So primarily we will be into AI consulting management services. This is what. Thank you.
Congratulations. Moving ahead, next category, we have a silver first, please. Frugality Industries Limited, an advanced group company, where as the CFO, Nishant Dalal, to receive the award. For them, please, everybody.
I can just say that we are honored and humbled, sir, to the jury for giving us this award. And Zuari Industries, as you would know, is the holding company for Advanced Group, erstwhile KK Birla Group. And we are a $3 billion plus group with 4 major verticals: agri, engineering, real estate, and lifestyle. And in agri sector, we are India's largest private sector fertilizer player. Plus, we have many more businesses. And thanks for giving us this award.
Congratulations, I love his spirit. And we have many more businesses. Congratulations. With that, thank you so much, Mr. Ravi, for helping us with the awards. एक बार circle जोरदार तालियां. You also delivered a keynote address. Thank you so much, sir. Thank you. We had the silver in the best transformation agent category. Now time for the gold. Tanmay Kumar to receive the award. For ship rocket, please, everybody. It's only the center table here and two of them here. And now many more joining in. Thank you.
Okay, I'm told everybody knows ship rocket, but I will still say there are about 50 million plus small businesses in this country. At the moment, we have been able to service only 350,000. We are here to democratize commerce. We are here to provide technology. We are here to provide tech-enabled services to make sure that every small merchant is able to realize the full potential of its business. So we are a technology platform, and we power anything from shipping to fulfillment to checkout to tracking to customer enablement to remarketing, etc. So that's the business we are in. And thank you for BW Business World for the award. It's been an incredible year for us. Last 1 year, we acquired and integrated 5 different businesses. We went through a transformation of moving from one accounting standard to another. We went through implementing not just ERP in our own holding business, but in every subsidiary that we acquired. So it's been a huge year for us in terms of the journey that we have undergone. So very excited on the journey ahead, and thank you for recognizing this transformation.
Please, congratulations. Winners, don't forget individual picture, group picture, and then of course, dinner also awaits us. Next category, straight up a gold, please. Congratulations for winning the best financial services IT team gold. We have with us our India CFO, PK Harihara Subramaniam, to receive the award.
Of course. Thank you so much to BW Business World, BW CFO World, and Dr. Anurag Batra, because specifically said, you may not have to say it so much about Cognizant, probably people know. But having said that, we are celebrating our 30th year now. And this is actually like a double delight for me, because coming from a tech company and being a chartered accountant, being a CFO, to get an award on Best Financial Services IT team is like the real double delight that I could have really thought about. Thank you so much to the jury members, especially for selecting this.
Congratulations. Thank you so much, Rohit sir, for helping us with the awards. एक बार circle जोरदार तालियां. Thank you. May I request Mr. Rohil Amin, the senior editor at BW Business World, to please join us on the stage and help us present awards. Aye. Till now, we are doing the organization category. Now it's time to move ahead with the individual ones. In the next one, we have a gold only. Please. Credence. And we have with us Santosh, the Director of Finance, to receive the award on behalf of Sir. For them, please, though he's not here, but his team is here. Congratulations. The next category, we have a special mention, a silver, and then a gold. The special mention first. Pankaj Jha, the CFO of Vedanta Limited, Jharsuguda. A special mention for sir. For Pankaj ji, everybody.
First of all, many thanks to Anurag ji. I would like to also mention special Mr. Akash. He has organized is everything and all. But thank you entire jury member for considering me the most promising CFO from Vedanta Limited. Thank you.
Congratulations. That was a special mention. It's now time for the silver. Please. Rakesh Thakur, the Group CFO of Imagine Marketing Limited. Please.
First of all, thanks to BW for this recognition. And, not many of the people recognizes the name of the organization, but brand behind this organization, everyone recognizes both. I think we at both not only manufacture or build the world-class product backed by state-of-the-art technology, but it's a truly next-gen and it represents the next-gen brand. For if you ask me, I think the introduction of the brand, the boat product, to me was through my daughter, and that's how I could kind of recognize this brand. So I think truly Gen Z products we manufacture, and of course, we at Boat Finance, we are currently, on the cusp of that journey of building the great finance function, building with the capabilities, right, with the right talent and the technology, and that's been our energy so far, and of course, with that's much to look forward ahead. Thank you so much.
Congratulations, sir. Okay, that was the silver. Now the gold in the most promising CFO category, please. Anisha Bhandari, the Executive Director and Chief Financial Officer of Cortrade Tech Limited. Anisha, everybody. Gold, most promising CFO.
My apologies. I was kind of taken by surprise in the last one. I wasn't with a bad migraine. So I went back and said, I don't even remember what I probably blabbered. So I'm going to give it another shot. Sorry for this. Cartrade Tech had acquired OLX, and I'm sure everybody out here has heard about OLX. I believe it's a very, very strong brand. People before me also spoke about brands. We believe the brand OLX, everybody says OLX pe bech do. So the brand we acquired attracted about 30 million customers every month, 100% organic. So the brand, a lot of people, it has about 100 million app downloads. So the strength of Cartrade Tech just got doubled with OLX. Like Mr. Anurag asked me, are we the #1 player now? The fact is, yes, we have consolidated the market, both in the auto portal with Carwale and Bikewale put together. We are #1 in the auto space. OLX is #1 on the used classified platform. There is no other player out there which is now competing with OLX, and with Shriram Auto Mall, which is the #1 auction player out there. So we take a lot of pride in being the market leaders across all the 3 businesses that we do. We got listed back in 2021. And in the last 1 year, the stock has gone up by about 120%. So from creating shareholders value to customer focus and to employees, I think in all power, we believe we've done a great job as Cartrade Tech. Thank you.
Thank you. Thank you. Next category, silver and then a gold. Silver first. Niti Naveen Cheda, the Chief Financial Officer at Mindspace Business Parks. Best Woman CFO, Silver. So the first one's organizational, this is individual. For her, please, everybody.
Thank you, BW Business World and the jury for this award. As I mentioned this morning, we started our journey in the listed space in August 2020. In fact, we were the first organization to have listed right in midst of COVID with a very, I would say, overwhelming response. We were like 13x subscribed. And it's been an interesting journey over the last 4 years. Governance and financial discipline has been our key focus, which has helped us earn 3 awards this evening. So I once again thank Business World for this. Thank you very much.
Congratulations. Just to remind winners, please don't forget individual picture and then a group picture in the end as well. With that, thank you so much, Rohel, for helping us with the awards. Ek bar, once for Rohel, please. Please request the Associate Vice President of Sales and Partnership at BW Business World, Mr. Soumajit Sen Gupta, to please join us on the stage and help us present awards to our next set of winners. Aye. From most promising to best women CFO silver, it's now time for best women CFO gold. Please. Energy, Best Women CFO Gold. Everybody for the gold winner, please. Best Women CFO.
CFO world number of women is growing. I know.
Thank you very much to BW Business World and the jury for this very, very prestigious award. I think I would like to speak a few words about Nayara Energy. I think it's quite unknown, but a very, very large organization, close to 20 billion in revenue. We are servicing 8% of India's energy needs. We have almost 6,500 retail outlets and expanding each day to make sure we reach every single city in India to be able to provide fuel to all the customers. Nayara has a very, very strong finance team. I think this award comes in recognition of the effort that the finance team has put in along with the business teams. I strongly believe that finance is like the blood of the system to make the business deliver stronger results. Together with the business, we have significantly improved profitability. We have multiplied it by 2 times. And that's the result of which the jury has considered for this award. So thank you very much again and deeply honored. And as Anurag said, I hope to see more women on this platform as time goes by. Thank you.
Congratulations. Congratulations. Moving ahead, next category has a gold only. Please. Rama Manapura Rao, the Director Finance, Railtel Corporation of India Limited. Mr. Rao, please. You know, it's a Friday evening, you're entering the weekend. You should be more happier, no?
Good evening to all of you. And it's a pleasure to be with all of you in this evening. And I'm really humbled and I feel that the responsibility is redoubled with this award. And this award, sincerely, I believe that it belongs to my team. When I mention team, not just my finance team, being the Director of Finance of this organization, the team of entire Railtel Corporation of India. And my special thanks to my colleagues in Board of Directors and my beloved CMD, Sri Sanjay Kumar sir. And very much thanks to this brilliant jury, class apart jury. This is it's actually high voltage jury. I mean, in front of them, making a pitch of 2 minutes, not to talk about impressing them, but to make a pitch itself was such a very arduous task. And really appreciate the kind of transparency BW has built in the entire system, entire process of award ceremony. And I thank Dr. Batra for this wonderful award. Thank you very much. And Railtel is a government PSU and the Ministry of Railways. It is a mini Ratna PSU. And it is on the path of becoming a Navaratna. And then we are hoping that in next coming 3 to 5 years, we are hoping that we may reach the level of Maharatna also. And it is into telecom business as well as system integration business across various sectors, including medical, education, defense, and many more. And it is growing day by day. And our CAGR has been 18% till recently. We have crossed that. Last year, it was 21%, and recent financial 24, we have grown by 31%, both in terms of turnover as well as profit before tax. Thank you very much for this honor.
Thank you. Thank you so much, sir. You know, I'm sort of now realizing the gravity of this award a little more because when a director like him, jinka itna hoda hai, jab wo kehte hain, it's such a task, and of course, in order to present their pitch in just 2 minutes to a jury, I understand the gravity of it now. So thank you so much, sir, for acknowledging that. With that, it's now time to move ahead with the next category. Special mention, a silver, and then a gold. First, the special mention, please. Hemant Kumar, we are the Chief Financial Officer, Subcontinent of DP World, Best CFO, Medium Enterprise, Special Mention. For Hemant ji, everybody.
Thank you, BW Business World, the jury, for this award. With deep humility, accept it. And I also thank the Almighty Krishna, my parents, and my wife for this. DP World is an integrated logistics company. Our mission is to move cargo from our customers' factory floor to their customers' door. Thank you.
Congratulations. From the special mention now for the silver best CFO medium enterprise, please. Amit Kumar, the Chief of Finance Officer at Insurance, Deco Silver for best CFO medium enterprise. Everybody for him, please.
Thank you so much. Thanks, BW World. Thanks to the jury for recognizing my effort. It's an important platform, and hence I thought let me just do some branding for my company. So Insurance Echo, I don't know how much of you know, but we are now the largest B2B2C insurance distribution company in India. We are a tech platform where the core focus is to build technology for our partner. Partner are the entrepreneur who works with our company and help us increase the insurance penetration in India. Now on our platform, we have more than 150,000 partners who distribute across India. As a platform, we are able to sell insurance in 98% of the PIN code in India. Last year has been super special for us. We grew significantly for last 5 years. We have been growing at more than 100%. We have been improving our financial performance through this organic growth. We did 2 acquisition, and trust me, to do 2 acquisition, being CFO, you'll understand we would have evaluated at least 50 such company before doing two such acquisitions, and also independently raised capital, both Series A and Series B in quick succession. And Series A for us was the largest in Southeast Asia, and we have some of the marquee investors who are backing now our company. So thank you so much, BW World, for recognizing my effort. Thank you.
Congratulations. Congratulations. Thank you so much, Soumyajit, as well, for having us with the awards. Everybody for him, please. Now may I please request Mr. Tali's Rizvi, Director of BW People and also of BW CFO World, to please join us on the stage and help us present awards to our last 2 categories. Aye. Well, while he walks up, we had a special mention, a silver for best CFO medium enterprise. We also have a gold in the same. Please. Deepak Vinod Shah, Group Chief Financial Officer of All Cargo Logistics Limited, Best CFO, Medium Enterprise, Gold. For him, please, everybody.
Well, thank you once again, BW and jury members. I humbly accept this on behalf of my team. I think they've done a lot of heavy lifting to get us where we are, and it's a brilliant team. Thank you so much. Yeah.
Congratulations, sir. Reminder, winners, please don't forget individual picture and then a group picture followed by dinner as well. Down to our last two categories. Next, we have a silver and then a gold in that. First, the silver, please. Vaibhav Joshi, the Group CFO of Nephrocare Health Services Private Limited, Nephro Plus. For Vaibhav ji, everybody.
So thank you, Business World. Thank you, Dr. Anurag, and recognizing this. So I work for a company named Nephro Plus, and most of the guys have made the pitch that we are the company growing, and whenever you have need, you reach out to us. I'll be the only one who will say, God forbid you should have any time need of us. Because we work in a dialysis space where end-stage kidney renal failure is a major thing, because India being a diabetic capital of the world, and apart from that, hypertension cases are also increasing at a rampant pace. But really feel proud about it. Company founded in 2009. At that point in time, organized market was not that much. And at this point, around 14 years back, hardly 7 to 8% of the people who require dialysis were getting dialysis. But after 13 years, you really feel pride that 20% of the people who require dialysis are getting dialysis. So in terms of this journey, we have raised 6 rounds of funding so far. We are Asia's largest pure play dialysis service provider, having presence in India, Philippines, Uzbekistan, Nepal. And we have 450 plus dialysis centers. So we are working with government, we are working with various health schemes and all. And this award is a great honor and recognition for all the hard work which our team has done over a period of time. So thank you, Business World. Thanks.
That's how I met him. Thank you.
Thank you. Congratulations. Now to the gold in the best CFO for small enterprises. Nishant Dalal, the CFO of Zohar Industries Limited and Advents Group Company, the best CFO for small enterprises, gold. For Nishant, please.
So thanks to the BW Business World team and the jury for honoring me with this award. Although the award is for individual category, but I will truly appreciate the hard work which has been put by my team, who are probably watching this also. And it has been made possible not by my individual effort. It has been a teamwork, and more than that, I will say also support which has been given by the families of the teamwork also. Thanks, everyone.
Congratulations, sir. Down to our last category, special mention, silver and a gold. Please, first the silver, the special mention. Kedar Bhatti, the Chief Financial Officer of India First Life Insurance Company Limited. Best CFO of a large enterprise, a special mention. We have with us the Senior VP and Head Finance Controller Nalin Bandari to receive the award on behalf of Kedarji. For Kedarji and for Nalin as well, everybody. Special mention, Best CFO for Large Enterprise. Congratulations to you and also to Sir. Moving ahead with the silver, please. We've done this one. Never mind. Next one, the silver. For Best CFO for Large Enterprise. It's a Friday. We will give that to you. Don't worry. This one is for Krishna Nakileswaran, the Group Chief Financial Officer of Apollo Hospitals Enterprise Limited, the silver. Best CFO for Large Enterprise. Sir, please, everybody.
Thank you so much. I'm truly honored and grateful to the BW Business World, which is of course a very prestigious media house in India, and also the esteemed jury to have selected Apollo and really to give us the the Group CFO for the Large Enterprise Award, which is really fulfilling. It really goes to my team and the team Apollo. Just to give a perspective here, when I joined the company in 2010, we were actually a small enterprise. So we now come a long way to become a large enterprise. We were 2,000 crores in revenue. Today we are 20,000 crores in revenue. And the journey has been really fulfilling, and that's what keeps us going. And as chairman used to say, when I first joined and met him, he said, find purpose and the means will follow. And the purpose at Apollo has always been the patient at the core. And we have always been trying to bring some of the best treatments and the best technologies in the world into India. It's been a very challenging role, of course, as you said, you have to be futuristic as well as frugal. Not an easy job at all, because, in healthcare, we are priceless, right? All individuals are priceless, and to get some of the most advanced treatments from the world is very expensive. And in India, it only works because of the utilizations that we see, thankfully. So we've been able to bring some of the the proton therapy cancer treatment, which is the world's best in cancer treatment, is now in Chennai. It's been 4 or 5 years. It was, when it came to India first, for your benefit, US has 50 proton machines and India has only one today. And that's from Apollo, and it's a $50 million machine. It was not ordinary. It was a daunting task. We went through it because we kept the purpose at the center. So all that I'm saying is, as CFOs, we have to only appreciate that if we keep the purpose and the customer at the center, hopefully the means will follow and we become large enterprises. Thank you so much.
Wow, congratulations. Thank you for taking us to the journey, sir. And now for the gold, the best CFO for large enterprise, please. Kabir Ahmad Shakir, the Chief Financial Officer of Tata Communications Limited. Best CFO for large enterprise, gold. For Kabir, everybody, please. Gold winner of the best CFO for large enterprise.
Well, Dr. Patra, Talis, esteemed jury, thank you very much. It's indeed an honor and a privilege and quite humbling to be here on stage to accept this on behalf of Team Tata Communications. Well, we've been, I guess transformation is probably an overused word in this room, and but I'm going to, at the risk of stating it, probably repeat it, once again, because from being a very sluggish, low to mid, single digit kind of a growth with weak financial KPIs, 4-5 years ago, to turn around the company, and finance being at the center of this transformation and propelling to the best ever, recorded in history, any financial KPI for that matter, that we've achieved in the last, few quarters, to going on to completing 3 acquisitions, and aspiring to do a lot more. I say only one thought that I want to leave with all of you. Average companies get disrupted by the consumer, by the market, and by competition. Great companies disrupt themselves. So I would leave that one thought, with you, that if you really want to move that journey from good to great, and a lot of you sitting here are already in that greatness journey and want to preserve your place in greatness, try and keep disrupting yourself. And this is what we do, because that's what makes me get up in the morning and get back to work, because once you have disrupted yourself and stuck your neck out and told the market what you're going to do and don't know how to get there, is why you get up in the morning and get back to pursue that dream and accomplish it. And I'm thankful on behalf of my team, who has been relentlessly, pursuing these goals. We've been trying to beat, every benchmark, launched the first ever sustainability linked loan framework, first ever in the industry. So we're trying to beat almost every other benchmark in functional excellence as much as we can, while also supporting the business ambition and the business strategy. The last thought that I have is, as I was driving from the airport, here, and I was reading one of the research article published by one of the large global strategy consulting company, and I'll not name them here. And they talked about as to how world-class CFOs talk about their finance strategy aligned with business strategy. And I feel sorry at point that should not be world-class CFOs. I don't think we as CFOs, as Dr. Sitharaman also mentioned, Dr. Batra mentioned, we can't be hiding in the corner of just driving compliance. I think we have I would say, the good fortune of being the co-pilot, and therefore really driving the business along with the CEO and other members of the management committee. So therefore, this is not just world-class CFOs doing. I think every CFO in every company, whether it's small, medium, or large, need to actually embrace the business strategy and bring that alive in the functional strategy as we delight our customers and drive value for our shareholders. With that thought, thank you very much again for this honor, and it's indeed a pleasure to be here.
Thank you so much, sir. There's another award that we have to give away. This is an organization category. This is a remarkable transformation, and it's gold. Please. This one for him, and we have Ashish Agarwal, the M&A head, to receive the award on behalf of the group CFO. That's Amit Agarwal. For Raymond, everybody, please. Congratulations. Thank you so much. And with that, we come to an end of the 7th edition of this award ceremony. May I please request all the winners to join us on the stage with your trophies for a group picture. Please. Also, the team at BW Business World, if you can make sure that no winners outside. अगर है तो आप प्लीज इनको बुला लीजिए. All the winners, please. with your trophies. आइए. Okay, we'll first do the PAPs. We'll do individual cameras. आप पूरे paparazzi को संतुष्ट कर लें. Then we'll do the main frame. Okay, the center camera, please. Everybody. Wait, one more picture. One more picture. Thank you so much, Dr. Batra. Anybody can take that. Also, thank you so much, Talis, for doing the honors. Nan, thank you. Congratulations to all of you. Please join us for dinner. Thank you. Thank you so much.